stocks that we've highlighted for you this morning. It looks like from the broader market, Shyam Metallic could be the stock of the morning on back of a pretty aggressive brokerage upgrade in Zomato and Paytm, of course, are the big two newsmakers in early trade. Markets were expected to see a flat start in early minutes of trade, but guess what's happened? We've taken out 24,800 in pre-open trade, and it very clearly seems to be consolidating with a very, very clear positive bias. That's the Nifty for you, a very healthy start. In fact, we've outperformed most of our Asian peers in early minutes of trade. 60 point higher on the Nifty 50, 0.2% gain is what we have on both the Nifty and the Sensex. Bank Nifty has been underperforming in yesterday's day of trade, but this morning there's outperformance on Bank Nifty. So a little bit of catch-up that's taking place on the banking names is what we are picking up on. Well, across the broader market universe, the action will be far more exciting. You've got so many stocks that you could be tracking, so stock-specific trade really will be the biggest story. And as we expected, mid-cap and the small-cap index seeing outperformance once again in trade. Yesterday, remember, you had those indexes gaining nearly 1% with big spurts of buying coming in towards the last hour of trade. So a very healthy close when the Nifty actually ends the day at the day's high, and we've picked up from that in this morning's trading session. A quick check on how the breadth is doing and what the Nifty 50 stocks are doing. Grasim is your top mover. Tech is back in action. So Infosys, BPCL are trading higher. On the sell side, you've got about 10 stocks that are trading lower. So off the Nifty 50, 40 counters moving higher, 10 counters on the sell side. Well, you've got auto that looks good. You've got IT that's holding well together. Cement is holding okay. Tata Consumer gaining for the second straight day after, of course, the overhang of the rights issues behind them. On the sell side, you've got profit taking as expected on pharma names after yesterday's very sharp rally. Remember, the pharma index made a record high and stocks like DVs did really well. This morning, what you're seeing is a little bit of profit being taken off the table. But Tamanna, the action is in the broader markets. This is slightly boring.
No, absolutely. Action is this morning completely in the broader markets, Meena, and you're seeing that. Let's pull up what the mid-cap and small-cap indices are doing. First up, 108 points up, nearly 0.5% up on the mid-cap, 150. Let's just look at the small-cap index as well. They're also about 0.5% up. Some key stocks, we have to talk about Paytm and Zomato. Let's see how they have fared in the opening. The morning has been all about Zomato and Paytm. Zomato has bought Paytm's going out business. It was an expected move. It was also expected it would be a better deal for Paytm than Zomato, the stock price reflecting it to some extent. Remember, Zomato has also already seen a run up after its announcement that it was buying this business. So maybe that's why it's priced in as well. For Paytm, that 2,000 crore cash infusion is definitely a breath of life that company needed. That stock 5% up. Kalyan Jewellers is the other one to look at. The promoter is actually buying a stake of about 2.36%. There was a block deal this morning as well. That stock about 5% up, 5.5% up. Interglobe is the other one we've been talking about. The business class project or the product has been launched. A couple of positive brokerage notes on it. Stock about 3% up. BEML, we talked about in our setup this morning. They partnered with the Indian Navy. They're going to develop some products in Malaysia as well. The stock is 2% up. And RVNL was the other one, if you can quickly pull up. That also has a good set of order books coming in. RVNL about 1.5% up. Shyam Metallics. Is Shyam Metallics the stock of the morning? UBS has initiated a buy with quite a strong upside. Yeah, 8.5% up on Shyam Metallics this morning. So definitely outpaced Zomato as candidate for stock in the morning, stock of the day or stock of the morning. Shyam Metallics, they're completely shining, Samina, in opening trade on the back of that UBS note.
Yes, you've got some excitement in the broader market. So Shyam Metallics is topping the list. Kalyan Jewellers, 5.5% higher as the promoter looks to buy the additional 2.5% stake from the outgoing investor. So the stock looks good in early minutes of trade. Deepak Nitrate also is showing up as we see it as one of your top gainers. Now, of course, the stock is one you want to track and keep on your radar. I believe there was some news flow on it, so we'll come back to that once we have some more clarity. The stock is up 4%. You've got Devyani International, Interglobe Aviation that Tamanna mentioned, Mankind Pharma, Rajesh Exports among the other gainers. On the sell side, it's got Pharma that is taking a bit of a break after yesterday's strong rally. PNB Housing housing finance is seeing some weakness after the big move yesterday. A quick check on how Zentech is doing should give us perspective into what the market is making of this fundraising plans, and it's a 5% circuit on a 4.5% circuit. So market's very happy, and that supply that will be coming in will be getting picked up pretty swiftly, and that's what we've seen in the last couple of weeks now, where good companies are being able to raise funds at a good price, and that's what's helping them grow. Well, a quick check, Zomato has eased off quite a bit actually. It's only trading with a gain of 0.7%. Markets digesting it or trying to pick a side and determine whether this is a good deal or a bad deal for Zomato. But for now, it looks like profits are being taken off the table in Zomato. On Paytm, if we can bring that one up, because this was, I think, a unanimous call that it's a win-win for the counter, and of course brings in some stability to its balance sheet. The stock is up 2.5%. Very quickly, Shrikant, opening thoughts. The start has been much better than expected. Do you feel like this could be building on to today's gains, and by the time we get into the weekend, who knows, another leg closer to 25,000?
Yeah, I think, see, in fact, it is good that the markets opened at an average levels. I was actually expecting market to open somewhere close to 24,900 or 950, where the market is having a good amount of resistance. But now, after opening around these levels, I think it will give one more opportunity for intraday traders to create any long positions. I think close to this 24,800 or 750, again, we should look for taking some long positions, because broadly the trend is on the upward side, and Bank Nifty is something which is going to support the market in next 1 or 2 days of time. That's the overall view based on its technical formation. So at these levels and a few points more on the downside will be an opportunity for traders to create long positions.
Okay, so that's the view coming in on the Bank Nifty. But if you look at how markets are behaving this morning, more of the action on the broader end of the markets, and there's little doubt about that. Some of the spaces that are working, and I just want to look at the specialty chemicals, fertilizers, Deepak Nitrate, FACT. These are some of the counters that are buzzing. Anything over here that you would now create positions in, Shrikant? Let me come to you on the charts first.
Yeah, I think, see, from the chemical basket, we like PI Industries, which is around 4,400 levels, and the entire pattern is quite bullish. And if we compare that with other stocks from this space, then it is relatively doing much better. Recently, the stock has made a higher bottom somewhere close to 4250, 4260 levels, and from here the stock can move to the levels of at least 4,800 to 4,900. So again, it's a good risk-reward ratio for creating long positions at current levels. We also like SRF, but the stock which should be on the watch list is always PCBL, Phillips Carbon. There also the momentum is very strong. Currently it is around 443, 444, but whenever there is a correction in the market, we see buying interest for this particular stock. So in case if the stock corrects back to the levels of 430, 435, then there we should look for taking long bets. I think finally the stock is heading for the levels of maybe 500 sort of levels.
All right. Thank you so much, Shrikant and Neerav, for joining us this morning and setting up, the trade and the top picks really this morning. It's all about Sham Metallics, of course, Zomato, Paytm, more than Zomato in the early part of the morning, at least after that deal. But let's get a broader view. Let's zoom out a bit and get a broader view. We're joined by Nitin Bhasin, Head Institutional Equities at Ambit. And he's joining to talk about their 11th annual Singapore conference called Ambit India Access. It focuses on the opportunities that we're seeing in India right now. So Nitin, great to have you on. Very good morning to you, and glad to speak to you here on NDTV Profit. Let's begin by talking a bit about the conference, and why don't you set the stage and the context for us on what would be the key driver of the conversations you'll be having?
For the last 11 years, we've been bringing these companies to Singapore. And many of times, people have been asking investable companies, good quality companies, and scalable companies. At a time in India when everybody is excited about investing in India, and we always have been saying that India has expensive companies in the mid-cap and the small-cap space, investors still are very keen to meet companies in this market cap cohort. So the discussion points would be around which are the good quality companies, which are scalable, run by management teams, and one can disregard the valuations in the near term if one was to take a longer term view. It's not only across one theme, but across themes. So that would be the backdrop of conversations with the investors in this conference.
Just to elaborate on that, because this very clearly seems more like company-specific and top-down approach, or bottom-up approach in that sense. What are the parameters that you or Ambit has identified to determine the future leaders of tomorrow, which could be across themes and sectors? So what are those factors that are prime for you when you look at a company and say, look, this could be the future leader?
Good question. I think this has been the thing we've been writing for the last few years as a team, that companies, which India is full of companies listed, and the last 2 or 3 years, we've seen closer to about 200, 300 companies getting listed in the mid-cap and the small-cap space. Yet, scalability is not for everybody out there. So what are we looking for? We are looking for managements which are designing the business, which are designing the teams, designing the products and the processes to scale up, not only in the present product, service line, etc., but how they can create new markets, how they are actually building talent pool for that. So we look at how they're thinking about capital allocation, how they're thinking about team building, how are they building out their competitive advantages, which sometimes can be fleeting, but to see through that over the next 2 or 3 years. Give an example, like electronic manufacturing services companies. There's so many of them which are coming up in India, but we think there are only a few which are doing it in the right manner and scalable. Irrespective of valuations, I think there are only a few which will scale up. Similar lines on real estate companies, similar lines on healthcare companies. So we are looking at a few things which I mentioned earlier: team, competitive advantages, at the same point in time, going out and building optionalities to get into new markets.
Nitin, just to get a sense of the kind of companies, all right, we've talked about the fact that you're picking companies that you see as the future of the India story. So give us a few examples. Which are the kind of companies that you have found exciting that are going to be part of this conference, and what are the kind of conversations you see panning out?
Companies like Ambit, a company which is one of the leaders in the electronic manufacturing services, how they are transitioning themselves just from simply being a room air conditioner assembly company in the past, now getting into the entire electronics value chain, or even for the mobility value chain through their own subsidiaries. So that's the sort of a company. Perhaps a second company in the real estate space, like a Birla Estates, which is part of the Sensory Textiles and Industries in Mumbai, how they are building the land bank, perhaps going out of Mumbai to the other regions, asking them how are they identifying which markets to enter into, how to place their product in terms of pricing in the markets where they are new entrants. Or even another example of a company would be something like Poonawalla FinCorp, where we have seen a very good quality promoter family has recently brought in a very good amount of talent pool from a leading bank in India, and they're building the business model for scalability of 5 to 10 times from here onwards. And to have questions with them around how do they want to think about new segments to enter into, how are they thinking about building the collections, how are they building the team. So questions around that. So these are the 3 or 4 companies which we have at the conference, amongst other companies like Shriram Finance, or an unlisted company like Kisht or Vastu. They are participating at the conference amongst 12.5 companies participating.
Oh. Okay, so an interesting mix there, some BFSI kind of presence, a little bit of innovative presence. I'm just wondering, Nitin, are you as bullish on this whole premiumization trend, where companies that are focusing on discretionary spending, but premium discretionary spending are getting a lot of love from investors right now? Do you see this as a sustainable trend in the Indian markets and some of the companies that are on this track?
So we also have Senco Gold, part of the conference over here, which shows you clearly that how in the eastern part of the country or the other parts of the country, also people are transitioning themselves from buying local jewelry to branded jewelry. For the last 1 year or so, we've been highlighting this trend, that the premiumization trend, whether it is cars, whether it is asset management, whether it is wealth, whether it is travel, because another company that we have under coverage is over here is Lemon Tree. So we're quite positive on this entire premiumization trend in India, and it's actually sort of percolating down in multiple sectors, whether it is jewelry, whether it is watches, whether it is cars, whether it is travel, or even for that matter, healthcare slash, I would say, wealth management also.
The thing that stood out for me is that this is interest from investors worldwide. And some of the stocks that you mentioned have had a pretty strong run. I mean, a KEI Industries is up 90% in the last 1 year. A Lemon Tree has had a phenomenal growth run rate too. KEI Industries, of course, also recently had a very strong outlook coming in from UBS. Are your investors talking about how expensive India is? Because very often when we are sitting here, a lot of the FIs talk about how India looks expensive as compared to its peers. Companies have stretched valuations. Is that the general feeling you get as well when you talk to these global investors?
Perhaps, for the last 1 year, we've been also writing this for the investors that small cap and the mid caps in India are perhaps one of the most expensive market cap cohorts. But it doesn't take away the point that there are still companies in this cohort which have exceptional competitive advantages in their industry. So investors are worried about India being an expensive. But as I said in the beginning, our collection of companies, good quality companies, where perhaps the growth road map may be closer to about 5 or 7 or 10 years very clearly, investors are ready to see through such sort of a near-term valuations. They may have perhaps toned down their return expectations from a 20% in excess to closer like 14, 15% holding horizon for the next 5, 6 years. But questions remain like this. But they also know some of the Indian companies are going to maintain this high teen growth for a long period of time. So accepting those sort of stories for a valuation, and we cannot take away the point that India is a country where companies are reinvesting for growth, and some of these companies are reinvesting materially ahead of many of their global peers or even Indian peers.
I'm not sure if you track it or you have a view or you want to talk about it, but since it's the topic of conversation this morning, Nitin, wanted to know if you have any take on the Zomato Paytm deal, because in line with what we were talking about, discretionary spends or companies investing in clear growth strategies, does this deal tick all those boxes?
We haven't written on it, but my preliminary view on this would be it's a difficult business in which Zomato has allocated its capital. It's a business which has been under built out by Paytm for the last nearly a decade or so, and we know that the revenue scale hasn't been that satisfactory. So perhaps it's not that easy business, and Zomato has been trying for the last 5 or 6 years for different business segments apart from its leading business of food delivery. So perhaps this is another bet by them. We'll see how it pans out. But till now, it has been a difficult ride for the incumbent who's selling goods.
We've seen that with the success that Book My Show hasn't been met with just yet. But, well, markets do have a mind of their own, and that's the reality of the story. But thank you, Nitin. Good luck. We'll catch you over the course of the next few days as you take the investors through, of course, the next big leaders coming from India. Great getting some perspective from you as you kickstart that conference. We'll take a break. We'll come back. We'll talk to 2 very exciting managements on the other side. So keep it with us.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy.
Let's talk about VA Tech Wabag. They have secured a repeat order of 415 crores. It's a company engaged in the business of water treatment, design, supply, installation and management of drinking water, wastewater, industrial water treatment and desalination. So interesting space. Skanda Prasad Sitaraman, the CFO of the company, is joining us now on the show to talk about this repeat order. It's an operate and maintenance order, I believe, Mr. Sitaraman. So let's begin with the details of this 415 crore order and why you feel that it is going to be an important pivot for the growth plans you have going ahead.
Good morning, Tamanna. Thank you for the opportunity today and very good morning to your viewers. We have a very clear laid out strategy that we want to increase the share of our operation and maintenance business of our overall revenues. We are today at about 15-16%. We have set a medium-term target of getting it to 20%, and this order is pivotal that way in furthering this revenue stream growing. What is also more important is this is an order that we have been already executing for the past about 10, 11 years. We built the plant. The plant was commissioned in 2013, and this was the first DBO model desalination plant for domestic water supply in all of India. And we have been maintaining it for the past 11 odd years. Now we have secured an order for 7 more years. That makes it an overall about 18-year life cycle. And this is also a demonstration that long-term O&Ms can be successfully maintained, and this is also a success story for desalination both for Chennai and for Wabag.
So, let me just come to the financials before we get to the bigger picture of desalination and where you think you're going forward. If I'm looking at your Q1 numbers, a pretty decent quarter, margins at 13%, bump up over there from 11.9%. You're seeing those margins maintain, and even for a repeat order like this one, where you've been with that client for a while and then they have now renewed that order, what are the kind of margins you see and what is your margin maintenance guidance for the year?
We have given a medium-term guidance. We don't do it year over year because it's a practically lumpy business. 70-80% of the business comes from EPC, but we have given a band of 13 to 15% within which we would like to maintain the EBITDAs going forward. From the last year, we have also seen revenue growth now starting with the robust order book that we have, and this is a O&M order. This is not an EPC order, and while you see the margins are blended at about 13%, the O&M margins are generally much better. We don't give a sectoral margin guidance or a project-wise margin guidance,
But I can tell you this is a very profitable order and it is much better than 13%.
Okay, just give us an idea of your new projects and what are going to be your revenue drivers. You have new projects in Chennai, in Bangladesh. Since you have work in Bangladesh right now, also give us a sense, Mr. Sitaraman, of has there been any impact due to the political turmoil that we've seen?
Let me take the Bangladesh question first. This is a World Bank and AIIB funded order. So payment securities are very clean over here. So multilateral funded orders is what we go for. So we don't see any typical risk over here. We are waiting and watching. It is too early. We have demobilized our resources while the local resources continue to chug along over there. It's the engineering and procurement phase is what the project is at, which we will continue to do from the head office. The local site works will obviously be on a wait and watch mode, but we see that being multilaterally backed, being essential services sector, this should move forward, and we'll see in the next couple of weeks. We hope that things will be much better. From a Chennai order perspective, it's going very well. The engineering is largely complete. We are in advanced stages on the engineering front. Procurement again is on full swing. We will start our supplies by end of Q4 next year. Will be a peak in terms of procurement and supplies, and also marine activities will be at full swing in the next year. Civil activities are going at very good pace. There is a lot of mobilization of resources because huge amount of concreting has to be done with the size of the project. It's a 400 MLD project. And all things are on track, on time, on quality, and on budget.
Just to get a sense of the kind of order book you're looking at. Of course, your breakup is 60% rest of the world and 40% India. Do you see that continuing? Do you see more municipal orders bumping up from various states? Just give us a sense of where you see the order book growing.
From a strategy perspective, we will not go for state orders. We have repeatedly stated that we will be on orders only where there is a multilateral funding, a federal government scheme funding, or a letter of credit, sovereign guarantee, or a G2G funding. So we want to be very secure on the payment front, and we have been very successful on this. More than 98% of our orders in EPC are on this front. From an order book perspective, today, we see that the existing order book is good, and we are also seeing the order pipeline to be very strong, especially in the Middle East and Africa region. India, last 9-12 months has been a little slower because of the general election phase. Now that that is passed, H2 should see some better action from an India perspective. But the last 12 months, having known that this is going to be a general election phase, we moved our resources overseas. They put in bids of over $1 billion, and we are already seeing the outcomes coming through one by one. Early on in the year, we had one order from Rastanura. It's about a $33 million order. We are now seeing the Chennai order coming through, and we have also stated in our earnings call, which was earlier the last week, that we are preferentially placed. We are a preferred bidder in orders of over 6,000 crores, and largely these are international in nature. Desalination, wastewater treatment. So we see that the international breakup will continue to grow, and Middle East and Africa will be the growth engine, while India will remain the core market. At an overall level, we will stay within the emerging economies, India, Middle East, Africa, Southeast Asia, and CIS countries. We have completely defocused from our European business. You would have already seen that we have divested the third European subsidiary. So we are practically 0% exposure on the Western Europe, while we will continue to see that the Eastern Europe, CIS countries still need a lot of water infrastructure, and that is part of our strategy where we are putting in business development efforts. But at this point in time, India, Middle East and Africa, plus Southeast Asia is our core market.
Thank you very much for joining us today on the show. It was indeed a pleasure to get a better understanding of what's happening at Tech Wabag. Good luck with business going ahead. Another company that has, of course, turned the corner significantly in the last 5 years is Fortis Healthcare. And the man at the realm of it all is Dr. Raghuvanshi, MD and CEO, who now joins us to talk about what business looks like and what the outlook is. Dr. Raghuvanshi, congratulations. You've successfully turned the corner in literally just 5 years, where you've changed the face, the name of Fortis Healthcare from a loss-making entity struggling with identity crisis to now a profitable one that you're managing. Up until now, of course, everything was looking well until I realized that 2 weeks ago, in a very recent development, after trying very hard in the last few years, Ageless is back on the books of Fortis Healthcare. Your private equity investors are looking to check out. I know you are looking to list this part of your business, but haven't managed to do so. What does this do now? Have you gone back to the drawing room? Because up until now, the focus was to improve and increase the revenue contribution from hospitals. But now with Ageless back on the front for Fortis, what happens?
Thank you. Thank you for having me, and thank you for your kind words. The organization has some innate strength in it, and that is what has resulted in the recovery which we have seen in the last 5 years. Now, as far as when we come to Ageless, it's our contractual obligation to provide an exit to the 3 PEs, which is about 31% of Ageless. Fortis does own a significant amount of control over Ageless by owning 54%. So now we have to commit fulfill our commitment to buy back this. They have put the put option on us. We could not list it, and there were several reasons for it, mainly commercial. We felt that because of the brand change, we had to do a lot of marketing initiatives which were sort of lacking, and that resulted in suboptimal performance of the company for last one year or so. July last year was when we changed the branding. So we are in the process of completing this transaction. Of course, it is subject to the shareholder approval and other statutory approvals. Post that, we would want to consolidate this business. We believe that there is a lot of opportunity here, and there is a lot of work to be done in order to get the performance at the level of the industry peers. And we believe that the kind of presence, geographical presence Ageless has across the country, we can definitely create huge value for the shareholders over there. And that is what we are doing. At the same time, as you said, that the hospitals are our focus area, and we continue to expand on that front. Last year, for example, I will tell you that we spent about 890 crores on the hospital side in capex for upgradation and additional capex for adding beds, etc. And we will continue almost in the same quantum for next 3 years or so. So that funds are tied up with internal accruals. We will be able to achieve that growth in the beds. So we are not going to be affecting our hospital segment growth because of this acquisition of the remaining equity, which we are planning to do.
Dr. Raghuvanshi, thank you for simplifying that for me. But I mean, the pool of money is limited, and I believe you're going to have to shell out close to 1,500 crores to honor that put option from your private equity investors. First question: how do you plan to fund this stake buy or buyback that you're doing for Ageless? And second, while I said the pool of money is limited, does that mean that with this additional fundraise, there may be a little bit of a delay on the expansion in hospitals? I'm not saying that it won't happen, but I would imagine that would get pushed back a little bit, right? And also, how do you plan to fund this 1,500 crores?
Yes, absolutely. As you would see our balance sheet, we have a very healthy balance sheet. Our EBITDA to debt ratio is only 0.39, net debt of only about 308 crores. So we have a huge ability to leverage, and we would definitely be doing this through a debt instrument, the acquisition of this HLS equity, and that will not impact the other expansion which we have planned. As you might be aware that we had planned about 2,000 beds of brownfield expansion. So that is on stream. Most of the constructions are going on. And in next 3 years, we would see continuously about this year, we would see about 700 additional beds. But in the following years, we will see about 400 and then followed by a slightly higher number the following year. So that all is on track, and that will be mainly taken care of through internal accruals. Because of this, we have confidence because this is brownfield acquisition, brownfield expansion. So this would be capacity will be absorbed rather quickly and will yield kind of immediate returns and not like a greenfield facility. So we are pretty confident that the cash flows are robust enough to support the expansion of the hospital as well. Of course, if there is a large acquisition opportunity available on the hospital side, we will not shy from that because at that point of time, we could think of some kind of a fundraise.
Right. So, in terms of now next steps, right, in this business, what can we expect from you? When can this deal be closed out with Ageless? A. B, I know that diagnostics is a tough business. We can't take that away. I know there is conversation that you would be looking at rebranding once this comes into your foray. It gives you a little more power to sort of move things around, you know, re-strategize. Tell me what the plans are and how do you see it and how much do you see it contribute to your revenue? Not immediately, but over the next 2 to 3 years, because you've got to make good this like you have made good Fortis in the last 5 years.
Yes. So essentially, you know, there are several operational things which we need to do compared to our peers. You know, our those spread is higher, but at the same time, our lab to the collection point ratio is slightly not very sort of you know the way we would like it to be. So a lot of rationalization on the operation side will be done. At the same time, we will have a lot of focus on specialized testing, especially genomics, etc. We have already got a division which is doing excellent work in that area, and we want to expand on the specialized testing. So we are not going to position ourselves as a run-of-the-mill kind of a diagnostic provider, but a specialized diagnostic provider which is addressing the needs of the clinical fraternity more than the wellness. Of course, wellness will always remain a significant part of the business, but essentially the focus would all be on specialized testing. At the same time, as far as the percentage of revenue for the overall consolidated revenue is concerned, we expect it to go to about 25% of the total revenue over the next 1 or 2 years.
That makes sense, rather than, you know, run-of-the-mill blood tests, etc. Dr. Raghuvanshi, good morning. This is Tamanna here, and good to speak with you after quite some time. Let me come just to your hospital business for a minute, because, you know, bulk of the revenues are also there. I think margins were a little squeezed in Q1 because of new hospitals. Give us the outlook here, your per bed revenues, as well as where you see this boost coming from.
Yes. So as far as hospitals are concerned, in the Q1, typically there is a seasonality and the revenues are usually low in the first quarter. So that's why if you compare the fourth quarter with the first quarter, there would be there was only a growth of about 4% in terms of revenue. But if you compare to the last year, it was about 14% growth in revenue during this quarter, year on year. So we expect that trend to continue continue. Our occupancy in the first quarter was about 67%. We expect that to go up to 70% in the running quarter. And second quarter typically would be always better than the first quarter. That is our expectation. And since the occupancy numbers have gone up, we expect that this momentum will continue through the year as well.
In terms of some of the turmoil we've been seeing in Bangladesh, etc., have you seen any impact at all? I think a fair number of patients are also coming in from in and around India. What is the picture there?
Absolutely. The international business in India is largely from Bangladesh and, of course, the Africa and Middle East as well. So the Bangladesh business is certainly affected. But overall, in the larger scheme of things, only 8% of our revenue comes from international patients. And that is kind of a mix of all the CIS countries, Africa and other parts of the world. So it has not been affected in a major way, but we are definitely seeing some degree of stress on the Bangladesh side of business. But I don't expect that to last very long. It is already sort of recovering. The communication transport is already resumed, and we don't expect that this will be a long-term thing. However, when we talk about international business, though in absolute terms it has grown, but in relative terms, our India business has grown more. And the percentage of international business has not really changed. It has remained about 8-9% over the years. So we expect that this going forward also it is going to be like that.
All right. Thank you so much, Dr. Raghuvanshi, for speaking with us. That's CEO and MD of Fortis Health, talking about the outlook and the current quarter, quarter 2, expected to be better than quarter 1, which is traditionally a little weaker for the hospital business. With that, it's a wrap on India Market Open. Quick check on what's happening in the markets before we go in to that break. Completely tepid. Markets have come off the highs of the day, at least on the Nifty. Let's look at the pairing of 197 and Zomato. 197 going strong, Zomato not quite so much. Remember, it was known that they were buying this going out business of Paytm, probably priced in, not that the stock's crashing or anything, but has given up most of its gains of the morning. We'll take a very short break, but on the other side is Talking Point. We'll be hearing from Anirudh Sarkar, CIO and Portfolio Manager at Quest Investment Advisors. Stay tuned.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce solutions space.
When people are losing jobs, the company still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, you know. E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year.
Welcome back. You're watching Talking Point, and over the next half an hour, we'll try and build some perspective on the broader markets, the excitement that some people argue exists, while others believe this market looks rather expensive. Earnings season is behind us. The key triggers that will drive us for the near term will remain global. Anirudh Sarkar, CIO and Portfolio Manager at Quest Investment Advisors, now joins in. Anirudh, good morning. Thank you very much for joining in. We live in very interesting times. At the start of this month, there were concerns about a global recession, a Japanese carry trade unwind. All of that was done within 24 hours. Then, of course, we constantly argue about how valuations in Indian markets look expensive. PMS's funds are sitting on significant levels of cash, is what I've been told. But the markets have a mind of their own. There seems to be no breaks and no pauses. What are your thoughts?
Yeah, hi, good morning. So basically, I think one thing, it works in the market always. When everyone expects something, it's not going to happen. And practically, as you rightly mentioned, in the last, if I see in the last 4 or 5 months, almost everybody has been waiting for a big correction in the market. There have been times wherein, there were events in the market, both on the domestic side, on the international side, and, there were expectations that markets will fall. But again, as you rightly mentioned, the corrections have been extremely the short-lived. One thing I would want to mention in this is that, and this is something I've been telling investors also, that don't wait for a big correction in the market, because if I look from a 4 or 5 year horizon, I think all the building blocks are in the right place when it comes to the whole India opportunity. And that is where I would say any money which is waiting on the edge or on the, I would say the sidelines, both domestic money and I would say on the retail side and on the mutual fund side, that is entering the market on every dips. Valuations, they look expensive from a headline number, but if I look at individual companies, definitely there's a lot of opportunity. It has definitely become very difficult to make, I would say, easy money in the market. Breadth of the market has gone down. But having said that, I think that is where, the job of portfolio managers has become all the more important, because you can't buy anything and make money in the market in this type of market. You need to be very selective where the earnings are coming from and which sectors to avoid and which sectors to be in, and also at what price you are wanting to buy those opportunities.
Let's start with that then, Anirudh. Are you fully invested in this market? Because as a PMS fund manager, you do have the option of sitting on cash, and you also have the ability to sit on significant cash if you have to before you allocate to the markets. What is the portfolio stand? How much cash in the portfolio are fully invested?
I normally, on an average, 4-5% is the average cash typically I keep at all times, and I continue to maintain that. I'm not very high on cash at these levels, so I'm maintaining my average 4-5% cash, which I normally do at all times. Having said that, wherever I'm seeing a sharp run up in the portfolio companies where valuations are kind of, gone beyond my wildest expectations, there I'm definitely bringing down the exposure. I'm not getting out completely, because many of these companies where the valuations have become rich, interestingly, that is where the highest earnings growth is also coming from. So it's a kind of, you can say the confusion that multiple wise looks expensive, but then when you look at the earnings, that is where the numbers are coming from. So some amount of the weight trimming I'm doing, but not sitting on a high cash.
So where is your biases, Anirudh, currently at? Because a lot of the stuff that you own, and I want to talk about specifics like a Trent and a Zomato, which keep rewarding investors. And this morning, of course, we have news on Zomato as well. Talk about the outperformers and the underperformers, because I believe you're still holding on to a few stocks that haven't delivered on the market performance.
See, with regard to, if I just begin the discussion from the broad sectoral exposure, and that is where I would say the big alpha creation has happened. If I see in the last 1 year, the big alpha creation has happened from being overweight on the urban consumption story. And both the names which you took, Tata, Trent, Zomato, they have been a part of your urban consumption story. And that is, I would say, where the big numbers have come from. I have been bullish on urban consumption, and within urban consumption, if I break it down into the sectors within that, one is the consumer discretionary, which includes the names which I mentioned. Then the other part is hotels, which has again done exceptionally well. We continue to see a lot of demand on the hotel side. The last 1 quarter was weak because of elections and all, but then hotels continue to do exceptionally well. The third sector where it has again given us good returns is the auto ang space. So auto ancillary continues, auto and auto ancillary, that again is a good space where I would say a lot of alpha creation has happened. And the fourth part is the real estate and ancillaries. So these 4 sectors are broadly within your urban consumption, and that is where the big alpha has come from. The second major broad allocation where I would say has done really well for our portfolios and for our investors is into the whole industrials and the capex. Now, when I say industrials and capex, it includes your sectors like capital goods, engineering companies, power. I've been very bullish on power space, and I think that's one big sector investors, even at this point, should be betting on, because there's a lot of power transformation which is happening in the country. We have not seen this type of a power capex in the country for a long time. So within industrials, you have capital goods, engineering companies, power, and when I say power, it's the whole value chain of power, not just the power producers, but your entire the supply chain, transmission, distribution, wires, cables, transformers, and all of them, power EPC players. And also we have some exposure into the cement companies, because if you're bullish on infra and the real estate, it's a indirect beneficiary of that.
Anirudh, you said that you've taken profits off the table on stocks that run exceptionally well. Now, the first stock from your list that comes to my mind is Trent. It's expensive, the valuations look stretched, but the performance has been phenomenal. Will you continue to hold on to Trent, or are you taking some money off the table on Trent?
I'm with you on that, because I think Trent has beaten all our wildest expectations. In fact, when we got into the company at roughly around 1400 odd levels, that was our first initial entry. We had never thought we'll look at this type of a return in such a short span of time. But I think weight management is very, very important. And when I'm saying I'm booking some profits, it's basically the weight management, because anything which goes beyond 8, 9, 10% in the portfolio, typically I try to bring it down. And with the type of return a company like Tata Trent has given, I think if I had not booked anything, definitely the weight in the portfolio would have gone to the mid-teens. Weight management is something I do because valuation check is also something which we need to keep an eye on for the whole portfolio. And barring that, it still continues to be among my top 3. And with the type of growth which it has shown in the business, which is the Zodio, it's simply kind of unbeatable by any standards. The next growth which we are expecting, and also the management for the last couple of weeks have been talking about, is the Star Bazaar. And that is again going to be a next big growth driver for the company. So I think it will continue to beat the wildest expectations for the investors.
Another sector that your portfolio seems to have an exposure to is private banks. Nearly 11% of your portfolio is 10.5% is to private banks. Then the top holding is ICICI Bank and HDFC Bank. Do you feel like these are stocks that are attractive even at these levels from the next 6 to 12 months perspective? Or you think there will be better opportunities to buy them?
So private banks in general have been very underweight. Like if I look for the last 4 years broadly, I've been very underweight on the private banks. And within that, ICICI has been my top holding, and that has definitely given us, exceptional returns. HDFC is something which I bought in the last 1 year. I have not held HDFC for a long time. It's only in the last 1 year when I entered into HDFC, and that was primarily because of the valuation. I think, the valuations at where these private banks are trading today, I think downside looks limited. Obviously, you will not see a multiple expansion from here on because I see some pain in the banking sector with regard to the NIMS contraction. So you will see the NIM contracting and business growth not meeting the past expectations, keeping the price to book at where it is today. So you see more of a earnings-led price appreciation and not a multiple expansion in the private banks. So I think we have to look at the private banks more bullishly, maybe just 1 or 2 the quarters down the line, where I think you will see the NIMS pressure also declining.
Constructive
in fact, just to just to add on that, I'm more bullish on the non-banks, and when I say non-banks, it's the other the non-bank financials like your asset management companies, wealth management, insurance, housing finance. That is where my other allocations are.
What about a Nuvama, an Angel One, a BSC, a CAMS? Because that is where all the household savings, I believe, are headed to. Do you not see value in those counters?
Yeah, we have a couple of these names which you mentioned in our evaluation list, but as of now we don't have any of these names. Yes, on the AMC side, I have the Nippon AMC, which is there in my portfolio, and that has again done exceptionally well, being the best. I would say that they have been growing the fastest, and also their portfolios have been doing well. And we know with regard to the AMC business, it's all about if your funds do well, that attracts more and more money. So I think Nippon AMC has done well, beaten its peers, and that is a good allocation in our portfolio. On the wealth management, we have one wealth company, we have one insurance company, and we had housing finance also, but we booked profit because they had moved up exceptionally fast, and valuations had again become rich over there.
Right. Stay with us. Nirudh will come back to you in a minute. I think the big story this morning is Zomato and Paytm, and you have both those counters on your portfolio, but I'll come to you in a minute once we just highlight the news. Remember, Zomato has been the talk of the town from the get-go this morning. The company has bought the ticketing business of Paytm and made that announcement. The big question we're trying to understand is, has Zomato overpaid for this? Sajid is standing by with more on that. Sajid, what is the thinking behind this? Because since this news came into the market on 17 June, Zomato has seen a one-way journey from 170 to all the way to 270, 275. Finally, the deal has been sealed. Brokerages are constructive on the counter, but I believe you think that they might have paid a bit too much to pick up Paytm's ticketing business.
Yes, the news was out in the market, or the talks were out in the market, but also the fact that there has been a shift in the Zomato business lines as we speak, because Blinkit was showing EBITDA positive. They had made Zomato food delivery was making profit, and that was one of the reasons why the stock has been running up. But this acquisition of 2,050 odd crores seems to be on a higher side, given the fact that what Zomato is going to get. It's going to get a revenue of nearly 229 crores, EBITDA which is around 28-29 crores, which gives a 10% EBITDA margin there. But the bigger question is that at the end of the day, Zomato is planning to scale up its entire ticketing and going out business, and it's buying the customers in this deal. The total transacting customers in Paytm today is around 10 million customers as per the disclosures made by both the companies, and which basically means that you're paying around 2,000 rupees a customer to acquire each of the customers, and you don't know whether at the end of 12 months, when the transition happens from the Paytm app to your app or the district app, which will house the going out segment, how many of them will be unique and how many of them will actually get transitioned to district app. That's one of the biggest challenge which will be there for that, and for that you are paying 7 times the revenue in terms of your in terms of valuation, and roughly 70 times EBITDA which you are paying. Now you can easily argue that from a gross order value perspective, it's nearly 1 time that cash you are paying out to Paytm. By the way, for Paytm, it's a very good thing because they are getting 4x or 5x, nearly 5x returns on the investment that they made in the ticketing business. But for Zomato shareholders, you're paying 2,000 odd crores for a business which you could have invested organically. You have already invested in it, and you could have scaled it up. The very fact that this business is a little tough to scale up is that the biggest player in this market, which is Book My Show, has a revenue of nearly 800 odd crores. It has a EBITDA margin of 13%, and for the last 15 years, Book My Show has been in this market. It has, though it's a profitable company, it is it is in one way not been able to scale up to that kind of revenues as Zomato is projecting itself to be, because they are saying that by FY26 or 27, from 2,000 gross order value, they will go to 10,000 crores of gross order value, which looks a far stretched at this point in time, and because of that, it seems that this entire transaction is little overvalued and negative for Zomato, because you are using your hard cash on an investment which you could organically grown, but you're using the inorganic way and paying much more.
Well, the stocks are, I guess, responding to that. Zomato is trading muted while Paytm trades high. Thank you, Sajid, for that. Anirudh, why don't you share your views on it? You own Zomato and it's been a key contributor in your portfolio. Do you think they've paid too much to pick up the ticketing and entertainment business of Paytm, or do you feel like this is a strategic move that will eventually play its course?
See, I would say that if I look at the management's history, I think they have an exceptional track record with regard to execution. And this whole business, of whether you talk about ordering food or the quick commerce or the ticketing business, it's very difficult to execute. And execution is a big differentiator there. For Zomato, I think definitely not getting into the valuation at what they bought Paytm and whether it's the right valuation. I would say that we need to give them some time to see how this exactly syncs on their platform. One thing which I would say is that Zomato is one app which most of us open almost every day, whether you're ordering on Blinkit or you're ordering food. That is one app we open every day. And if they are able to integrate this whole ticketing business, the whole concept of booking tickets, booking shows and all that on that, the moment you're opening your app for ordering food or ordering Blinkit, if something shows in front of you, there's a very high chance that instead of going to a Book My Show to book those tickets, you might actually use Zomato's inbuilt app for booking those events and those shows. So we'll have to give them some time to figure out how they're actually able to integrate and whether it actually adds a good kind of a business model in the long run.
Right. Anirudh, stay with us. We'll take a quick break. For now, of course, that super app doesn't seem like it's going to be a reality, because the fact is that Blinkit still is a separate app from Zomato, and in district will be the third one to add to the foray. We'll take a break. We'll come back. We'll continue a conversation with Anirudh Sarkar of Quest Investment Advisors. So stay tuned.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that, we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals, but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
if you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and...
Welcome back. You're watching Talking Point. We're with Anirudh Sarkar, CIO and Portfolio Manager at Quest Investment Advisors. Anirudh, another stock that had caught everyone's attention on the street in the last couple of weeks has been Ola Electric. It looked expensive before it went into IPO, and the stock has doubled in less than 10 trading days. What is your view on Ola Electric? Do you have this counter in your portfolio? And maybe you don't. And if you don't, would you look to buy it at the right price?
Yeah, obviously, I don't have it in my portfolio, but obviously, when I look at the price, definitely, being on the outside of it seems, we missed the buzz. But I think, it's very difficult to justify valuations at times. And, if you're not able to justify valuations to yourself, then, I think some ideas you have to miss out, because I think the margin of safety is very important. And just because a particular concept is doing well and the stock is moving up, that would not be a good reason for me to enter into the business. Obviously, it's being run exceptionally well, and they are kind of doing very well on the whole EV on the two-wheelers, but difficult to justify, the valuations at this point of time.
Any of the new listings, IPOs that you're keeping an eye out on, Anirudh? Because there's this whole debate, right, you and me both discussed about valuation. There might be a little more value in the new entrants or the new debuts on the exchanges before they hit the market. Anything that you've spotted that you like? I mean, Saraswati Sari Depot was on those. You had Orient Tech, InterArc. Anything that you're eyeing or you've gone and subscribed to?
So normally on the PMS, we don't, apply in the IPOs, because PMS, you can't apply into IPOs, but we also manage the AI funds. And from that, in the past, we have done a couple of them. We have participated in some of the IPOs. But yes, as of now, in the last, I would say, 6 to 9 months, we have not participated in any of the new listing which has happened. There are some good companies which are in the pipeline for IPO. Some of them are in the housing finance. A couple of them are into other engineering and capital good companies. So we are keeping an eye on them. And I think valuation-wise, they look much, much better. So for me, valuation is a very, very big factor before I get into any of the new companies also which are coming. So I would say that we are more confident on some of the good companies which are in the pipeline for the IPOs in the days to come ahead.
Ones would those be, Anirudh? And I do understand from the AIF portfolio, but what is it that you're constructive on? Anything that you're closely watching?
On the IPO side?
Yes, yes.
So I think one big name which will be very interesting is Bajaj Housing Finance, because excellent management, and definitely housing finance is one area where I'm very confident, I'm very bullish on. And this whole affordable housing, along with, I would say, the penetration, I would say the market reach which Bajaj Housing Finance would have, with it has on the ground, is something is very interesting to see. And it'll again boil down to at what valuations it comes. We have all the numbers floating in the market, whether it's going to come at this or that multiple. But I think that is one name I'm keeping an eye on when the IPO happens, and it should be an interesting listing.
It should definitely be an interesting listing. Very quick word now from between now, or rather the markets have, and you'd agree with me, borrowed returns from the future, from the way we've had, or the run we've seen in the last 1 year. Do you feel that between now and maybe the end of this calendar year, it could be a lot more lukewarm, consolidated kind of phase? Or do you feel like more new record highs are very possible? And also, where do you think the leadership potentially could come from in the next 6 months for the markets?
Yeah, I think in the next 1 year, investors should be aware that you should not expect more than mid-teens kind of a annualized return for the next 1 year. If you get a mid-teens, I think you should be more than happy. Anything in the high single digits to the mid-teens is what index can give you in the next 1 year. And that is, I would say, a very good expectation. Having said that, there are no new sectors which I'm looking at. The sectors which I mentioned, both urban and semi-urban consumption, industrials and capex, these will be the two major areas where I think a lot of money can be made. Valuation, one needs to be very aware of at what prices you're buying. One thing which I'm noticing in the market is the breadth of the market has gone down big time. Say around 6-8 months back, almost 62% of the small caps were outperforming the small cap index. That number has gone down to almost like 25 to 30% now. So breadth of the market has gone down. So I think one needs to be very, very careful where you're entering. Headline wise, I don't see any reason why we can't make the fresh highs in the short term also, because I think all the right ingredients are in place.
So, very lastly, do you feel like this impending correction that we've talked about, and we started this conversation with that, is likely? And you did say that these corrections that you tell your clients are now very shallow in nature. Do you think a 5 to 10% or a closer to 10% correction over the course of the next 6 months is even a possibility at this stage?
I would say a 5% correction is very, very possible. A 10% correction for the headline index looks very, very difficult without any external event. External event, we don't know what it will be because that's definitely always a black swan. But I would say looking for a 10% headline index Nifty correction or Sensex correction without any external events, very, very unlikely. So 4-5% correction is a very kind of, it should be there always. At least the weak hands, they keep moving out, and that's the way the market becomes much better in the long run. But expecting a very big correction in the market, I think investors should not be waiting for a very big correction.
Right. Well, thank you very much, Anirudh. It's a pleasure to have you on the show and talk to you and understand the strategy of Quest Investment Advisors and get broader perspective on the markets. Like Anirudh said, these days it's not big corrections that are possible. You're going to get shallow dips, which usually are getting bought into as most of the local money is pouring right in. With that, we're completely out of time on Talking Point. Thanks for watching, but there's a lot more programming on the other side. The FNO show is up next, so keep it with us.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, you know. E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you look at
benchmarks continue their uptrend after Fed minutes strengthened rate cut expectations in September. Nifty breaches 24,800 while the Sensex crosses 81,000. Most sectors trade higher, led by gains in consumer durables and FMCG. Meanwhile, realty and pharma come out as only laggards. Paytm rose to its highest level in 6 months after Zomato buys its entertainment ticketing business for 2,050-odd crores. And shares of Shyam Metallics surge after UBS turns bullish on the company. The brokerage forecasts robust profit growth with revised target indicating a 58% upside. Hello and welcome. This is Agam Vakil. You're watching the F&O show, and in this show we take you through all that is happening in the futures and options space in Indian equity markets. Indian equity markets for now are largely trending in the green. Of course, marginal gains, but gains all the same, and that's a big positive considering we are once again trying to edge towards the life highs for the Nifty at least. And the Nifty currently is at 24,800. And well, we have traversed quite a bit over the past few days. And there's a little bit more left before we can make that new life high at the mark just about 25,000. As far as the Sensex is concerned, it's largely the same. The Bank Nifty specifically is up around 0.4%. So we're getting a little bit of support from the Bank Nifty off late, which also once again tries to edge towards the mark of 51,000. 50,900 to be precise, exactly where it is right now, not too far away from there. And the volatility index continues to remain below the mark of 13.5, 13.2 to be precise right now. There hasn't been a big change, at least in today's geometry, and it is just that at that level. Now, in terms of the Nifty and what's really moving these indices, let's talk about the contributors here. And we do have HDFC Bank, ICICI Bank and Bharti Airtel along with Infi providing a bulk of the gains, and on the other hand you have Reliance Industries, M&M and NTPC balancing the equation, but the cut out there is not a very deep one, and a lot of these companies are also only trending marginally in the red at the moment. But what about the broader markets, the mid cap and the small cap indices? Those are also, well, mildly outperforming the Nifty 50. The mid-cap index is up around 150, it's up about 0.5%. It's the same for the small-cap index, also up by as much as 0.5%. And with that, let's take a look at the futures and options space. So when it comes to the Nifty 50 futures, August futures, remember that yesterday was a day where we saw mild unwinding. Today it is looking at a 1% uptick as far as its open interest is concerned, but it's not much to take home. And even in terms of the Bank Nifty, well, what we are seeing is that in general, there's been very, very little change in the open interest. A lot more traction happening in the options space, however, and today is, of course, the weekly options expiry. Since morning, we have been at around 24,800 and thereabout, and it does seem like while there is a lot of traction around calls, eventually, should the Nifty continue to move around 24,800, you'll start seeing a lot more, writing coming through around 24,700, 24,600 puts as well. Of course, on the higher end, there is a significant amount of open interest in calls around the 25,000 mark, which is a very low probability event at the moment, considering the kind of premiums that we've seen, because they've shrunk considerably. In fact, premiums are very, very small when it comes to that 25,000 call mark, that particular strike, even though the Nifty is, less than 1% from that mark. But again, that's something that we will continue to track down the line. On that note, let's get in our experts for today. We have Ajit Mishra of Religare Broking and Nilesh Jain of Centrum Broking, who's joining us on the show. Good morning to both of you. Thank you so much for joining in. Ajit, let's start with the Nifty itself. This is a little bit of a tease, isn't it? Once again, inching towards a life high, but we're still not there. There is also what looks like a considerable amount of resistance at the 25,000 mark, besides it being a psychological level. How would you trade the Nifty at the moment?
Yeah, good morning, Agam. So, yes, you have rightly mentioned that it's kind of like, we are inching towards the record highs, but the momentum is missing because banking is not participating the way it should be. And the good part is that we are still seeing the positive tone continuing. This time around, IT is leading from the front. Then we have FMCG majors. They are also contributing on the rotational basis. So as far as the tone is positive, Agam, we should continue with buy on dips. There is no doubt about that. But today, I feel that since it's a weekly expiry day and we are seeing significant, OI around 24,800, 850 zone on the call side. So I doubt that we are going to surpass this level for the intraday or sustain. But once we break that mark, we have this gap also open around 25,000. So that is going to be the area where Nifty is going to be approaching. So as, for the intraday trader, I feel that's going to be a muted session. And if somebody is looking for positional trade, then they can definitely go ahead even around the current levels with 24,700 being the stop. And, positionally 25,000, the target area for Nifty.
All right, so that's the view on the Nifty. Nilesh, morning to you as well. Welcome to the show. How are you assessing trade on the Nifty on an intraday basis as well as positionally?
Morning, Agam. Morning, everyone. So it's a buy on dip structure for the Nifty index, constantly forming highs and high-low formation from past 5 consecutive sessions now. Now, looking at the overall structure, Nifty has already taken off its 21 DMA. Technically, the momentum indicators and oscillator are very much in the buy mode. Even on derivative front, today we have a weekly expiry for the Nifty. The data shows that the put writers are very much active at 24,700 and call writers are active at 25,000. So from a very immediate point of view, 24,700 to 25,000, that's the 300-point trading range. If at all we see any dip towards 24,750, that can be used as a buying opportunity, keeping stop loss below 24,700. The immediate target for the Nifty comes around 25,000. And from within August series itself, we are expecting Nifty to take out that previous all-time high mark of 25,078 levels and inch towards 25,200. So these are the targets from short-term point of view. We are expecting the Nifty. And as we have rightly pointed out, the volatility index India weeks, where we have seen a constant decline after hitting a highs of 22. It is now very much in the comfort zone near about 13 levels. So that is again giving more confidence to the bulls.
All right. So that's the view on the Nifty 50. Now let's talk about the Bank Nifty as well. And what's really happening is that the truth is that the Nifty has seen no support, no significant support from banks, and it's not until the banks start showing up with their gains that we in fact can expect a huge surge in the price of the Nifty 50 index either, right? And at the moment, sure, it's largely a rainbound session. It does seem like the Bank Nifty is trying to move above the mark of 51,000. It has not done so. It has tested it, but that has not come through. Nilesh, I'll come back to you on the Bank Nifty. What's your assessment here?
Well, Agam, the Bank Nifty has been a laggard. And so far in the August series, the Bank Nifty has underperformed compared to the Nifty index. Looking at the recent formation, we are witnessing a time-wise correction in the Bank Nifty. But the good part is that it is forming a good base formation. And the immediate resistance for the Bank Nifty in the spot level is still placed at 51,000. But looking at the overall development, we expect Bank Nifty to take out that important resistance zone of 51,000 and inch towards 51,500 to 52,000. So Bank Nifty, we are very much bullish given the kind of a risk and reward which is favoring the bulls. So yes, it's a buy in the Bank Nifty. One can go long and buy 51,200 call, which is currently at 295 rupees. It can be bought in the range of 260 to 290. So that should be the buying range for 51,200 call option expiring on 20th of August. And stop loss can be placed somewhere around 170 rupees. The target for this particular option strike that comes around 450 to 550. So these are the important targets that can be seen in 51,200. As far as underlying is concerned, as mentioned in the August series itself, we are expecting Bank Nifty to inch towards 52,000 level. So it's a buy at current level and on declines.
All right, Ajit, the same question for you. Levels you're watching out for when it comes to the Bank Nifty.
So, Agam, this particular decline that we had in banking, while the Nifty was somehow still maintaining above the short-term averages, we've retraced 200 EMA in the banking index, and we've spent almost week to 10 days before seeing this rebound. But the important aspect is that since the private banking majors holds considerable weight, we still don't have any clear structure, especially in HDFC Bank. Axis Bank is trying to form a base, and we are seeing a similar story in ICICI as well. So, the move is going to be gradual from here on also. Good part is that we are again, making an attempt to cross 51,000 mark. So that can prompt immediate upside towards 51,300. We have a marginal gap on the daily chart, so it might fill that first, and then even 2,000 mark. So yes, the tone looks positive, but again, the kind of mixed indication that we have from the private banking majors, the momentum might be missing. So be strict with your stop losses. So once we cross 51,000 mark, definitely one can look for a fresh long with 50,800 being the stop, 51,300 first target, and then eventually 52,000.
Fair enough. Well, of course, 52,000 is something that a lot of bulls will eventually be happy with. But, it's going to be a bit before we, in fact, see the Bank Nifty go towards that mark. For now, of course, it does seem like it's inching towards 51,000. But with that, let's talk about all the stocks which are in focus. Maybe, Ajit, I can come back to you on stocks that you like this morning.
Yes, Agam. So, considering the market tone, I feel that maintaining stock-specific approach is yielding better results because not only in the index, but in the broader indices also, we are seeing noticeable participation. The mid-cap and small-cap, they have improved significantly in the recent past. So, two names. First, Indian Hotel is something that we like. The stock has, post the consolidation, has witnessed a fresh breakout today. The price action volume indicates that it's set for the next leg of the up move, and it might retest the record highs as well. So one can go long in Indian Hotel with the current levels, with 627 being the stop and 655 immediate target. Another stock that we like is IEX. So the stock post the major underperformance. We're seeing gradual base formation and accordingly uptick with every passing day. So again, we have formed a fresh buying pivot. We are set for the next leg of the up move, which can help the stock to inch toward 210. So one can go in IEX also with 194 being the stop.
Okay, so interesting picks out here. Indian Hotels and IEX from Ajit. Nilesh, what about you?
So Agam, I have two buy recommendation. Both the stocks are witnessing long build-up today. So first one is Tata Consumer. So given this kind of market where we are trading at all-time high, where the defensive are once again back into the action and focus. So Tata Consumer has given a good technical breakout on daily time frame. It looks like it is forming a cup and handle formation as well. And as mentioned, the derivative data also supportive. So we expect a follow-up move in Tata Consumer towards 1230. So that's the target, and 1186 should be the stop loss. Another stock that is from chemical space, that is UPL. UPL, we have seen a lot of underperformance in this particular counter, but now looking at the kind of base formation, it looks like it has bottomed out from a short-term point of view, and we might see a follow-up move towards 600 plus. So 602 should be the immediate target. 574 should be the stop loss for the UPL stock.
All right, well, there you have it. These are views from our experts. With that, I'm going to take a moment to thank both of them, Ajit and Nilesh, for joining us and taking us through their views on the markets, giving us a handful of, ideas to work around with. And with that, we move on and, dip into a conversation with the management of Amber Enterprises, a sector which has actually taken a lot of importance of late. Let's listen in to what the management has to say.
We've seen growth in the July month also. And I expect that this year we should expect the industry growth to be almost in the range of 30 to 35%. And it could also surprise us by 40% number if Q4 goes well. So we are very excited by this growth. Last year, as everybody is aware, that it was not a good season for air conditioning industry. But with a good jump this year, the CAGR of the industry has been maintained. So we expect that next 5 years from here, if we see the CAGR getting maintained, industry will be almost double the size what it is going to be this year.
That's some very big numbers that you're saying, doubling in a year. That's very strong numbers. But just wanted to break down the consumer division a bit, sir. You spoke about RACs, room air conditioning specifically, which has grown very well. There's also just the non-RAC component business, which is something that the company has been very bullish on, 39% growth in this particular quarter. Now, there are multiple, divisions or sectors within this as well, telecom, smart meters, among others. I just wanted to ask, which are the ones that are contributing specifically very strongly in this particular quarter, and which is the one that you're most positive on for FY25, because we've seen multiple growth levers across these verticals as well.
So if you've seen a transformative journey of our company, from room AC play, we added into the component of room AC, and then finally we created 3 divisions. One is the consumer durable division, which comprises of room AC and room AC components, and non-room AC components, like components for refrigerators, washing machines, telecom equipment, smart meters, etc. Then we have electronics division, where we have a PCB assembly businesses catering to various applications. And we have a PCB business, where board PCB business. And third division is the mobility business, where we do air conditioning for trains and metro cars and buses and etc. And all the 3 divisions contributed in Q1. But large contribution came from room AC and also electronics. So both the divisions are doing pretty well. And I expect the similar kind of growth to continue. And moving forward also, we are excited by all the 3 divisions, because all the 3 divisions are fairly diversified now. And we are no longer relying on one sector, which is room AC. As far as console level balance sheet is concerned, we have now multiple levers of growth, and all the levers of growth are functioning very well, and we are excited for the growth opportunities coming in each and every division.
Thanks so much for giving us the detail across divisions. And just, I wanted to ask about non-RAC component business. What would be, the current, because it's still a newer business, and what would be the current contribution in the consumer division specifically? Because we saw roughly 1900 odd crores for the consumer vertical, but within that also, as you mentioned, there are multiple layers. And which segment are you seeing the most positive demand from?
So non-room AC category of business in the consumer durable division is contributing around 25%. And in that 25%, largely it has been driven by telecom products and also smart meters products. We are also growing consumer durable other than air conditioner components, which are refrigerators and washing machine components. That's also growing. But the large 39% growth came from telecom and smart meters in this division.
Also, you have recently also formed a joint venture for the washing machine vertical as well. I just wanted to ask you on the strategy, because it's very new that I'm seeing that you're going to, you had non-AC, non-RAC components first, and then you've gone into manufacturing the actual product. So as to say, in this case, the washing machine. How are you seeing this particular segment, and would we also see you moving from refrigerating components to making refrigerator as well and some other spaces as well going forward?
So we were already supplying components for washing machine, like washing machine tub assemblies, the outer cases, as well as the electronic portion of electronic PCB boards for washing machines. And it is like a good forward integration for us to get into the full product category. We've opted to get into fully automatic and top load and front load both categories. If you will dissect the washing machine trajectory, the markets are moving a little towards the front load and top load rather than the semi-automatic. And that's why we picked up these two categories to start with.
Okay, well, that's the management of Amber Enterprises telling us everything about the plans ahead and the kind of categories that they are looking forward. Of course, in this case, they were also talking about washing machines specifically the front load and the top load. But with that, it's time for a break, and when we're back, we also get you all the action from the commodity space. Back in just a bit.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that, we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals, but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
Welcome back. This is the F&O show, and we are now talking about commodities with Biren Vakil from Paradigm Commodity Advisors. Well, Biren, good morning. Thank you so much for joining in. Biren, my obvious question, the first one will be around gold. We've at least seen, the broader markets see it zoom all the way to $2,550 an ounce. How are you looking at gold in Indian markets? What's the traction and what's the call here?
Yesterday, Fed minutes are fairly dovish, so I think September cut is almost redundant. Macro data from US points toward Goldilocks economy, so I think it's a good case for gold to attain much higher level. Technically speaking, there is a bullish rectangle breakout, and upside objective is somewhere around 2640. So I think there is still $100 move. In Indian terms, we may see 70 to 500, 73 for the 2-3 weeks. And for time being 2-3 days, I would prefer to go long around mild dips, somewhere around 71,400, target 72,200, and stop loss 70,900.
Okay. Birren, what about silver? Do you expect it to move in tandem with gold?
Yeah, silver is also seeing a decent recovery. Basically, Chinese metal market are showing some, we may call green shoot. I'm sensing some green shoot in Chinese economy. And all industrial metals like coal, agricultures, metals are showing a decent recovery. So I think we may see further relief rally, I would say, in silver. Around 87,000, 88,000 in Indian terms, and for COMEX it could be $29, $80, $30.
All right, let's move on and talk about base metals as well, Birren. I believe you have zinc on your radar this morning.
Yes, zinc still is seeing outperform, and I'm continuing to hold bullish view on zinc because market is in inversion. Means physical market is quite tight. Physical premium is also a little bit improving, a little bit tight. So I think here we may see 275 to 80 in the medium terms. For this view is positional, 1 to 2 week. So I prefer here September contract, next contract around 262. Target would be 272. And stop loss 257. Here time frame is around 1 to 2 weeks.
All right. Birren, do you track crude? By any chance, would you have a view here as well?
Fundamental side, it looks like a well-supplied market. Recently, some facilities are coming up in MENA region, Middle East, North Africa. So medium term, I'm a little bearish.
Okay, Birren, we leave it at that. Thank you so much for joining us and taking us through your views on these commodities that we have discussed. With that, it's also a wrap on the F&O show. Lots more lined up on the other side. Keep watching NDTV Profit.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative.
Welcome, you're watching the Small and Mid Cap Show. I'm Mahima Vajrajani and with me is Harsh Saita. Well, before we move on to the managements that we have on the show for today, let's take a quick check on what the markets are doing. Well, in terms of the benchmark indices, the Nifty 50 is hovering around that 24,800 levels, currently trading in a tight range of roughly 82 odd points and roughly 50 points away from its day's highs right now, trading at 0.2% higher. In terms of Sensex is also trading within a range of roughly 280 points, currently 170 points away from its day's highs, trading in line with the Nifty 50 around 0.2% higher. In terms of the broader markets are doing a tad bit better than the benchmark indices. The mid cap 150 is up around 0.8% and the small cap 250 is also trading within the same range as the mid cap 150, up around 0.7%. Let's also quickly pull up the contributors on the Nifty and see what's weighing up and weighing down the Nifty. Well, something like Bharti Airtel, ICICI Bank, Infosys, HDFC Bank and Grasim are the few counters that are weighing up the Nifty, and counters that are weighing down the Nifty include Tata Motors, NTPC, Dr. Reddy's, TCS. Let's also take a quick look at the breadth of the market and see what the advanced decline ratio looks like. The advanced decline ratio is roughly 3:1 skewed towards the buyers today, around 1400 odd advances versus 550 odd declines. Well, in terms of the sectors, Harsh, the Nifty Energy and the Nifty Pharma are the two sectors trading in red. However, the PSU Bank and Nifty FMCG is doing well in trade today.
Absolutely, but one thing I want to quickly highlight is the broader markets were doing well in trade yesterday as well. So on the back of that, you're seeing the Nifty mid and small cap indices do well in trade even today. So it's been a very, very resilient market, especially at the broader end of the spectrum. Where the benchmark itself is concerned, we've seen a tad bit of consolidation of sorts happening, at least on the benchmark this week. But SMID has been extremely resilient. They've continued, they've gone from strength to strength. That's one thing I want to quickly highlight. The other piece is even among sectors, let's pull those up, the sectoral chart if we can. And there you go, except for energy and PSUs. Again, extreme amounts of resilience across the board. No big movers, no big gainer, no big loser as such. But outside of that, it's a very, very strong and resilient market. And even the breadth of the market is very, very strong. 3:1 in favor of the advances, as Mahima pointed out. So that's currently the texture. Let's quickly move on. Our first management for the day, we have R. Vasudevan, who's the chairman at Vascon Engineers. First off, good morning, sir. Welcome. Quick check on what how Q1 has really panned out for you. Margins have shrunk a little bit, impacting your numbers somewhat, even though revenues have gone up. Just talk us through how the quarter has gone for you and how does it stack up with regard to your full year guidance?
Yeah. See, the quarter has been fairly good for us, though the financial result doesn't seem to send across that message. It's mainly because, we are a company today of both real estate and EPC. We had a third branch of GMP, which we sold off in the last quarter. So now predominantly we'll be focusing on real estate and EPC. And as you all know, real estate accounting comes in spurts, and this quarter we didn't have, and neither we do expect in the next 2 quarters much of real estate really to contribute. But fag end of the year, we expect good amount of contribution coming from real estate. So we will keep the trend. We, in spite of GMP getting out, which will actually cut a 300 crore bottom top line of ours from the overall top line, consolidated top line. But we still will be in the same numbers as what we did last year because of the real boost in EPC business and some amount of contribution coming from real estate. So that's how it looks right across. And the bottom lines also will, automatically bottom line increase because of this one-time sale of GMP plus the bottom line contribution coming in from real estate. Overall should give us a good bottom line as well.
Right. So, Mr. Vasudevan, right now, real estate is just 6 crores of your total revenue.
Absolutely
and
right,
as compared to FY24, FY23, real estate revenues were more. And this quarter, you've done roughly 7 crores, 6 to 7 crores.
Correct.
So, I want to understand that when you're saying that, real estate will bring in more revenues, can you help us quantify as to how much of a top line and bottom line addition it will make?
Yeah. See, real estate, as you know, for us in the past, if you track this in the past, we had gone very slow on real estate last 3-4 years, and we picked up it in the last year. Re-picked up business in real estate since from last year. So last year we had some contribution coming in at the fag end of the year, and this year also we'll expect some amount of contribution coming in at the fag end of this year, financial year as well. Going forward, the real estate, both top line and bottom line contributions from 25, 26, 26, 27 would be substantial in nature. And the real growth story of Vascon in RE will really pan out during those 2 years. So we still have a small contribution this year. And from next year onwards, we really will have a decent contribution. When I said this year we expect about 150 crores plus from real estate business, and next year we should expect it to double, close to double that type of figure as we go forward.
Understood. And Mr. Vasudevan, GMP was a chunky business for you. Of course, GMP going away, 25 to 30% of your top line, if I recall, goes away. How
Correct.
much of that gets replaced by real estate? You said 150 odd crore. So what should your overall top line in FY25 look like?
So see, our EPC growth story has also been a very good, we have an order book of more than 3,500 crores now. And this 3,500 crores, out of which each year, this year itself will do about 1,000 crores of EPC business alone. Forget about real estate contribution. So the EPC business is contributing substantially. We have a fair good amount of order book backlog, and in next 6 months or so, we expect to pick up another 1,500 crores of backlog. The mantra within the company we are saying is we should touch about the top line of 1,500 crores and 150 crores in 26.
Okay, so 1,500 crore in FY26, FY25, any thought at all where the number goes?
It should be around the same figure as without the GMP being there. It should
Understood.
be around the same number, yeah.
Understood. And Mr. Vasudevan, just want to try and also break this down. Real estate is a slightly chunky business in that sense.
Correct.
So,
Correct.
so how does, would you want to bring in stability there in terms of numbers, because we won't see that going into FY26 from you, given the chunky nature of the business. Would a demerger or any other possible situation be something that you may consider to try and deal with that chunkiness in terms of numbers?
See, actually, the question of being demerger will be based on certain other reasons rather than on the chunkiness of business. Chunkiness of business is the nature of business itself. But what happens, once we are set in the line of growth in real estate, then the chunkiness will be taken care of because of the cyclical contribution coming in together. Unless there are, as long as you have a fair amount of decently sized projects. Suddenly you have one very big project and another, then you have 2-3 smaller projects, then these chunkiness sorts of affect you. But as long as you have projects which are almost of similar volume, similar sales, similar price range, then the chunkiness is not that much affected. So we are not worried about the chunkiness of the business because we will have a wide spectrum of products coming across and in different locations. So we are not worried about the chunkiness, but otherwise we expect that the steadiness, though it won't be as steady as an EPC business, but the steadiness should be fairly better off than what it is today. Today it's almost like for us a restart up in real estate business. So that's why we don't get those contributions. But once every year we start getting contributions from some project or the other, we should not be worrying about it.
Right. Okay. And so considering that you're going big on real estate business, going forward, what will be the blended margins like, in terms of EPC plus real estate business? Currently, your margins did take a hit from 9% to that 8% mark.
Yeah. See, EPC is going to give us 14 to 15% EBITDA margins going forward. Real estate should give us around 25%. So net we expect that we should be doing about 20%, 22% going forward.
Okay. And in terms of your order book stands at roughly 3,400 odd crores. What will be the execution timelines be like? And in the current quarter, how much of an addition has taken place? Because your target for the year is roughly 1,500 odd crores.
So we have picked about 350 crores in the current quarter, 350 and one small 50 crore contribution, 400 crores in this current quarter. Then we expect this 1,500 crores to happen before the end of third to fourth quarter, before that period. So that 1,500 crores is not a challenge now. We had challenges in terms of bank guarantees and stuff like that. Those have all overcome with the liquidity coming in from likely to come in from the GMP sale. So we are not going to be constrained with those bank guarantee limits and stuff like that. So we are on path in getting those orders lined up.
Okay, and the 13% margin that you've guided for will happen in FY25 or that will be over FY26 and FY27?
FY26 and 27.
Okay, and in terms of the order book, the execution timelines for the current order book as well as the additions in the order book that has taken place?
See, roughly our experience have been that we carry out about one third of the order book size every year. So essentially you can say the order book length is 3 years, although the contract period are generally 2 years, but generally some amount of delays do happen in some of the projects. So average we end up doing about 35% of our order book. So that's how we are confident that this year that we will do more than 1,000 crores of our backlog of order book. Going forward, we will increase our order book size to take those 25% growth which we have, targeted at.
Okay, Mr. Vasudevan, with regard to capex and debt, what plans going forward?
Capex will be there to a certain extent as we grow because much of our capability of capex which we had with us is almost getting exhausted now, and so some amount of capex will have to be pumped in. And what was your second question? Sorry.
Debt, sir.
Debt. Debt we don't intend increasing much. It is going to be bank guarantees and performance guarantees which will require collaterals and stuff like that. So we'll require a certain amount of capital, but that will go more towards these bank guarantees and certain amount of performance guarantees rather than towards the working capital.
Got it. So no real increase in debt. Is that how one can look at it?
Yeah, I can look at it that way almost. Very minimal, temporary, short-term, funding may be required. Yeah.
Okay, and Mr. Vasudevan, in terms of your new orders, you said that you will be aiming for orders from government agencies. Right now, 82% of your order book is from the government. Going forward, this 82% will change, or how are the dynamics going to be like?
Yeah, we don't want it to be at 82%. We would want it to be around close to, bring it down first initially to 70%, and then maybe do to 65% of our order book from government side and balance from the private sector. We find that balance is always good for the stability and surety of the top line and the bottom line.
Okay. Okay, and the breakup in terms of your internal and external order book, what is that going to be like going forward?
So that will increase. So that itself will bring down the government order book itself. Because as our real estate growth happens, our internal order book from our own internal business is going to increase. So, but that will may contribute to about 10% from there. But much of it is going to be, by way of focus. Like recently, we picked up an order for IT company Cognizant in Chennai. So that was about 450 crores. So we're looking at orders like that to increase the balance towards private sector as well.
Right. So when it comes to EPC margins, you've guided for a roughly 12-13% kind of margin FY26 onwards. What gives you the confidence that that margin number can be clocked in EPC? Because currently your blended lies sub 10%. So what are the levers that gets you there?
See, as the volume increases, the performance efficiencies are going to increase. That's one of the lines by which it is. And even our order book sizes previously used to be 50 crores, 100 crores. Now our order book average sizes have also become 150 to 200 crores. So as a result, the efficiency increases, the utility of the capex items are better. So these are the points on which we are hopeful of increasing our margins.
And maybe you mentioned this, maybe I missed it. The blended margin, where would that number lie at FY26?
It should go to 15, 16.
Understood. Got it. Okay. Thank you so much, sir. It's been a pleasure speaking.
Thank you.
Right.
Thank you very much.
With that, time to slip into a very short break. On the other side, we'll have Pranav Bansal, MD CEO of Bansal Wire Industries, joining us to talk to us about their Q1 numbers as well as general business outlook, where the company is headed for FY25. Stay tuned.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Future. Now this is a company that has presence across various verticals, but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the company still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
Good morning and welcome back to the Smith Show. We're now taking stock of Bansal Wires after the stellar Q1 results as well as business outlook going forward. We're now joined by Mr. Pranav Bansal, the MD and CEO of Bansal Wires. Good morning, sir, and thank you so much for joining us today. Firstly, many congratulations on your listing. Just wanted to start with, about the company specifically. You are a steel wire manufacturer, but if you could just run us through what are the verticals that you currently operate in and the business per se as well.
Sure. So as far as Bansal Wire is concerned, we are today now the second largest steel wire company and the largest stainless steel wire company in India. We have three main verticals. First is high carbon wire, which is a product that is used majorly for automotive and infrastructure application. Second is low carbon wire, which is used for power and cables, agriculture application. And the third is stainless steel wire, which is used for various other industries, majorly for consumer durables. So today we have more than 3,000 SKUs that we make, and we are selling to almost 5,000 different customers across various different industries.
Got it. And Mr. Bansal, Harsh also joining in. What would your market share be like in this space?
So that's actually a very interesting thing. Being the second largest steel wire company in India, we still only have 6% market share. So we are a part of a very, very big industry in India itself.
Okay, and how quickly are you ramping up? So where were you maybe a couple of years back? Where do you expect to be 2-3 years from now? You've done your fundraise, you've set up a new facility. So just if you can give us just visibility on where it goes from here.
Sure. So even if you look at our history, not just for 1 or 2 years, even for 10 years, we as a company have grown at 20-25% every year. There is no year in which we've not outgrown our last year's number. And I would say we are focusing on doing the same for the next 5 years as well. As far as capacity goes, the main uptake that you would see is that till about last year, we had a capacity of close to 2.6 lakh tons, which by the end of this year will be about 6 lakh tons. By setting up the largest wire plant there is in India, in Dadri. So capacity-wise, you will see almost 2.5 times kind of number.
But before I come back to the capacity expansion, I just want to get some more color on the divisions. You mentioned that high carbon, mild steel, as well as stainless steel wires, the 3 divisions, and you gave us the applications as well. What's the current revenue, our segmentation from this? What is the highest revenue contributor among these 3 verticals? And if you could just give us some margins, is there some particular vertical such as stainless steel which has the highest margins or something on those? Some color on that as well.
So to understand our business, revenue will not be the right number. The right number would be quantities. At the end of the day, we are following the cost plus model, wherein whatever increase and decrease there is in our raw material gets passed on to our customer. Therefore, our margin per ton remains constant. So high carbon, I would say, accounts for about 75,000 tons a month, 75,000 tons a year. Similarly, stainless steel would be about the same level, as well as low carbon. So it is quite evenly split between high carbon and stainless steel. Low carbon is the third smallest vertical that we have.
Okay.
But right now, from the facility, we are focusing more on low carbon because of some consolidation that is also happening within the group. We're trying to get everything into Bansal Wire with Badlapur. Therefore, you will see a good increase in high carbon as well as low carbon wires going forward.
Okay, and you're focused on margin expansion, at least that's what your Q1 FY25 disclosure seems to suggest. You're currently at 7. What are the levers and what's the appetite like? Because you seem to suggest that there's a cost plus model involved. So just trying to get a grip of how exactly do you intend to expand margins? It's only capacity, efficiency, etc. playing through, or what?
So I would say there are two approaches here. The first thing is, of course, by setting up this kind of a facility, the Dadri facility, we will definitely have economies of scale on our side, much more than we've had till now. So that will definitely help us in margin expansion. Similarly, we are also focusing on high margin products within our portfolio. So today, out of 5,000 different products, all products have a different market and a different margin profile. We are focusing on the higher margin products. With that being said, we are also adding a fourth vertical, which is what we call a specialty wire vertical, in which the main products are products like steel cord, hose wire, IHT and OHT wires, which are in general relatively higher margin products as compared to the regular products that we make right now. So by adding up these verticals as well as expansion of our current base, we should be able to do a little better as compared when it comes to margin. But again, what is important here to understand is our margin is not only on a percentage basis, because we buy a commodity, which is steel, and steel comes with all its fluctuation. Therefore, my revenue is only a result of the raw material price that we have.
Understood.
So margin, it is better to understand in kg for us.
My last question, sir, to you. We've seen, very strong Q1 results. Revenue grew by roughly 49%, margins upwards of 100%. How much was volume growth in this versus value growth? And specifically on, the Dadri facility you mentioned, your current capacity is roughly 2.6 lakh tons. You're increasing it to 6 lakh tons, I think, over the next 12 to 18 months. But capacity utilization, what's the current utilization as well? And how are you seeing this, this very big jump in capacity? Where is the demand coming from?
So if you see, for the last 2 years, we've actually not been able to expand capacities as we have been in the past, majorly because of the delay in the Dadri project, which was supposed to start, in fact, last year, but it has started now. Therefore, right now, we see a good market within our current customers to ramp up this capacity. Therefore, we are very confident of utilizing the capacity also very soon. As far as volume goes, we have done about 20-30% increase already in the first quarter, and this is the increase that we will also look forward to in the next quarters also. So Dadri for us is a plant where we are increasing and ramping up capacities on a daily basis. Therefore, we are looking at a good volume growth every quarter from here on.
Okay, so strong volume growth led by the ramp up in the Dadri facility. Thank you so much, Mr. Bansal. It's been a pleasure speaking with you, breaking down the company, as well as wishing you all the very best for the rest of FY25. Okay, out of time on this edition of the Smid Show. From everyone who's put this show together, thanks so much for watching.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, And at that point, she wore one of our outfits on the Kapil Sharma show. After that, we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce.
Welcome to NDTV Profit. I am Mahima Vajrajani and with me is Harsh Saita. You are watching Ask Profit, a show where we get all your stock related queries answered from our fundamental and technical guests. You can send your queries on the number that is flashing on your screen or on any other social media platform of NDTV Profit. But before we move on to your queries, let's take a quick check on how the markets are doing at present. Well, in terms of the benchmark indices, the Nifty 50 is hovering within the range of the 24,800 mark, currently around 0.2% higher, trading within a tight range of roughly 80 points. Currently 50 points away from its day's highs. Let's also take a quick look on what Sensex is doing. Sensex is also trading in line with the Nifty 50, up around 0.2%. Trading within a range of roughly 280 odd points, 180 points away from its day's highs. Let's also take a quick look on the broader at what the broader markets are doing. The broader markets are performing a tad bit better than the benchmark indices. Nifty Mid Cap 150 is up around 0.7%. And the small cap 250 is up around 0.6%. Let's also pull up the Nifty contributors and see what counters are weighing up and weighing down the Nifty. Bharti Airtel, ICICI Bank, HDFC Bank, Grasim are some of the counters that are weighing up the Nifty. However, TCS, RIL, NTPC and Tata Motors are some of the counters that are weighing down the Nifty. Let's also quickly pull up what the breadth of the market looks like. The breadth of the market is skewed towards buyer and it has been a resilient day for the markets. The ratio is roughly 3:1, where around 1,500 odd advances versus 600 odd declines. Let's also quickly pull up what the sectors are doing in terms of which sectors are gaining and which sectors are losing in trade today. Well, Nifty Energy, Nifty Pharma and Nifty PSU are some of the counters that are in the red, but Nifty PSU Bank, Consumption, Media, FMCG are some of the counters that are in green. But the stock in focus today is IRDA, and we have Harsh joining in with more details.
Well, yes, Mahima. So IRDA, this one has had a fantastic run. From 32 rupees is where what the IPO price was on IRDA. This one currently sitting very, very pretty at 265. But there's been a bit of a correction. There's been a 5-7 odd% correction from in the last month or so. In fact, a little more when I'm looking or extrapolating this to maybe since the 15th of July, where likely the stock topped. And prior to that, for 1 month prior to that, the stock was up 70% from 15th of June to 15th of July. So very, very strong rally that the stock has seen, post which we've seen a bit of a cool off, 10% down over the last month or so. Now 2% down over the last month, sorry, I stand corrected, 10% up today on the back of a new fundraise that they are plotting and planning. Now in terms of just where this lies, right, and to try and kind of break this down, first off, guidance is that they're going to grow loans at 25%, at least for the foreseeable future. They're looking at roughly capital adequacy currently at 19.5%. 4,500 crore is the fundraise that's going to come in. Current book value is roughly 9,000 crore, 8,900 to be absolutely precise. And current market cap is sitting very, very pretty at 70,000 crore. Almost 8x book value is what it is currently sitting at. How they're going to be raising equity? Well, they've kept all routes open, whether it's FPO, QIP, rights issue, pref issue. All of them are on the table. They're going to decide on some of those. Now, just in terms of it does renewable energy lending and the kind of returns it has given is very, very stellar. Let me bring on board both our experts to talk about the stock in focus. We have Shahina Mukaddam, independent market expert, and we have Kush Bora, founder, kushbora.com. Thank you for joining us. And let me start with Shahina. Shahina, first off, good morning. Tell us your view with regard to this one, because it's been such a rank outperformer. It's given such solid returns. Can it continue to do so, or are we going to see a sideways movement, or do you expect that this looks slightly overvalued?
Yeah, actually, I do think it looks a bit overvalued. It looks expensive if you're looking at maybe the next couple of months, maybe two to 4 quarters, given the fact that you yourself have pointed out that the price to book is 8 times. So it is on the higher side for an NBFC. Another thing is that what was expected that, renewable energy lending would be given special concessions in the budget, which didn't come across. So actually, it remains in a consolidation phase in my view. But if you look at the very long term, it looks decent because as you pointed out, they're targeting 25% growth. They have achieved a 30% growth. So 25% definitely looks achievable. They've got a very strong, loan book on hand. So things are positive in terms of even the quality of balance sheet. NPAs, net NPAs are very low. But given the expensive valuations, I believe it will consolidate for some time.
Okay, let me go across to Kush. Kush, your views with regard to technicals. This one's, just gone from strength to strength here.
Well, hi Harsh, first up, hi Shaina. Very encouraging move, I must say. Despite your concerns and Shaina's concerns of overvaluation, I think, the stock has actually seen a fair bit of consolidation. It might look like, a sharp dip from those 300, 310 levels all the way down till, 230. But I think, the rise was much sharper. So, anything in that context actually looks like profit booking. Plus, if you see in the last 15 to 20 odd days, almost about a month, there was consolidation and the fall was actually decelerating and the volumes were thinning, suggesting that, there were the exhaustion, in terms of the sellers was clearly visible. Now, 235 is a very strong, level where the stocks made a base with the kind of move that it's made today. It's crossed the 20-day moving average as well. The volumes have come back. I think this is a very encouraging sign. It's had its share of, whatever limited time correction the stocks are used to in a market like this. It's also had, price correction. I think it's time to perhaps consider a long position on this. Positionally, 235 is your stop loss. On the upside, now you're looking at 295 and the recent highs of 310 as your target. So if someone wants to go into this one positionally, you should consider it. Keep a stop loss at 235.
Okay, the first query today is from Sumit, who's from Doha, Qatar. He's asking that he's holding Ashapuri Gold and Ornaments, 8,000 units at 9.7. He wants a 1-year view for this particular stock. At present, his loss is roughly 6.5K. Shaina, I'll come to you with this one. Your view on the stock.
Well, it's a very small cap stock, and there's not much to say in terms of fundamentals. But yes, it looks like it is likely to move up slightly from here. So if one is holding, one can continue to hold, but it's a very small cap stock.
Hey, let me stick with you. Talk to us about DCB Bank, because we have Srinivas. He holds around 200 shares of DCB Bank at 107 rupees a piece. Roughly 3,000 rupee is the amount of profit he's making. So talk to us about what you feel is the medium to long term outlook on DCB.
Well, DCB Bank is, it performs fairly okay. At the same time, I believe in the shorter term, given the fact that the first quarter numbers also were okay, but not, in terms of growth in line with what was expected. So I would believe that, better quality stock compared to DCB Bank would be a Federal Bank, though I have been personally holding a small quantity of DCB for a very long time, from very low levels. So I'm not saying it has not performed, but it has underperformed the overall market, and especially the private sector banks in the smaller private sector bank space. So I would say that instead of DCB Bank, better to go in for a Federal Bank.
The next question is from Kamal, who's from Bengaluru. He's asking whether this is the right time to buy Sona BLW. At present, roughly, the price is at 689.5. Kush, I'll come to you for this one, whether it's the right time to buy Sona BLW or not.
Sure. So depends on the horizon. If it's slightly medium term, then perhaps yes, you can consider, because the stock is in an uptrend for sure from a medium term perspective. Just that in the near term, the stock's seen a sharp round of profit booking and then is consolidating. Although since it's above the averages, we'll have to say that the bias is positive. But there's a very clear consolidation pattern, that is visible on this one. So my suggestion, if you're in this for anywhere from 3 to 6 months, then perhaps you could consider an entry. Your targets in that case will be 730 and 770, and the support comes in, at the 50-day moving average, close to about 665 level. So the risk-reward ratio is favorable. You just might have to be a little patient with this one.
Okay, Shaina, let me come back to you. Rajesh Maheshwari from Indore. He has a query with regard to PNB Housing Finance. Now, so many things happening within PNB Housing. There's been such a large rejig. He's bought around 150 shares at an average price of 751. Wants your outlook from a short to medium term perspective, because the way in which the stock has moved has been sharp, and he's sitting on some pretty profits on his investment.
I suggest, even though the stock has performed, you continue to hold at current levels. The valuations are extremely interesting, just about 1.5 times book. It's in a good, interesting space in terms of housing. And I think the overhang of the stock has also gone. So even for the shorter term, medium term, longer term, in my view, it's a hold.
Okay, and Kush, because there's so much interest in this one and the move has been so strong, I want your view as well. What should one do for a stock like this?
In a way, Harsh, I'm so glad you came to me, as well for this one, because my view is also extremely positive on this. The stocks had a fair bit of consolidation, and now it's given that breakout. I agree completely with Shaina that you should continue to hold on to this one. Since you're in a profit, you should perhaps put a trailing stop loss in place. But other than that, I think the stock is in a good stead. And in the financial services space, if you see, the banks aren't really performing as well just yet. But the housing finance space is seeing quite a bit of traction. This one being one of the leading names, I think will gain more traction. So I think we should continue to hold on positionally. I'm looking at a 920 as well, in the coming months.
Okay, we'll stick with the BFSI space. The next question is from Anish Tiwari. He's holding around 500 Yes Bank shares, and he bought it at 26 a piece. So right now his loss is roughly 750 rupees. And he's asking whether he should hold it or he should hold it for a longer time. He should hold it for a longer time, or he should just sell it off. Kush, I'll come to you with this query.
No, I want to really understand if this is more of an emotional trade, because, a lot of retail investors, at least, or even HNS for that matter, have been in Yes Bank with a lot of hope. I don't think you should continue holding on to this one. It's shown, bouts of spurts, but then they fizzled out equally fast. So I don't think, this is one stock that, that you should be in the banking space. There are a lot of other names, China's already mentioned Federal Bank. Let me add one more, Karur Vysya Bank. This is one that, has had a stellar run. If you see in the last year, even two, the trajectory is upwards. It's not really been affected by the kind of moves that the overall banking sector is seeing. So I think if you want to switch, you might want to consider this one. For me, Yes Bank is a sell, and a switch to a Karur Vysya Bank is, more advisable.
Okay, switch to Karur Vysya is what Kush is advising. Now, we'll switch focus, BFSI to power. We have Sulochana from Visakhapatnam. She holds 1,000 shares in NHPC at 98 rupees a piece. Now, this one has had a stellar run, right? And let me come to you on this one. Our fundamental analyst for Shahina, let me come to you on this one. Apologies for that. This one has had an outstanding run. You've seen this stock double over the last 12 months. Talk to us about where does this go from here? What should Sulochana do?
Well, I think, they're having some problems in Sikkim because of the deluge that happened over there recently. So, and it is not a cheap stock, in price to book, it's about 2.5 times. So I would suggest Sulochana, if you want to hold, you can continue to hold, but keep a stop loss. And otherwise, you can switch. There are a lot of other power stocks that are doing pretty well as of now. You can also switch to something like a Tata Power. You can switch to something like in renewable energy. You can switch to some of the power stocks over there.
Okay, thank you so much, Aina. Let's slip into a very short break. Keep sending in your queries, number flashing at the bottom of your screen. And we'll, of course, answer those. We'll start taking those on the other side of this very short break. Stay tuned.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals, but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say
Welcome back. You're watching Ask Profit here on NDTV Profit. Let's quickly continue taking queries. Vishaka has bought 60 shares of Bharti Airtel at 868 rupees a piece. Shahina, let me come to you. Should Vishaka sell at this point? She's sitting on a very pretty profit of nearly 40,000 rupees. sell half holding, sell full holding? Just give us your views.
No, I think she should keep the full holding. It's definitely a hold. In fact, you can keep buying in my view at any dips that you get. Even Bharti Hexaware looks good at current levels. They are adding consumers, they are adding subscribers. So definitely it's a hold.
Okay, the next question is from Arun Nair. He wants an outlook from Angel One. Shaina, I think I'll come to you again for this one.
I think Angel One has gone through the difficult phase that it had in the last couple of months, and having stabilized, I think it is looking good from here on. While there may be some small dip in profitability for a brief period, the growth may come off. I think the prospects are very strong. It's one of the best in the category, so one can continue to hold.
Okay, Kush, let me come to you on a technical view. SK Jakhar, he holds 100 shares of Tata Motors at 1126. Special situation. Plus the stock move, at least over the last year, had been very, very strong. Thereafter, there's been a period of consolidation. What should he do at this point?
Well, assuming that he can hold this for let's say a couple of months, he should continue to. After the sharp run up, the stock actually given way. Now it's consolidating. It's barely holding above its 20-day moving average, just about. But the volumes are thinning on the way down, which is encouraging. So there is a possibility that the stock might consolidate for some time before it begins that up move. In any case, on the downside, there's a strong support zone at 1050 levels. So if the stock does in fact break that, he should exit. If not, continue to hold. There's a possibility that he might see the stock revive. If not exit in profit, at least have a much lesser loss than he is sitting at currently.
Okay, and Kush, we have Jitendra Singh from Haryana. He holds 1,000 shares of Edelweiss Financial at 61 rupees a piece. Wants to know what he should do. He's sitting on, again, a very pretty profit of 35,000 plus.
Well, the suggestion for Jitendra here would be to keep a trailing stop loss at about 93 levels. The stock had a vertical rise. So, the kind of mild profit booking that we are seeing today is perhaps on expected lines. But, the stock's gone up on very strong volumes. I think, after this small round of profit booking is over, there's a possibility that the stock could continue this run up and move, even perhaps to 105 and 115 kind of zones. So continue holding, but just keep a trailing stop loss in place in case there's volatility and the stock sees a sharper round of profit booking. Then you might want to take some money home.
Okay, Kush, I'll stick with you for the next question. The next question is from Ishita. She's holding 101 shares of Prestige Estate Projects, and she bought it at 1843, and now it's at roughly 1734. She has approximate loss of roughly 11,000. So should she hold it or sell it?
Well, I'm actually very tempted to say hold, but it's actually broken below some of the key technical levels, right? So my suggestion is that if you want to give it another let's say couple of months, then you could hold it with a stop loss at 1690. So I'm just going to go with a hold because the stock is consolidating right now, and there's a possibility that it might bounce back. The reason I was skeptical is because there was a support zone at 1760, which the stock has just broken today and it's trading below that. But just to give some hope to the stock at least, and to the trader as well, 1690 is where you place your stop loss. If that is broken out, then perhaps the stock could go into a bit of a tizzy on the downside. Right now, what we are seeing is a consolidation with a negative bias. So hold 1690 is your stop loss. You might see some kind of revival in the next couple of months.
Shaina, let me come to you. We have Jai Krishnan from Kozhikode, who's wanting to know whether it's the right time to buy Interglobe Aviation. Now, this stock has been in focus since the morning. It's up nearly 3% as well. A slew of brokerage notes, very, very positive on this one. Your views?
Well, they did extremely well in the first quarter numbers that we saw. And with crude oil prices at around, just around hovering around $75, $77, I think it's a positive for them because their main cost comes from the main cost is fuel. At the same time, I would say keep a stop loss because airline stocks historically have not, given you great return over the long-term period compared to the rest of the market. So keep a stop loss and you can continue to hold.
Okay, the next question is from Srinivas. He's asking to advise whether to hold or sell IDFC First Bank. He's holding 250 shares at 92 a piece, and roughly his loss is 4,000 right now. Kush, I'll come to you on this one.
Not a big fan. The stock's not been a wealth creator, for a while now. It's just that right now, as we speak, for the last 3-4 sessions, the stock actually is in an uptrend. So my suggestion, just to reduce your loss, give it some chance and hold with a stop loss of 72. But then you might want to keep exiting at, slightly higher levels of, let's say, 80, 85. The stock might take a long time before it sees that 92 level. So my suggestion, ride the recent move that has begun, but keep exiting even if it is at a loss of a few percentage points.
We're taking the most interesting queries last. So we have Chandra, who's holding Zomato shares at 265 rupees a piece. Wants to know whether he should hold or sell. Shahina, I'm going to come to you first on this one, and thereafter I'm going to go to Kush as well, because this one is, of course, in the thick of things today. So both Zomato as well as Paytm, your quick views.
I would say hold on a Zomato and a exit on a Paytm. Zomato, because it has acquired, their some business from Paytm, 2,000 crore business. I think the potential for growth is high because they've got over 7 million of their users on which they can actually use to increase the business out there. And Paytm, I would say exit.
Okay, so Paytm exit. Let me come to you, Kush, on charts. Paytm has been such a strong performer. Last 3 months, 50% returns. Do you expect more outperformance to come from here in terms of how you're viewing it? And of course, Zomato, if you can give us your views.
Sure. But Harsh, if we talk about Paytm, then, I think about last 6 to 8 months, the stock is still 50% down. So, that's the kind of moves that, we've seen on the stock, and has been fairly volatile. If you're starting afresh, if you're taking a fresh view from here on, then yes, I will side by, your view, which is that the stock seen a stellar run. On the chart, it's above, all its, medium-term, long-term averages, which is suggesting at least that in the near term, the up move could continue. So if you're looking at, this from a near-term trade perspective, then yes, Paytm does become a buy. The risk-reward ratio is also fairly favorable with the kind of dip that we've seen and the recovery that is underway. So, on a positional basis, 525, 530 are the zones where you want to place your stop loss. On the upside, you could be looking at a 625 and a 675 also in the coming weeks, coming months' time. So the stock is on the recovery path, offers, a good risk-reward ratio. So with a tight stop loss at 530, you might want to consider, going long on Paytm. But if the stop loss is broken out, please exit. As far as Zomato goes, I think, here fundamentals, technicals do align. Right now, the stock is consolidating, but on the whole, any kind of dip that you get towards, let's say, the 240 mark, where there is a gap, should be taken as an opportunity to go ahead and accumulate some more.
Okay, one last query before we let you go. Chetan is holding around 100 shares of Narayana Hrudayalaya, and he bought it at 1270 a piece, and he needs your suggestion from a short-term perspective. Kush, your opinion, how does Narayana Hrudayalaya look on charts?
Continue to hold. There is a lot of traction in the entire healthcare space, hospitals included. The stock has seen a very good rebound in the last 2 days. So, he's now seeing his buying price. You don't want to buy and sell at your, buy price, right? So continue to hold. 1240, place a strict stop loss there. On the upside now, you're looking at a target of 1310, and once that is taken out, perhaps even a 1350 as well. So Narayana Hrudayalaya, hold, and as I said, keep a strict stop loss at 1240.
Okay, thank you so much, Kush, as well as Shahina, for joining us, breaking down some of those views and answering all of the questions that our viewers had. Viewers, apologies if we've not been able to take all of your questions. Please do write to us tomorrow. We'll try to take some of your queries tomorrow as well. But with that, completely out of time on this edition of the show, from Mahima, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
first few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express. And at that point, she wore one of our outfits on the Kapil Sharma show. After that, we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level, but also it's not a...
Welcome, this is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and have been the flavor of the season. But before that, we take a look at how markets are faring. It's been a fairly quiet day. It's the weekly options expiry for the Nifty, but that's not to say that we've had too much in terms of volatility, because it's largely been a very, very range-bound session today as well, hovering a little higher than 24,800. That's how things have fared as far as the Nifty 50 is concerned, and not unlike what we've seen yesterday as well. In terms of an absolute movement too, we aren't seeing the Nifty move, beyond about 150, 200 odd points. But the Bank Nifty, on the other hand, is outperforming the benchmark by just a tad bit. In fact, it is once again edging towards the mark of 51,000. If you notice, the contributors in terms of the Nifty 50, most of them are on account of, something like an HDFC Bank and ICICI Bank. Of course, right at the top of the list, you also have something like a Bharti Airtel. What's on the other side of the equation, what's really weighing down on the indices, and that is also marginally so, something like a TCS or a Tech Mahindra? Well, all in all, it's turning out to be a steady day of trade for the markets. In the broader markets, when it comes to the small cap and the mid cap indices, well, we have outperformance, continuing outperformance. In fact, the mid cap index is up around 0.7%, and the small cap index is up around 0.6%, a little less than that. Overall, it's a fairly steady day of trade when it comes to markets, and well, that's just something that we're going to continue to give you an update on. But from there on, let's take up all the companies that we want to address in today's day of trade. And in this show specifically, we're going to talk about IRDA. It's seen a massive surge coming through. Besides, it's up as much as 10% right now. Besides that, we have an update from Bajaj Auto. Positive news coming in. We're going to talk about that as well. We're talking about Kalyan Jewelers, where the promoter has bought additional stake in the company, and it's actually set the stock, in another zone, because it is currently trading, or rather, at least earlier in the session, it was trading at life highs. And Shah Metallics, we have a broking note on that one as well. And with that, to take us through his views on these stocks, we also have Avinash Gorakshakar, Director of Research at Profitmart Security, who is joining us on the show. Avinash, good morning. Thank you so much for joining in. Avinash, before I come to you, I'm going to introduce my first stock of the day, and that is going to be IRDA. We have Harsh, who's joining us to tell us more about what's behind this buzz. Harsh, is this a fundraise at the moment?
Yes, 4,500 crore fundraise.
Yeah.
They've kept a lot of options on the table, and that's something that you'll have to keep your eye out on. It could be an FPO, it could be a pref issue, it could be a rights issue as well as a possible QIP. So all options on the table for IRDA. Generally, when a lender raises money, it's of course for the purpose of growth.
Absolutely.
What's the growth guidance like? It's 25% is what the management has guided us for the foreseeable future. They've been growing also at that clip, so let's give them credit for that. Smaller book, renewable energy, it's something, it's like the flavor of at least post-COVID markets. So that's how it is. Just in terms of valuation, to set the context, currently book value is roughly 9,000 crore odd at the end of Q1 FY25. Another 4,500 crore added to that book value if at all that equity raise were to happen. So that's substantial. That's just how large it is. The capital adequacy currently at roughly 19.5% odd, and therefore that equity raise is important. And last off, just with regard to the market cap currently, just to flag that off, 70,000 crore in market cap. So at almost 8x currently, trading at 8 times price to book value, which seems in relative terms expensive.
Yeah, but I reckon that this valuation has been ascribed based on what we can expect from IRDA going forward.
So Agam, let's zoom back a little bit. IPO happened at 32 rupees a piece. Currently trading at 260 rupees a piece. Either the bankers have got it extremely wrong, or something dramatically has changed. So in relative terms, expensive is how I would put it.
Point taken, Harsh. Thank you so much for getting us that update as well as an insight. But for further insight, we also, of course, have Avinash with us. Avinash, welcome to the show. What is your view on IRDA at the moment? How are you looking at the latest update as well as future prospects in the long term?
Yeah, Agam, I think as Harsh pointed out, the stock is definitely trading at fair to expensive valuation. But I think if you look at the renewable energy space and the funding space, IRDA is one of the primary, or the main funding agencies, and there's been a huge surge in demand for solar and renewable energy projects. So I think over the next, say, 2 to 3 years, this company can grow exponentially, while valuations may appear a little bit stretched in the very near term. What is important is that they're gunning for at least 25-30% growth on a compounded basis over the next, say, 2 to 3 years. And I think looking at the kind of profitability track record, I think unless, you get the stock at slightly lower levels at, say, around, 250, 240 odd levels, that would be a good entry point for an investor who wants to actually, take on the journey for the next couple of years. So it's a good long-term bet. But yes, I think in the short term, the stock will remain volatile. And I think, unless we come to know exactly how the fundraise is going to be raising, if it is a pref offer or if it is a QIP, I think the markets would obviously like that better. But in case of a follow-on public offer, then we could see a little bit of selling pressure because this typically happens ahead of the follow-on public offer. So I think these things have to be sorted out. But fundamentally, the company appears to be well positioned over the next, say, 2 years.
Okay, well, that's the view coming in on IRDA. And from there on, we move on to an update from Bajaj Auto. I have my colleague Puneet joining us to tell us more about this one. Puneet, over to you.
Well, thanks for that. So, sources in the know have told NTV Profit that Bajaj Auto could have potentially received approval for 13 of their applications that they filed under the PLI scheme. Now, the company has apparently met the 50% minimum domestic value addition norms for a scooter or a vehicle to qualify under the PLI scheme, as well as the benefits for the same. Now, these could potentially be for EV scooters, which they are currently in the market under the Chetak brand, or the electric three-wheeler as well. Currently, the company sells, the Chetak EV in the market, as we all know, under 2 to 3 variants apparently. So now the existing PLI certificates that the company has is for all 5 of its electric wheelers in the 3-wheeler space, as well as for 2 of its electric scooters as well. Currently, in Q1, the company also recognized a 50 basis point positive margin impact under the PLI scheme for the auto PLI specifically. So this could be a very positive news coming in for Bajaj Auto. We are still awaiting more details from the company on this, but definitely a key positive for margin accretion going forward as well. Back to you.
Absolutely. Well, Puneet, thank you so much for getting us that update on Bajaj Auto. Potential PLIs, of course, we're awaiting official confirmation from the company. But Avinash, your view on, well, not just the update with respect to PLI, but even in general when it comes to Bajaj Auto going forward?
I think, Agam, Bajaj Auto has done remarkably well. If you look at the overall two-wheeler market, I think markets have taken off quite strongly. And I think Bajaj Auto has benefited from the revival in the two-wheeler market. And I think this trend is going to continue. This year, hopefully, with a good monsoon, I think the rural market demand is also going to pick up quite strongly. So that is definitely going to be a good tailwind for Bajaj Auto. As far as the PLI scheme is concerned, once it fructifies, we'll come to know what is the financial benefit the company could enjoy. But I think broadly, within the electric vehicle space, the two-wheeler and the three-wheeler space, Bajaj Auto is now making a conscious comeback into this category where growth is very strong. So I think, even at the current odd levels, if someone to take at least a 12 to 15 month view, this could be a good portfolio bet. It's a fairly large player, has a very strong balance sheet, very strong cash flows. And I think once the PLI benefit comes in, that could add into the earnings growth. So, my suggestion is definitely take a slightly medium-term view and definitely hold it in your portfolio. You should be able to get a decent risk reward from here.
Okay. Well, that's as far as Bajaj Auto is concerned, and decent risk-reward ratios, what Avinash has spoken about. But we move on to another broking note, and this one is UBS, and they speak about Shyam Metallics. In fact, they've initiated coverage on Shyam Metallics. They have a buy with a price target of about 1,200 rupees per share. Shyam Metallics is at around 800 rupees per share, which means that it still has a good 50% to go from current market levels based on that particular price target. Now, UBS is suggesting that this company has transformed, and there is a lot of value that has come through, in fact, through its value-added products that will offer better prospects for the company going in. It has also moved up the value chain. That is a suggestion, and that is likely to aid margins looking ahead. And the company has also planned about 10,000 crores worth of capex, which will be funded through internal accruals. A lot of these factors coming into play is the reason why they look at Shyam Metallics as one which could potentially offer substantial value from here on as well. Avinash, is this one under your radar? How are you tracking Shyam Metallics? Your opinion here?
I think, Agam, the note is clearly they have put out a very aggressive target price. But my sense is that even currently, if you look at the overall steel market, globally metal prices have not moved up. China has not been buying off late in a big way. My sense is that the real trigger for Shyam Metallics could come in once global metal prices start moving up. And I think we'll have to wait for maybe a couple of quarters before we get those indications. On a product basis, I think Shyam Metallics has been making a conscious effort to increase the value-added component, and that definitely should improve their margins. But if you see their margins about 2 years back, margins have actually come down. So I think, it's going to be a difficult task for them to improve margins going forward. But overall, I think in the domestic market, specifically in Eastern India, it's a very dominant player. It's got a large capacity to cater to industries and sectors in the Eastern India market. So I would prefer a hold as of now. I think the stock has moved up by almost 6-7% once the note has come out. So I would not be in a hurry to buy it immediately. I would prefer to wait for at least another 1 or 2 quarters. And once I get a reasonably good kind of traction on the numbers, that would obviously help me get a better kind of conviction on the stock. I think although valuations are cheap, but most of the steel companies, if you ask me, don't trade at very expensive multiples. So I think it's a hold. Fresh buying can be considered maybe on declines.
Okay, fair enough, Avinash. And perhaps the final stock on our list this afternoon is Kalyan Jewellers. Now, this one is also up and about, and we have promoters buying stake. We have Mahima here with us. Mahima, I know it's been a busy day for you, but let's talk about Kalyan Jewellers for a change.
Yeah, so Kalyan Jewellers did witness a block trade today.
Yeah.
And yesterday in their exchange filing, they did say that promoters will be buying around 2.36% of equity.
Sure.
Just to talk about the block deal, well, around 32.3 million shares were exchanged, and roughly 6% of total equities have exchanged hands.
Right.
And this is, and Kalyan Jeweller has around 5 block deals together makes this 6% equity.
Right.
Now, in terms of the promoter stake sale, Heidel is set to sell around 2.36% stake to Tikkur Sitaraman Iyer, and this will be roughly around 1,300 crores. And if we consider yesterday's closing price, the price is at a discount of roughly 3.7%. Now, in terms of current holding and holding post this stake sale, Heidel was holding approximately 9.17%. It will now hold around 6.8%, and promoter stake was roughly 60.59%, and it will now hold approximately 63%. So overall, this will be the promoters holding post the stake sale. And in terms of stock performance also, today the stock of course is buzzing in trade. However, in the past 1 month, it's been under pressure. It's been up around 3% only, but 6 months and 1 year performance has been good, up around 48% in the past 6 months, and 1 year it's been up around 144%.
It's interesting because in this case, it does seem like Kalyan Jewellers also enjoys a little bit of scarcity premium, because I'm actually looking at the shareholding right now. Sure, promoter stake will go up to all the way to about 63%. But besides that, until the June filing, we had FIIs who held 21%. DIIs held about another 12%, which means that out there in the open, we have less than 7% stock floating around. And that clearly perhaps also explains as to why Kalyan Jewellers remains a relatively expensive stock because of that scarcity premium. So that's the other factor that you need to keep in mind as well, of course. But Avinash, your view on Kalyan Jewellers in terms of prospects going forward, what's your assessment?
I think, Agam, most of the gold jewelry stocks post the budget have done well. In fact, custom duties on gold have come down, and that has been a big lever for a strong demand growth for the gold and jewelry segment, especially in the domestic market. So my sense is that today's action of the promoters buying stock obviously is a kind of a confidence measure. Markets are obviously quite happy about to know that the promoter has shown a strong confidence in the company. But I think operationally, I think FY25 should be a very strong year for the company, because overall the gold and jewelry market has been buzzing. Almost all the companies in this space, like Senco Gold, or typically all the other gold jewelry larger brands like Titan, have done remarkably well. And I think this is going to be a kind of a landmark year, because obviously gold prices coming down has increased demand prospects. So I think even at the current odd levels, if some were to take a 12 to 15 month kind of time frame, we could get a good outperformance from Kalyan Jewellers purely on the operational numbers. This deal which has happened is obviously going to be a sentimental booster, but earnings-wise, I think we should see very strong numbers coming out for FY25. So any declines, I think, should be used as an opportunity to accumulate the stock in your portfolio.
All right, there you have it. And speaking of Senco Gold, we also have an exclusive conversation with the management of that company at around 12:30. So don't forget to check in on that either. But on that note, going to take a moment to thank Avinash for joining us and taking us through his views on the various stocks that we wanted to address today. With that, it's also time to slip into a short break. And on the other side, we get your conversation with Elara Capital's Karan Taurani on how things could have panned out for Zomato going in, that clearly is the one that's been spoken about the most. Back in just a bit. Stay tuned in.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of those, that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
Today we are in conversation with Futures. Now this is a company that
Welcome back to Hot Money. Well, we are now going to take stock of a handful of companies out there which are buzzing in trade. But before that, I want to take a very quick look at how markets are faring. It's been a fairly quiet afternoon, not much to speak for in general, and that's always good news considering the Nifty is trying to inch back towards the mark of 25,000, and a little over that is where it made its life high about a few weeks ago. But the other stock, of course, which is in focus today is Zomato. It has announced the acquisition of the entertainment ticketing business of Paytm. It has not seen any reaction. In fact, I'm looking at Zomato's volumes on an intraday basis, and they're very, very ordinary. So it does seem like, the indications that came through back in mid-June are coming to fruition. It does also seem like a lot of this has been relatively factored in. And when it comes to the valuations at which the deal has been done, well, it seems like at least investors not too perturbed about that. But let's get in an expert opinion here. We have Karan Taurani, SVP at Elara Capital, who's joining us on the show. Karan, good afternoon. Thank you so much for joining in. Firstly, Karan, what are you making of this deal? At 7 times, well, some suggest that it's an expensive one. Some suggest that just look at the run rate and going forward. What's your assessment? We have read your note. You are constructive on this particular deal, but if you can elaborate a little bit more on this.
Hi, good afternoon. So I think if you look at the deal, in terms of valuations, it is not very cheap or attractive, but I think the valuations are fair. because the live events and the online ticketing business has the potential to grow at 15 to 20% on a steady state. And we have just two large players here. One is Book My Show, which is the market leader, and probably the second largest player, is Paytm. So I think it makes strategic sense, for Zomato to kind of scale up their going out business, and Paytm is the best bet that they could have, given Book My Show as a market leader, and they wouldn't want to sell out the stake. Now, what this does, to the going out business of Zomato is that if you look at the top line, it's about 400 crores today, the going out business of Zomato, which potentially moves up to 700 crores basis consolidation of this Paytm business, which is there. Now, this potentially can grow at about 15 to 20% on a CAGR basis, and which means that over next 3 years, you can see these numbers kind of doubling up. So it's a much needed fillip or a boost, for the Zomato going out business. It provides them that kind of scale, and of course, with scale comes economies of scale, wherein you can have some kind of bargaining power in terms of convenience fee percentages. You can have bargaining power in terms of the various artists around the live event side. So too much to play over here, and execution is key here in terms of how they look at the margin improvement from here on, because Zomato, from a track record perspective, they've been very compelling both on the food and the quick commerce business. Despite being a late entrant, they were the second or third entrant in both these businesses respectively. So I think if they're able to turn around this business segment, and if they're able to kind of match up to Book My Show scale over a period of time, I think that is the key monitorable. And second, of course, would be the margins, right? So I think they've guided for a very aggressive EBITDA margin of more than 20-25%. If they were to achieve even 20% EBITDA margin, this kind of a business, which is highly fragmented, highly competitive, I think it augurs well, for the overall valuation of this business.
Okay, Karan, I want to understand that, Antfin's exit 2 days prior to this announcement, does this coincide with the announcement, or what are your views on that?
Yeah, so I think that exit has nothing to do with this deal. I think both are very separate things. In fact, if you look at the valuations perspective, our target price of 320, or rather EV that we were building in terms of potential target price, only 1% of that from a valuation standpoint was coming out from the going out business. And with this acquisition providing the much needed boost and fillip to the overall top line, we believe that, maybe on a forward basis, 2% of your Zomato's consolidated valuation will come from going out. So I think there is no potential impact, or rather any big change in terms of Zomato's valuation or target price, because of this deal. I think this deal is purely to leverage upon the young customer base that Zomato has got, both on the quick commerce side and on the food side. They can use this opportunity to make this the third largest B2C business that they are going to offer. They can probably monetize this app, via ad revenue. They can cross-sell, upsell the customers, through the online ticketing to food, to quick commerce, everything put together. So I think too much to play at here in terms of synergies and in terms of potential advantages for Zomato. And but yes, the impact in terms of broader valuations is very, very minuscule, because Blinkit and the food business, contribute more than 85-90% of the valuation for Zomato.
Karan, I just wanted to understand, what is the current annual cash flow that Zomato generates? That's one part of the question. The second part of the question is that enough to cover this particular acquisition? We already know that it's sitting on a cash worth about 12,500 crores on, please correct me if I'm wrong here. My question is, and perhaps some people in the markets are suggesting that even if this acquisition wouldn't turn out the way they're planning to, well, the cost of acquisition in the long run may not be considerable because of the fact that they generate so much cash. What is your assessment on this specific factor here?
Yeah, so I think, in terms of cash, it's very clear that, it's a very strong business. They make, more than 20% of EBITDA in the food business, if you look at the adjusted EBITDA, and it is only growing from here on. I think there's going to be more expansion as we go ahead, more levers to play around ad revenue, around convenience, around your platform fee, around restaurant commissions put together. So I think there's a clear winner here as far as the investments are concerned. And in terms of free cash flow, the free cash flow will see a significant rise. They would be generating a free cash flow of about 500-600 crores today in terms of annual free cash flow. But the more and more we see in terms of traction within quick commerce, the bigger improvement that we see in terms of the food business margin improving, or in terms of the quick commerce turning profitable, the free cash flow numbers can even move up to 3x to 4x, over the medium term. So I think potentially, they can generate even 2,000-3,000 crores of free cash flow every year. And even if they were to invest, a few hundred crores of money into these businesses, of going out in the form of, discounts or promotions or any kind of investments for customer acquisition, I don't think it's going to matter much in terms of overall financials. So, right from valuations, right from revenue, right from EBITDA number, absolute number basis, right from cash flow, I don't think there's any kind of a big impact that, one can have either ways, on negative or positive side.
Okay, and Karan, in terms of competition, Book My Show has been in this business for the longest time, and they've not been able to scale up the business, as much as it was required. Yeah.
There was a voice, I think.
Sure, I'll repeat the question for you. So, Karan, I'm asking that...
Somebody's talking, I think there's a technical glitch.
Okay, can you hear me properly now?
Yeah, somebody was talking in the background.
Sure.
Yeah, you can go
no
on,
problem.
please.
Yeah, so my question to you is that, Book My Show has been in this business for the longest time now, and they've not been able to scale the business as much as they could have, right? So I want to understand that Zomato entering in this ticketing business, do you think that they'll be able to cater to audience that Book My Show has not been able to so far, and how much of a dent can they make in terms of Book My Show's business?
So, Book My Show has been a leader in this business. They have a very strong first mover advantage. And with the pandemic, the trends towards digital got accelerated, wherein we saw that, more ticket bookings for cinemas were done via online. Live events, more bookings were done via online. We saw sports, coming up as a very big proposition. So I think that cloud of Book My Show will remain here. In fact, Book My Show also has got exclusive rights to some of the large sporting properties. We saw that during the World Cup as well. So I think that cloud will remain with Book My Show. It's not very, easy to break into that. But definitely, once they reach a respectable scale, even something like a Zomato Live or a District, the new app which they're trying to launch, even they would have some kind of bargaining power here, with the content creators. So it all depends in terms of how they approach the sporting propositions, the IPL franchise. Cinema obviously is there on both Book My Show and on Paytm, so there's not much of a change over there. And how they build their own IP, because what is happening right now is that for a market like India, the events business is seeing massive demand, and this is specifically from a wide nature of events. We've seen a lot of international based events. We've seen other sporting events like Pro Kabaddi League, Indian Soccer League. We've seen other kind of events, like for example, there could be some music events which are very special in nature.
Sure.
So I think these kind of things are only going to drive the demand further. And there is opportunity for them to break into this through the niche approach that they have in the events business.
Right. Fair enough. Point taken, Karan. Well, thanking you, Karan, for joining us and giving us your perspective on Zomato and its latest acquisition. Well, with that, we are completely out of time on this edition of Hot Money. But don't go anywhere. Lots more lined up on the other side. Stay tuned to NDTV Profit.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Future. Now this is a company that has presence across various verticals, but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total.
Welcome. This is Market IQ on NDTV Profit. I'm Agam Vakil, and with me is Mahima Vachrajani, and we're in conversation with the management of Senco Gold on the sidelines of the Singapore conference, Ambit India Access. Of course, Ambit is carrying on the conference, and well, we do have access to several managements. Senco is, of course, one of them, and we are now in conversation with the MD and CEO, Shubhankar Sen. Shubhankar, good afternoon. Thank you so much for joining in. Well, it's, you know, your company has gone from strength to strength. You guys are also expanding in terms of your store presence across the country. Firstly, your assessment on the kind of traction we've seen, one, in gold prices, which have been on an ascent, but in comparison, we've also had that update when it comes to the union budget, where we've seen actually a cut in basic custom duty. Any impact with respect to how gold pricing has been and the kind of traction that you are witnessing in terms of your revenues?
Correct. So you know what, our expansion has been focused mostly in the eastern and the northern part of the country. And what we saw in the Q1, because of the jump in gold prices, especially after Akshaya Tritiya, which was around the mid of May, there was a little bit of impact in terms of volume and footfalls at the store, for the reason that we could see only a 7.5% growth in terms of top line in Q1. But I must tell you that post the budget, and even for that matter, even in the middle of July, when gold prices were stable, and the budget really helped in triggering the consumers to come to the footfalls, come to the stores, and the footfalls increased. And we could actually see that the growth that of 7.5% that we were seeing only in Q1, that has gone up above 15% as on date. So that's been the kind of traction in terms of the footfalls, in terms of the sales that we have seen post the budget. So consumers have taken it in a very positive manner. It was a very good initiative by the government, because this will enable the formal sector, the organized sector, to grow much more. And the differences that were existing due to the illegal ways of gold coming in will really go down. And I think that it will just make the industry more organized.
Right. Mr. Sen, your diamond sales in Q1 also did see some kind of degrowth, roughly 3 to 4%. Now that gold prices, like you mentioned, you're seeing more traction from the customers in terms of gold selling. What is the outlook on diamonds right now? How are the customers, whether they're buying it, whether they're not buying it? What's it like? What's the trend like?
So let me tell you that if you look at the 2-3 years scenario, diamond jewelry sales were growing at a nice double digit of 20, 25, 30%. It's only in the Q1 that we saw that there was a dip in diamond sales. Now, let us analyze it in certain 2-3 parameters. One was that due to the heat wave, due to the high gold price, due to the election months, there was a little lack of liquidity. So indirectly, the consumer were not in the mood to buy jewelry. People were just, I would say, irritated with the whole heat situation in the atmosphere. So people, footfalls going less. So automatically diamonds, which are selling on top of gold, on the wave of gold, also takes a hit. But if we are looking at Q2 right now, we are seeing that the sales have improved for diamonds. There were not many weddings in Q1, but now the wedding jewelry buying for the Q3 and Q4 has also started happening because already in the international markets, gold prices on an upward trend. So consumers are fearing that what if gold prices go back to their old levels? So might as well start buying from now on. So yes, for the bigger size diamond, the prices have taken a hit. So the investment opportunity and the investments into diamonds, at one end, people are thinking that, oh, prices are going down, should we invest or not? But at the other way of looking at it is that prices are down. We are hearing of news that the factories in Gujarat and Surat, they are shutting down in order to control the pricing of diamonds. So prices might be going up. So yes, it's down right now, but we are positive that it will pick up with the wedding season and with the rationalization of the gold prices.
Shivankar, also want to understand your expansion plans at the moment in terms of your retail footprint. What does it stand now when it comes to your store count? We believe that you are looking to add about 15 to 20 stores going forward. What is the horizon that you're keeping an eye on when it comes to these addition in store count?
So see, our store count that we intend to do this year is anything between 18 to 20 stores, out of which around 9 to 10 stores will be company-owned, company-operated, and 9 to 10 stores will be the franchisees. And the focus on the geographical expansion will be mostly in the eastern and the northern part of the country, because we would try to continue to, go for the low-hanging fruits in which the return on capital will be, the probability will be higher. Because let us not forget that the uncertainty in the market, the volatility in gold prices, the risk factors associated with the geopolitical situation will continue to happen. So might as well expand, but do it in a sustainable manner, in a manner that your risks are on the lower side. So that's how we would look at it. Obviously, the franchisee is somewhere where our involvement of capital will be lower. It is going to be the franchisee who would be investing into the capital and take care of the local market. So that will be our focus area. But yes, with the gold prices going up by 20%. So while maybe 2 years back, if you would have asked me, I would have said, yes, 24, 25 stores would be great. But no, I think this year, let us look at a store growth of 18 to 20 stores.
Okay, Mr. Sen, now I want to understand, what are your plans with respect to the Senes brand? Because, that is the one brand where you're also doing lab-grown diamonds. Plus, in your annual report, you've mentioned that you might foray into the premium lifestyle accessories, luxury leather bags as well. So I want to understand that what are your plans with respect to Senes, as well as, the impact of Senes on your revenues and profitability?
So see, lab-grown diamond is something that is trending in, and consumers are gradually getting to know more about the product. So for the industry, the way, we have seen gold as a category, diamond as a category, platinum, silver jewelry also as a category is growing in a good way. So similarly, you will see the inclusion of gemstones getting added into the various kind of necklace sets or bangles or jewelry as a whole. So similarly, lab-grown diamond will play a role. Right now, it is much in the nascent stages. We are also piloting with 4-5 stores. We are understanding the consumer behavior, the kind of jewelry that they are buying. We are very clear. See, when it comes to wedding, when it comes to special occasions, obviously, be it for the family or for the couple, they would want to give something which is natural. But when it comes to fashion, when it comes to impulsive purchase, when it comes to having a variety of solitaire diamonds, not just the round, brilliant cut, but also maybe emeralds and heart-shaped and the variety part of it, then obviously consumers would look at lab-grown diamond as an option. And I think that now the base is very low, but the future is bright. Over a period of 5 years, 7 years, it might just be a part of, say, 2 to 5% of the industry would be the lab-grown diamond jewelry that is selling. And when it comes to the leather accessories, I think that gradually, looking at the future, one has to understand that while jewelry is one such accessory, similarly, we have to look at other accessories that can make a woman look beautiful. So we are trying out with the leather accessories as a part, as a fashion, as a design element to add to the jewelry that they're wearing. So that's the thought process of the design centricity of Senco that we are looking at Senes.
Shivankar, I have a follow-up question on lab-grown diamonds. The understanding that we get at the moment is when it comes to consumers, they're still very, very resistant to, well, taking in the concept of lab-grown diamonds. And while there are plenty of producers, in lab-grown diamonds in India as well, their businesses are thriving because of export markets and not necessarily the kind of demand traction that is seeing in domestic terms. I would love a comment on that one as well from your end.
So let's just look at it in a different way. One is that lab-grown diamonds are mostly produced in our country. So somewhere the benefit of controlling the imports of rough would be there, but that's more from an economic side of view. If you look at the consumer point of view, when it comes to solitaire diamonds, only I would say 10-15% of the population would be able to buy a natural diamond solitaire for the price of it. But by the lab-grown concept of it, the aspiration and the desire to own a diamond can go to a much larger consumer base. And I would say the potential and the probability of the woman to buy more and more jewelry with a diamond studded, be it natural or lab-grown, would increase that much more. So I think that in all industry, there needs to be an innovation, there needs to be something new. And I think lab-grown diamond is one such thing. While nothing is being taken away from the natural diamonds, it is an asset. It is something that Mother Earth is giving you, and you need to make sure that over the years, it will become rarer and rarer. But lab-grown diamond will give you an opportunity to play around with designs and play around with your desire and aspiration. That is how one has to look at it.
Okay, Mr. Sen, you've guided that you are planning to tap into global markets, and you've said that you want to increase your international presence in the next 5 to 6 years. Give us some colors as to what geographies you're planning to tap into, and what is the kind of growth potential there?
Correct. So right now we've just opened one store in Dubai, and if you look at the overall industry, we have such players from our country, many major players who are foraying into has already been strong in the Middle East, foraying into US, UK, Australia. So our Indian diaspora itself is now spread all over the world, and they are doing so well. So I think that as a natural extension from a made in India products available across the world, and the way India is growing, I think it's time for 10-15 years from now that Indian brands will establish themselves more strongly across the country. So I think this is the time one has to start thinking on looking at those international markets and cater to the subcontinental population, and gradually cater to the other population as well. So I think like our Honorable Prime Minister was saying, that design in India, it's not just made in India, but products of India, brands of India, and design of India. I think we all need to make the economy and our countries prouder and stronger, and we will do it in a phase-wise manner and step by step getting into these bigger markets.
All right, Shivankar, we'll leave it at that. Thank you so much for joining us and giving us your perspective on how business is panning out for Senco Gold. Of course, we look forward for more updates from the company going forward as well. But thank you so much for joining in. Well, that's the management of Senco Gold telling us about all that is in store for the company. But with that, it's time to slip into a short break. Lots more lined up on the other side. Keep watching NDTV Profit.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
they have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So
Welcome back. This is Market IQ. Well, moving on, Tech Wabag secured a repeat order from the Chennai Metropolitan Water Supply Board, and the order is towards operations and maintenance of the plant for 7 years. We spoke to Skanda Prasad Sitaraman, the CFO of the company, about how this will aid growth for the company going forward and the road ahead. Listen in.
We have a very clear laid out strategy that we want to increase the share of our operation and maintenance business of our overall revenues. We are today at about 15-16%. We have set a medium-term target of getting it to 20%, and this order is pivotal that way in furthering this revenue stream growing. What is also more important is this is an order that we have been already executing for the past about 10, 11 years. We built the plant. The plant was commissioned in 2013, and this was the first DBO model desalination plant for domestic water supply in all of India. And we have been maintaining it for the past 11 odd years. Now we have secured an order for 7 more years. That makes it an overall about 18-year life cycle. And this is also a demonstration that long-term O&Ms can be successfully maintained. And this is also a success story for desalination, both for Chennai and for Wabag.
So, let me just come to the financials before we get to the bigger picture of desalination and where you think you're going forward. If I'm looking at your Q1 numbers, it was a pretty decent quarter, margins at 13%, bump up over there from 11.9%. You're seeing those margins maintain, and even for a repeat order like this one, where you've been with that client for a while and then they have now renewed that order. What are the kind of margins you see, and what is your margin maintenance guidance for the year?
We have given a medium-term guidance. We don't do it year over year because it's a practically lumpy business. 70-80% of the business comes from EPC. But we have given a band of 13 to 15% within which we would like to maintain the EBITDAs going forward. From the last year, we have also seen revenue growth now starting with the robust order book that we have. And this is an O&M order. This is not an EPC order. And while you see the margins are blended at about 13%, the O&M margins are generally much better. We don't give a sectoral margin guidance or a project-wise margin guidance, but I can tell you this is a very profitable order and it is much better than 13%.
Okay, just give us an idea of your new projects and what are going to be your revenue drivers. You have new projects in Chennai, in Bangladesh. Since you have work in Bangladesh right now, also give us a sense, Mr. Sitaraman, of has there been any impact due to the political turmoil that we've seen?
Let me take the Bangladesh question first. This is a World Bank and AIIB funded order. So payment securities are very clean over here. So multilateral funded orders is what we go for. So we don't see any typical risk over here. We are waiting and watching. It is too early. We have demobilized our resources while the local resources continue to chug along over there. It's the engineering and procurement phase is what the project is at, which we will continue to do from the head office. The local site works will obviously be on a wait and watch mode, but we see that being multilaterally backed, being essential services sector, this should move forward, and we'll see in the next couple of weeks. We hope that things will be much better. From a Chennai order perspective, It's going very well. The engineering is largely complete. We are in advanced stages on the engineering front. Procurement, again, is on full swing. We will start our supplies by end of Q4 next year. Will be a peak in terms of procurement and supplies, and also marine activities will be at full swing in the next year. Civil activities are going at very, very good pace. There is a lot of mobilization of resources because, huge amount of concreting has to be done with the size of the projects, a 400 MLD project, and all things are on track, on time, on quality, and on budget.
Just to get a sense of, the kind of order book you're looking at, of course, your breakup is 60% rest of the world and 40% India. Do you see that continuing? Do you see more municipal orders bumping up from various states? Just give us a sense of where you see the order book growing.
From a strategy perspective, we will not go for state orders. We have repeatedly stated that we will be on orders only where there is a multilateral funding, a federal government scheme funding, or a letter of credit, sovereign guarantee, or a G2G funding. So we want to be very secure on the payment front, and we have been very successful on this. More than 98% of our orders in EPC are on this front. From an order book perspective, today we see that the existing order book is good. And we are also seeing the order pipeline to be very strong, especially in the Middle East and Africa region. India, last 9-12 months has been a little slower because of the general election phase. Now that that is passed, H2 should see some better action from an India perspective. But the last 12 months, having known that this is going to be a general election phase, we moved our resources overseas. We put in bids of over $1 billion, and we are already seeing the outcomes coming through one by one. Early on in the year, we had one order from Ras Tanura. It's about a $33 million order. We are now seeing the Chennai order coming through, and we have also stated in our earnings call, which was earlier the last week, that we are preferentially placed. We are a preferred bidder in orders of over 6,000 crores, and largely these are international in nature, desalination, wastewater treatment. So we see that the international breakup will continue to grow, and Middle East and Africa will be the growth engine, while India will remain the core market. At an overall level, we will stay within the emerging economies, India, Middle East, Africa, Southeast Asia, and CIS countries. We have completely defocused from our European business. You would have already seen that we have divested the third European subsidiary. So we are practically 0% exposure on the Western Europe, while we will continue to see that the Eastern Europe, CIS countries still need a lot of water infrastructure. And that is part of our strategy where we are putting in business development efforts. But at this point in time, India, Middle East and Africa, plus Southeast Asia is our core market.
Well, that's the management of VA Tech Wabag telling us about the plans going forward. A quick look at how things are faring as far as Indian markets go. I want to actually take a look, a specific one, at the broader markets. Let's pull up the mid-cap and the small-cap indices and see how they're faring. Do remember that there's been a little bit of an outperformance when it comes to these indices going in. And it's not just been the case today. It's been the case for the last few days now that we have, in fact, seen a little bit of a resurgence when it comes to small-cap and the mid-cap indices. All in all, even on a year-to-date basis, the alpha for a mid-cap or a small-cap index is well, there's a huge difference between that and the Nifty 50. But to take stock of perhaps what's really going on in terms of the returns over the course of the course of today, well, we do have some weakness in a handful of names, and we should perhaps take stock of that as well. So when it comes to some of those names coming in, we do have a little bit of weakness in something like a KFin Tech, as well as something like a Garden Reach, which is down. And even in terms of those stocks which are seeing an advance today, we have something like a Vascon Engineering. That's up as much as 12% right now. Fact is the other one. That's fertilizers and chemicals of Travancore. That's up as much as 10% as well. We've spoken about Archean Chemicals. That's also up and about and advancing by around 6.8%. And LG Equipment, on the back of good volumes buzzing in, we have an advance of around 6.4% there as well. Shyam Metallics is on account of a UBS note where they're in fact expecting a 50% up move from even current market levels after the stock has in fact advanced by around 6-7% on an intraday basis. This is largely on account of prospects coming through when it comes to Shyam Metallic. Natco Pharma is the other one. That's up around 5.5% as well. And among stocks which are under pressure, if we can actually very quickly take a look at some of these names which are in fact looking at some amount of weakness, we don't have too much to speak for. All in all, there are more gainers than losers. And again, with respect to losers, we have very marginal losses for something like an OFSS, which is down less than 1%, Time Techno as well, which is about, less than 1% as well. So a lot of these counters which have been strong in terms of momentum of late over the course of the last 3 months, 6 months, 12 months are looking at a little bit of consolidation, if you can call it that. So something like an Oracle Financial Services is certainly looking at that sideways movement coming through, as is the case for something like a BLS. It also does seem like there is a little bit of stability now in a handful of defense stocks, so that's something that we need to keep an eye on as well. But on that note, we are completely out of time on this edition of Market IQ. Lost my lineup on the other side. Keep watching NDTV Profit.
The first few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals, but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
Benchmarks continued their uptrend after Fed minutes strengthened rate cut expectations in September. Nifty breaches 24,800 while the Sensex crosses 81,000. Most sectors trade higher, led by gains in banks and realty. Meanwhile, energy and IT come out as the only laggards. Zomato adds Paytm's ticketing business to its menu for 2040 2,048 crore rupees. Brokerages give a thumbs up to Zomato, both stocks currently under pressure. And the Supreme Court resumes hearing in the Kolkata RJ car rape and murder case. The CBI submits a detailed report. The apex court slams authorities over working conditions. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's start with a quick look at where the markets are at. Well, it continues to remain a quiet day of trade once again following yesterday and today as well. We're seeing the benchmarks trade within a fairly tight range. However, thanks to some positive global cues, the Nifty 50 is currently trending above the 24,800 mark, while the Sensex is currently at about the 81,000 mark. Let's also take a quick look at some of the key movers within the Nifty 50. What's performing particularly well is ICICI Bank, Bharti Airtel, HDFC Bank, Grasim. These are adding almost about 70 to 80 points alone to the Nifty 50. What's a little bit of a drag, though not so much, is TCS, M&M, ITC, Tata Motors. Let's also take a quick look at some of the sectoral indices. We're continuing to see most in the green. PSU Bank is currently in the lead. It's up by almost about 0.75%. The Bank Nifty, Realty, Finance, not too far off, all currently clocking in gains of over about 0.5%. Consumption, infra, FMCG and metal are also in the green. What is not performing particularly well is energy and IT, both of them. Energy is down by almost about 0.5%. And IT, PSC down by about 1/5%. Pharma too in the red, marginally so, down by just about 0.1%. Let's also have a look at the broader markets. The Nifty mid caps. The Nifty mid cap 150 is currently in the green and it's up by about over 0.5%. On the Nifty 250, we're currently Nifty small cap 250, that's also in the green. And in the green by about a little less than 0.5%. All in all, not much to complain about. It is a slow day of trade, but a steady one at that. Moving on to some of the top news of the day. Zomato has bought the ticketing business of Paytm. The stocks of both companies are reacting since the start of trade today morning. Zomato is down. It's currently down by about over 0.5%, while Paytm is also down by about 1.5%. The bigger question is, has Zomato overpaid for the ticketing business? We have Sajit Manghat who joins us on the Zomato Paytm deal with more details on that. Sajit.
Yes, the news was out in the market, or the talks were out in the market, but also the fact that there has been a shift in the Zomato business lines as we speak, because Blinkit was showing EBITDA positive. They had made Zomato food delivery was making profit, and that was one of the reasons why the stock has been running up. But this acquisition of 2,050 odd crores seems to be on a higher side, given the fact that what Zomato is going to get. It's going to get a revenue of nearly 229 crores, EBITDA which is around 28-29 crores, which gives a 10% EBITDA margin there. But the bigger question is that at the end of the day, Zomato is planning to scale up its entire ticketing and going out business, and it's buying the customers in this deal. The total transacting customers in Paytm today is around 10 million customers as per the disclosures made by both the companies, and which basically means that you're paying around 2,000 rupees a customer to acquire each of the customers, and you don't know whether at the end of 12 months when the transition happens from the Paytm app to your app or the district app, which will house the going out segment, how many of them will be unique and how many of them will actually get transitioned to district app. That's one of the biggest challenge which will be there for that, and for that you are paying 7 times the revenue in terms of your in terms of valuation, and roughly 70 times EBITDA which you are paying. Now you can easily argue that from a gross order value perspective, it's nearly 1 time that cash you are paying out to Paytm. By the way, for Paytm, it's a very good thing because they are getting 4x or 5x, nearly 5x returns on the investment that they made in the ticketing business. But for Zomato shareholders, you're paying 2,000 odd crores for a business which you could have invested organically. You have already invested in it, and you could have scaled it up. The very fact that this business is a little tough to scale up is that the biggest player in this market, which is Book My Show, has a revenue of nearly 800 odd crores. It has a EBITDA margin of 13%, and for the last 15 years, Book My Show has been in this market. Though it's a profitable company, it is in one way not been able to scale up to that kind of revenues as Zomato is projecting itself to be, because they are saying that by FY26 or 27, from 2,000 gross order value, they will go to 10,000 crores of gross order value, which looks a far stretched at this point in time, and because of that, it seems that this entire transaction is little overvalued and negative for Zomato, because you are using your hard cash on an investment which you could organically grown, but you're using the inorganic way and paying much more.
Right, thanks a lot for that, Sajid. On that, we also spoke to Karan Taurani, the Senior Vice President of Elara Capital. Let's listen into what he had to say about the Paytm Zomato deal and if the valuation is fair or not. Remember, Elara has a buy rating for the company, so let's listen into what he had to say.
I think if you look at the deal, in terms of valuations, it is not very cheap or attractive, but I think the valuations are fair. Because the live events and the online ticketing business has the potential to grow at 15 to 20% on a steady state. And we have just 2 large players here. One is Book My Show, which is the market leader, and probably the second largest player, is Paytm. So I think it makes strategic sense, for Zomato to kind of scale up their going out business, and Paytm is the best bet that they could have, given Book My Show is a market leader, and they wouldn't want to sell out the stake. Now, what this does, to the going out business of Zomato is that if you look at the top line, it's about 400 crores today, the going out business of Zomato, which potentially moves up to 700 crores basis consolidation of this Paytm business, which is there. Now, this potentially can grow at about 15 to 20% on a CAGR basis, and which means that over next 3 years, you can see these numbers kind of doubling up.
Right, now, another stock that's buzzing in trade is IRDA. The stock is up over 9% currently. This is after the board has decided to mull a fundraise of about 4,500 crore rupees. Harsh is standing by with more details on that one. Harsh.
Well, yes, absolutely. Good afternoon, Pallavi. Equity raise of 4,500 crore, that IRDA has contemplated and announced. It's going to be the optionality of the company to do either an FPO, either a preferential issue, either a rights issue, pursuant to this approval that they've got. Also a QIP on the table. So one or more of these options going to be used to try and raise those funds. In terms of an NBFC, typically will raise equity only where growth is required. So therefore, capital adequacy becomes important. 19.5% is where the capital adequacy ratio lies for IRDA. 25% growth, so very bullish with regard to the growth expectations that IRDA has, and therefore likely the funding will go towards funding growth going forward. In terms of the way or the journey of the stock, it's been a very solid compounder over the last year since the IPO, of course. 32 rupees is what the stock price was, the IPO price of the stock was, currently sitting at 262 rupees, which essentially means that investors have made very, very solid returns on this one. 8x plus is what investors have made. In terms of where the valuations lie, and this is critical because the book value of this company is roughly 8,900 to 9,000 odd crore. and it's trading at a market capitalization of 70,000 crore and therefore trading at roughly 8 times price to book, which is slightly elevated in comparison to most of its peers. So keep your eye out on this one. Of course, stock in focus because of the 4,500 rupee equity raise that they are looking at.
Right. Thanks a lot for that, Harsh. The stock is up currently by almost about 9.5%. Another stock that's buzzing in trade today is Kalyan Jewellers. It's on the rise. It's up almost about 7.5% as the promoter is showing confidence and picking up an additional stake worth 1,300 crore rupees. My colleague Mahima joins us with more on that. Mahima.
Right, Pallavi. So, where we are seeing that in a lot of companies, promoters are selling their stake. Kalyan is one company where promoters are actually increasing their stake. Now, in terms of the block deal that has taken place today, why the stock is up around 7%, around 5 block deals took place and roughly 6% of equity has changed hands. Now, yesterday in its filing, it is mentioned that the promoter will buy more stake from Hydel. Hydel will sell approximately 2.36% of its stake. At present, its current stake is roughly 9.17%, and post the stake sale, Hydel's stake will come down to 6.8%. Now, in terms of promoter stake, well, the promoter stake was at 60.6%, and post buying the stake will go up to almost 63%. In terms of the deal will be for a stake sale of roughly 1,300 odd crores, as you rightly mentioned, and in terms of the price at which the deal is going to happen, in fact, it has happened now. It is at 535 a piece, which is roughly a 3.7% discount from its yesterday's closing price. So, because these promoters are showing confidence in the company itself and buying stake, the stock is up and above in trade. And of course, the stock has been a bit under pressure in the past 1 month, up only 3%. However, 6 months, it's been up around 48%. And 1 year, the stock has been up around 144%. And in terms of brokerages, well, the street view is also bullish on Kalyan Jewellers. We have roughly 7 buys versus 0 hold and 0 sells. So this is the overall reason why Kalyan Jewellers is buzzing in trade today.
All right, thanks a lot for that, Mahima. And continuing with some more stock-specific action. Deepak Nitrite is the next stock on our radar today. This is as the Directorate General of Trade Remedies and the Ministry of Commerce have now recommended an anti-dumping duty on one of the products that the company makes. What does this mean? I have my colleague Varsha here on standby to tell us more on that. Varsha.
Thanks, Pallavi. So yes, DGTR, Ministry of Commerce, has recommended anti-dumping duty on IPA, which is the isopropyl alcohol product exported from China. Now, this requires approval from Ministry of Finance, though. This product is used as a solvent for cosmetics, drugs, and for denaturing ethanol. Now, the DGTR has recommended duty of almost $217 metric per ton for imports from most of the companies in China. Stocks which will benefit is Deepak Fertilizers and Petrochemicals and Deepak Nitrite. These two companies are the only manufacturers of IPA in India with similar sales volume of around 65 kiloton per annum in FY24. According to IIFL, this duty will translate into an incremental EBITDA of around 120 crores for these companies, assuming completely pass-through, and earnings will increase of around 10% for Deepak Fertilizers and 6% for Deepak Nitrite once the implementation is in process. Of course, apart from the proposed duty on IPA, other recommendation was on anti-dumping duty was on epichlorohydrin, which is used in plastics and water purification. So this duty is from Thailand, Korea and China, which would actually aid for companies like Epigrel and DCM Shriram.
All right, thanks a lot for that, Varsha. And with that, time for some international news now. Prime Minister Narendra Modi is set to become the first Indian Prime Minister to make a trip to Ukraine. He addressed the Indian community in Poland as well yesterday and spoke about war and peace. My colleague Vishnu Som is in Ukraine right now. Let's get across to him to understand what can we expect from this historic visit. Vishnu.
Well, there are two parts of this, and I think we'll talk about Ukraine in the second part of this live report.
The first part, of course, is in Warsaw in Poland. That's where the Prime Minister is right now. Delegation level talks are taking place. A restricted meeting with Donald Tusk, the Prime Minister of Poland, taking place right now. There'll be press statements. There'll be wreath laying at a tomb of the unknown soldier, a bilateral meeting with President Duda of Poland. So that's all very important. There is a historic connect between India and Poland. Our soldiers had fought together in the Second World War. So that's one part of it. Later tonight, the Prime Minister begins his journey to Kiev. Now, it's a difficult journey. It's a long journey. Remember, airspace over Ukraine remains shut. Just as a small aside, I was on the very last plane into Kiev, which attempted to make a landing. But while I was overhead Iran, it was an Air India flight, an evacuation flight. Airspace was shut down and we had to fly back to Delhi, an air turnaround as it was. Since then, Ukrainian airspace for civilian flights has never been open. So the Prime Minister likely to be on a train as he makes his way over here. The talks tomorrow are all important. Remember, he'll be accompanied by the External Affairs Minister, the National Security Advisor as well, and of course the Prime Minister. So a very important visit. Will there be any out-of-the-box solutions that India may have, the Prime Minister may have, towards ending the war between Russia and Ukraine, a war that has claimed tens of thousands of lives on either side? That's what we'll need to see. We understand that it's going to be a short visit, but a meaningful visit, hopefully, and one which clearly shows the independence of Indian foreign policy. Remember, the Prime Minister just a couple of weeks back was in Moscow. A couple of weeks later, he's going to be in Ukraine. And the message is absolutely clear. The territorial sanctity of nations has to be preserved, the UN Charter has to be respected, and there needs to be a negotiated settlement to the crisis between Russia and Ukraine.
All right, thanks a lot for that, Vishnu. We will continue to come back to you at some point later today for more updates on this. But with that, it's time to slip into a short break. Do stay tuned. We have more coming up on the other side.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has...
Hello and welcome back. You're watching Market IQ on NDTV Profit. Let's also take a quick macro check now. The headline HSBC Flash India Composite Output Index came in at 60.5. That's for the month of August. And that's compared to a figure of 60.7 that we had seen in July. This basically continues to indicate a fairly sharp rate of expansion that's currently higher than the long-term average for the index. Just for context, a print above 50 indicates expansion. There was a softer increase that we saw in manufacturing industry output and a fractionally stronger rise that we saw in services. The HSBC Flash India Manufacturing PMI saw a modest slippage from 58.1 in July to a 3-month low of 57.9 in August. This is also, however, above the historical average and continues to signal a fairly strong improvement in the sector's health. The pace of employment growth has also been fairly marked and broadly similar to what we had seen in the previous month. That's for both the manufacturing and the services sector. Companies also continued to signal a further increase in cost burdens for the month of August. Output price inflation in manufacturing rose to an 11-year high. That's despite a small slowdown in input prices. Also, private sector companies in India continue to forecast higher output in the year ahead, and they expect demand conditions to remain broadly favorable. Still, what is a point of concern is inflation that continues to rise and also increasing competition. With that, it's also time to take a quick look at some more national news. The Supreme Court has resumed hearing in the Kolkata RG car rape and murder case, where the Apex Court has slammed authorities over working conditions. My colleague Varun has more details on that. Varun?
Yeah, hi, thanks. So the hearing in the RG rape and murder case resumed today after the top court had given 2 days' time to the CBI and the state of West Bengal to file their status reports in the matter. Now, during the hearing, the CBI alleged that they entered the investigation on the 5th day after the crime had taken place and said that everything has been altered by then. To this, senior advocate Kapil Sibal, appearing for the state of West Bengal, said that nothing has been altered and that everything is there on video. While going over the status report filed by the state of West Bengal, Justice Pardiwala flagged that it is extremely disturbing that a case of unnatural death was registered after the post-mortem had taken place. He said that in his 30 years of career, he has never seen this happen. Now, the court has risen for lunch as of now and will resume to hear the case at 2 p.m.
All right, thanks a lot for that, Varun. We will continue to bring more on that. But also the Bombay High Court has taken up the Badlapur minors sexual assault case that has sparked massive protests across Maharashtra as well. My colleague Charu joins us with the latest developments on that case. Charu.
Hi Pallavi, so the Bombay High Court took suo motu cognizance of the case, the Badlapur minor assault case, and now they made several observations. However, the hearing has been adjourned to Tuesday next week, citing reasons such as the SIT being constituted very recently, and they want the entire report to be able to go ahead with the matter, and that is why they'll hear it partly on Tuesday. So they made several observations, including that even though the students, the minors complained about the school authority did not take any action, they also said that it is very important to note that any means of identity of the victims or their family members are not disclosed to the public, and the state and the court also asked the state what is being done for the counseling or for the mental health of the victims. They also said that the police has not really done its job properly because a lot of details were added after the court took the suo motu cognizance, and also asked why the name of the second victim is not really available in the first information report, that is the FIR.
All right, thanks a lot for that, Charu. And moving on to some political news as well. Tamil Nadu has a new party that's making its way for the 2026 state elections. Actor Vetri Kazagam, party leader Vijay has unveiled the flag and symbol of his party. Now with this launch, actor Vijay joins the list of actors from the Tamil film industry to wade into the world of politics. That's all that we have on the show for today. Do stay tuned to NDTV Profit for more coming up. Thank you for watching.
first few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express. And at that point, she wore one of our outfits on the Kapil Sharma show. After that, we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
Today we are in
Hello and welcome to NDTV Profit. You are watching the Mutual Fund Show. I am your host Muralidhar Swaminathan. It's the season of business cycle funds. Two new funds have been launched, one from Bank of India Mutual Fund and another from Motilal Oswal. There are 5 such funds. To understand more about this category of funds, let's go across to our guests. We'll soon be joined by Bank of India Mutual Funds, Alok Singh and Pankaj Madpal. I think we have both gentlemen. Welcome to the show.
Thank you very much.
Okay, I'll first go to Mr. Alok Singh. He is the CIO at Bank of India Mutual Fund. And the first question, Mr. Alok Singh, is what is this? This seems to be a season for business cycle funds. Tell our viewers what business cycle funds are. Why should an investor invest in business cycle fund?
If you look at, as the name suggests, the business cycle. So if you look at in economy itself goes through the cycle, and because of the economic cycle, everything which is part of the economy goes through the cycle. So whether it is sector or any other macro factors, they go in a cycle. So this fund basically, or this way of investing, allows you to align with that cycle. So when the cycles are bad, you will reduce exposures over there, and when they are good, you will increase exposure, and you try to create alpha over the market with aligning yourself with such things. So it becomes an interesting way of enhancing your alpha generation capabilities, and that's how it differentiates with the other any diversified fund or a sectoral fund. Basically the way it tries to capture the market or the economic uptrend. Also able to navigate, because if you are looking at in a sectoral fund, you get stuck in a particular sector, or if you are looking at a diversified, then diversified has many things which lead to a normalization of returns, which could be called balances, and so this becomes more focused towards what's happening and what's relevant in the economy and resulting into the businesses. And that's how I think this becomes a superior investment strategy.
Okay, so now there are 4 or 5 business cycle funds and you are launching one, Motilal is also launching one. Now in your case, how will this be different from the other funds? It must be the same basket, is it?
Yeah, no, so obviously the name is same, but the investment style are different. There are 3-4 ways where the people look at. One is a very macro way. So when the economy is doing good, you increase the beta of your portfolio, and when it is not, you reduce the beta. That is one style. Other is a sectoral style where you go, specifically for a sectoral call, and you increase the sector weight and things like that. The third one is more like a thematic. What we are doing to do? We are looking at mega themes or mega trends which are emerging in the economy and try to build portfolios around that. Mainly because the time when the economy is doing good and the themes are building well, those themes lead to either newer pool of profits, or they generate or they augment the existing pool of profits. So basically that resulted in higher earnings growth for the portfolio, and that's how we are looking at in this fund.
Right. So in the current scenario, we are the fastest growing economy. The growth is going to be pretty strong. We are on a very stable chart as far as GDP growth is concerned, and businesses are also growing. But most of this is priced in most of the sectors in the market. Therefore, if you are going to look at a mega theme, let's say from the next 5 years point of view, what would be that mega theme? What are the sectors or sub-sectors or specific industries that you will look at?
Okay, interesting. Obviously, as we are moving, so markets are doing their job and they're trying to discount many things which are there in the table. Right. So like if I look at India as a country today, we are 5th largest economy with the, say, roughly $4 trillion of economy. And we are expected to become 3rd largest and probably reach $7, $8, $10 trillion in times to come. Then if I look at my size of the banks, none of our bank feature in the top list today. But when I'm 3rd largest and at $7-8 trillion, will not my banks still feature there? I think they will. And they will be by virtue of the size, right? Maybe the margins may be lower, margins may come down, but the absolute pool of profit will be much, much higher, maybe 4-5x than what it is today. And that will get reflected in the price. So, when we look at discounting the market is only looking at maybe few quarters or few years. But if you are looking at, this way that, I'm just giving one example, then in that case, then the runway for growth for even the well discounted bank today could be much, much higher. So I think when you look at theme-based investing, you look beyond near term, and that's where it generate higher profits if you are able to your hypothesis holds good. So I think we are not that worried, and this debate will always be there. Near term volatility because of it being discounted, it will always be there. But if you look at if we are talking of it discounted because we are looking at $4 trillion economy. If we talk from the $8 trillion economy point of view, obviously the addressable market, the pool of profits and everything changes, and probably some of that may not be discounted today.
Right. So before I go to Pankaj, one focused question, Alok, is what would be the 2 or 3 mega themes that you're looking at? Is it going to be in materials? Is it going to be in manufacturing? Or is it going to be simply in renewable energy? Because these are obvious themes that are there in front of us. But as a fund manager, as CIO of this mutual fund, you would have identified some mega themes. What are they?
See, one very prominent themes and where the valuations also are quite reasonable is the financial well-being, right? When I'm talking of financial well-being as an economy. So in that, if I look at them, there are 3 mega things in the financial well-being. One is the size itself, and this is what I gave you an example of. Then the second is the accumulated wealth and the people who are managing or getting influenced by wealth. And the third of that financial well-being is also the discretionary spend, the entire consumption. So if you look at this is all part of the mega theme, which is the financial well-being, which is linked to a size of the economy, our per capita GDP income and things like that. So that is one thing. The other is, I think, the entire manufacturing theme, which includes some amount of what is already factored in by the market in some of the places, maybe already expensive. And when you talk about manufacturing, it has to be driven by power, because today for everything, right from the plain vanilla manufacturing to a high-end AI or something like that, which we are talking of, the power demand is going to be much higher. So, while we may say renewal has already done well, but if you look at the kind of power we may need, so I think it will be mix of a few themes, which could be, I think the broader themes which we are looking at today is the financial well-being, which includes the not only the financial companies, but the discretionary spend. Second is what we are looking at, the entire Make in India theme. Some of it is already run up, some of may evolve, I think, but that's a decadal theme to play. Third, I think we are very keenly looking at power. I think that is something which is without that, and we will not be able to move anywhere away from $4 trillion, which we are today. So I think that's, and lastly, I think we are also very looking at this entire, so to say, the renewal or reusable thing. Unfortunately, there are limitations in terms of limited number of stocks and the size of them to be traded. So I think that's a limited, but I think, yes, we remain interested there.
Yeah. It's now many people keep talking, and I think you have also mentioned in your one of the themes is that demographic trends that are emerging. Now, this is very vast and very wide. Where do you think demographic advantage will help investors make money, and how will you identify them?
So when we talk of, demography is a large word. You have to look at you have to break it up, and basically demography has to lead into a behavioral change, right? So we have to look at what is the behavioral change which is happening, right? Like if you look at, if you go 20 years back when the car manufacturers used to sell their car, the lower end of the car used to sell more. And today we see, at least in big cities and metro, the top end of the car is selling more, right? Now, if I give you an example, like a base model of a car may be selling for 7 lakh rupees, and the top end may be selling for 15 lakh rupees, right? More than double. But you see more of 15 selling. That is basically a demographic change leading to a behavioral change. So, and that is creating a pool of profit, because that 7 to 15 migration means some of the work material used and things like some of them may be not manufactured today in India, like sunroofs and alloy wheels, which have to be manufactured, more sensors and all that. I think that was not there as a part of our economy when the same guy was selling same number of cars 20 years back. So that is what we call as a demographic change leading to a behavioral change, and leading to a discretionary spend increasing. So there are many things which are like, similarly, if you look at the in terms of air conditioners, we are seeing the increased trend. So I think that is what the demographic change is leading to some of the pools, generation of some pool of profits, or getting or influencing the existing pool of profits in a significant way. So you have to dissect and come down on the granular level to make to see whether that makes sense. Some of them may make sense, but you may not have things on the listed space. Some of them may make sense, but they have a very little influence on the existing businesses. So I think that work which we have to do as a asset manager, and then look forward what we can execute and what we can be the part of the portfolio.
Right. Let me go to Pankaj now. Pankaj, what are your thoughts on business cycle funds? It's really very interesting space to look at, because we typically look at thematic funds, large cap, small cap, but a business cycle fund, it's of course now catching up. A lot of, I think we have some 4 or 5 funds. What are your thoughts as far as investors are concerned, and how should they invest in business cycle funds?
See, it's a thematic fund, no doubt. But if you see, this fund has flexibility to invest across the sectors and across the market caps. So whether large cap, mid cap, small cap, you can find the well diversified fund in these categories. So as Mr. Alok was explaining, see, there are different cycles in the economy. So it may be expansion, recession, peak, slump, and in different business cycles, different sectors perform differently. So if a fund manager take an active call, so it's a kind of flexi cap fund where the sectors are managed actively. So I think that investors in their long-term core portfolio can consider this theme.
Right. It's worth considering. A business cycle fund is what we are looking at. We will slip into a short break, and we'll come back with more questions on the other side of the break. Stay tuned.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into
Welcome back. You are watching the Mutual Fund Show on NDTV Profit. We have 2 experts here on the show. Alok Singh of Bank of India Mutual Fund, and Pankaj Matpal, who is an independent advisor and who's very experienced with mutual funds. So let me go straight to the queries. The query that I'm getting is from Puneet. He is 35 years and he wants to create wealth over a period of time for his child's wedding, education and retirement. Now, he is asking us to advise what should be the portfolio, but his current investments are looking very interesting. I'll read out the investment. Axis Small Cap, he has put in 10,000 rupees as SIP per month. Quant Small Cap, another 10,000 per month, again SIP. Nippon Small Cap, another 10,000, again SIP. And Parag Parikh's Flexi Cap, 10,000 per month. 3 small cap funds and 1 Flexi Cap. Pankaj, what's your advice before I ask Alok also to weigh in?
See, there are 5 funds. All the funds are good. But the thing is that he has major allocation in small cap. There are 3 schemes in small cap. One is a Flexi Cap that has major allocation in large cap. And then one is mid cap fund. So though the horizon is 20 years, still my suggestion will be that he should reduce his exposure to small cap fund and increase in large cap at this moment especially. That is the advice. Otherwise, schemes are good.
Okay, schemes are good is what Pankaj is saying. Let me ask Alok for his thoughts. How would you help somebody who's around in the mid-30s, wants to build wealth to meet the family's requirements over a period of time? What should be the strategy, Alok?
See, one thing one need to consider that the core allocation, right? If you have an investable corpus, then there is something which we call the core corpus. So core corpus should be in a more well-diversified allocation in terms of, any well-diversified fund, whether you consider a Flexi Cap or you consider a multi-cap or any other, right? That should be that. And then you need to have some enhancers which could come in terms of whether a small cap fund or something which is a sectoral allocation, that could be more of an answers. But the core allocation should be more stable so that you can hold it for a longer period of time and let it compound with a lesser amount of volatility. I think that is what one should look at. And I think somewhere people should look at long-term averages and not get swayed by last 3-4 years, which we have seen. I think if you look at in that 15-20 years averages and extrapolate, I think that will give a sense that the incremental risk may not be equally rewarded at all point in time.
Absolutely. I think core allocation, as Alok says, is very important because small caps can give you tremendous returns. They can also bring down the returns over a period of 10 years or 15 years. We don't know. But then small caps can help increase your return. I think in Puneet's case, it's very important. Puneet, if you are watching the show, do pay heed to this advice that a core allocation which will give you stability and steady returns over a period of time is critical for your wealth planning strategy. The next question I have is interesting again. This is somebody, Mr. Krishna, who is 24 years old and fantastic. He started his SIP in 3 different mutual funds and plans to do the same for the next 25 years. He is looking at some right direction. His investments are the following: ICICI Prudential Bharat 22 Fund of Funds Direct Fund, roughly 12,000 rupees per month is what he is putting in. Then ICICI Pro Nifty Next 50 Index Direct Fund, again growth 5,000 rupees per month. UTI Nifty 500 Value 50 Index Fund, again this is a growth fund, 5,000 rupees. Interesting mix. I think in this case Krishna is allowing the market to decide and not the fund manager because most of them are index funds. Pankaj, your thoughts?
Yeah, that's true. See, in the previous question, what we saw that the investor had major allocation in small cap. But in this question, Mr. Krishna has major allocation in large cap. See, he's quite young. His horizon is 25 years. Though at this moment, the valuations of large caps are reasonable compared to mid cap, small cap. But still, I'll suggest that he should have some allocation in mid cap and small cap as well. If not directly small cap funds or mid cap funds, he can invest in Flexi Cap fund or multi cap funds. So through Flexi Cap and multi cap fund, he can have some exposure in mid cap and small cap as well.
Right. I think Alok, your answer to the previous question about core fund allocation, what do you think about index funds or ETFs based on, let's say, any good index? As a strategy, how will that help for somebody who is as young as Krishna?
So if you look at what I see on the screen are very, very generalized indexes, right? So what happens is when you are following a generalized indices, typically when the markets are trending, you see passives, are able to do better because there are no biases which the fund follow. Whereas a fund manager may have biases and that leads to an outperformance. But when you enter into a volatile phases, that time you will see a active fund typically do better than the index fund. So since, this person has started quite early, and I think I should congratulate him for that. I think there should be some active and combination of active and passive because it is not that always active will do better or it is always the passive will do better. It depends on the phase of the market and also, the implied volatility and all those kind of a thing. So I think he need to again balance with some amount of active involved in the allocation. I think that's my advice would be.
Okay, very interesting. I think we have time for one more question. This one is from BS Jagdish. He's 65 years. He wants to know where should I invest 15 lakhs in a mutual fund scheme and go for systematic withdrawal plan after 1 year. Now this is a challenge. After 1 year, if he has to withdraw, the time limit is very less for withdrawing, and he is expecting 6% monthly withdrawal. What should be the balance amount after 15 years and what should be the strategy here? Pankaj?
6% monthly withdrawal means more than 72% in a year. So I don't know any scheme I can recommend which will deliver 6% return every month. But coming to the second part, that SWP, see, because he wants to withdraw money regularly, and for that hybrid funds can be a better choice. But if you want to if you want to withdraw just after 1 year, in that case, equity savings funds or conservative hybrid funds, that can be a better choice. And if he can wait for 3 years, 4 years, and then he wants to withdraw, in that case, aggressive hybrid funds or dynamic asset allocation fund will be a better choice. So what he can do, he can divide this in two parts. Some money he can allocate in conservative hybrid funds and equity savings fund. From there, he can start SWP after 1 year, and the major portion of his portfolio can be in dynamic asset allocation fund and aggressive hybrid fund. From there, he can withdraw after 3 years. So that will be an advice, and his expectation should be something like 10% in a year. So every month he can withdraw initially, say 0.5%, 0.6%, not 6% every month.
I think so. This is very interesting because 6% every month means that in a year and a half, the money would have completely been withdrawn. I think, Alok, I'll come to you. I think Jagdish wants to generate cash flows from this for his monthly expenses, which is a typical problem many people would have after retirement. It's very important to maintain cash flows every month. What would be your advice to senior citizens who want to depend on their life savings and generate cash flows every month?
The issue which one faces in such strategies is that if the underlying asset class or the fund has not grown enough in, say, 1 year or 2 years time, then you start actually eating into your capital. And then, as you said, after 1 year, 2 years, you see that entire capital is gone. Because you were withdrawing in a particular manner. So I think one is that whichever, whether it is a hybrid fund or an equity fund you choose to do SWP, you should allow it to, grow for some time. And for that period, ideally you keep some money aside, maybe put it in a liquid fund or something like that, from where you withdraw till, maybe 20% you keep aside. I'm just giving a back of the just as a calculation, you put 20% aside, keep it in a liquid fund or something like that, and you put the balance into some place where it grows, and then after some period you start withdrawing. I think that will be far better strategy than putting it one place and just start withdrawing.
Yeah, very interesting. I think we are running out of time. Let me thank Alok and Pankaj for taking our viewers through all their queries. There will be lots of queries that we are getting. Unfortunately, due to time constraint, we are unable to, but keep sending your queries. We'll try to answer right from your plan when you come out of your college and start investing or building wealth for the family's future, or building wealth and cash flows after retirement. We at NDTV Profit will definitely try and help you answer and build wealth. Thank you so much for watching NDTV Profit.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals, but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY26.
Hello and welcome. You're watching NDTV Profit, and welcome to Large Trades, a show where we talk about all kinds of bulk and block deals, market moving stocks as well as sectors. I'm your host Mika Barve, and with me is Agam Vakil. But before we go on and move on to our discussions, Agam, how are markets faring like in today's day of trade?
Well, right. When it comes to road markets at the moment, it's been fairly quiet afternoon. The Nifty is in and around the 24,800 mark, and not too much to speak for when it comes to the Bank Nifty either. At the moment, what we're seeing is a little bit of mixed traction when it comes to the key benchmark indices. And of course, while the Nifty continues to hold on, we are also looking at the Bank Nifty holding on to 51,000. Also, in terms of the way things are faring as far as markets are concerned, I want to very quickly, give you an idea about what stocks are actually moving in trade today. And Well, in terms of contributors, you can keep an eye on, well, perhaps something like the HDFC Bank and ICICI Bank, which are actually providing a bulk of the gains. And on the other hand, TCS, M&M and Tata Motors, well, very weighing down on the indices. Moving on to your broader markets too, there's been a little bit of an outperformance. Well, you actually do have, the mid-cap index up around 0.6% and the small-cap index up as much as, 0.4%. Also, if you consider the big movers, big gainers, we have a handful of them which are actually advancing in trade. So, all in all, it's turning out to be a fairly steady, afternoon with substantial gains in a handful of counters out there. So, notwithstanding the your usual suspects, we also have good traction coming in on a whole lot of other companies which are actually doing well in today's day of trade. All in all, it's turning out to be a session where there is more advances than declines. And, in fact, if you actually see and take a look at the key gainers in today's day of trade, well, you have something like a Vascon Engineering, which is up around 12%. Then you have FACT, that is fertilizers and chemicals of Travancore. This also up as much as 7.6%, and Kalyan Jewelers up 7.5% too. So all in all, that's what we're keeping an eye on. And of course, with 3 gainers for 2 losers, that's always a positive in today's day of trade.
Yes, thank you, Agam, for giving us those details. Well, up first, something that has been one of the top stories of the day is the Zomato Paytm deal. And we have Mahima joining us as well to talk about this because she tracks the sector very closely. A little bit about why the stocks are in focus. Both Zomato and Paytm, when you talk about stock performances, did open the day with 2 to 3% of gains, but both the stocks have now taken some negative trajectory. And this is on the back of Zomato buying Paytm's entertaining and ticketing business. Now, Zomato has spent a total of 2,050 crores to buy Paytm's entertainment and ticketing business. And this is not new news to the markets because companies had earlier said that they were in talks with the deals. And Paytm has said that the deal generates significant profits for us and they can, focus on their core business. Zomato's cash balance before the deal stood at 12,000 crores. And what Zomato is saying that the Paytm Insider will help boost Zomato's new District app, which is going to be housed to all of Zomato's going out businesses. And they expect to the going out business to deliver 4 to 5% of adjusted EBITDA margins in the medium to long term. And in the press release, Zomato has also stated that they expect the gross order value from the new acquisition to reach around 10,000 crores in FY26 itself. But Mahima, could you tell us more about what the Paytm Insider and the ticketing business is? Give us more details on that front.
Right, Mika. So basically, it's a movie ticketing platform, and there are 2 parts to it. There is Obgen Tech Private Limited, and there is Wasteland Entertainment. For Obgen, the net asset value is roughly 130 crores, and for Wasteland Entertainment, the net asset value is roughly 48 crore. Now, after acquiring this, the overall revenue, the overall ticketing business revenue stood at roughly 268 crores, and the entertainment business includes everything, including movies, sports, event, etc. And in terms of the financial and operational highlights for Paytm, well, the market cap is roughly 36,000 crore. Margins were at roughly 1.5%, adjusted EBITDA, of course. And there were 10 million transacting customers, which will now go to Zomato. And in terms of why this is positive for Paytm, because the sale is made at heavy valuations, first thing. Cash proceeds will strengthen the balance sheet for Paytm, and this will enable Paytm to focus on its core business, Agam.
Right, Mihika, what else are we tracking with respect to, Zomato in this case? What are the key trackers that you have on your radar right now?
Yes, well, at first I'll start about the key positives with Paytm because that's also an interesting aspect before we talk about what brokerages are saying. One of the key positives for Paytm is the sales the sale is made at a healthy valuation from Paytm's point of view. The cash proceeds will help strengthen the balance sheet of the company and it will enable Paytm to focus more on their core business, which is in financial services. But in terms of what it means for Zomato, Mahima, I believe you have a slew of brokerage notes, and these are very positive in terms of the deal.
Absolutely. So the brokerages target ranges from 270 to 335. Now a lot of these brokerages have not considered this ticketing business acquisition till now in terms of their valuations. However, still they are quite bullish. They have a bullish view in terms of the ticketing business. Only Jefferies has considered the ticketing business in their valuation and have given a target price of roughly 335. Now what Jefferies is saying is that the valuation looks compelling in context to growth and margins. Low capital intensity promises high return in a steady state, and it incorporates valuation, and it is valuing going out business at 2.5 times the gross merchandise value, which is in line with its Blinkit business at present. The Elara note is also a very comprehensive note, and they are also pretty bullish on the ticketing business and have given a target price of roughly 320. Now in terms of what they're saying that current values going out business is roughly 45 billion. Paytm is 1/4 the size of BookMyShow, but what they're saying is that there is scope for growth for both BookMyShow as well as Paytm if Zomato is successful in scaling up the Paytm ticketing business. And BookMyShow currently generates an EBITDA margin of 13% versus Paytm's ticketing business margin stands at roughly 10%. And what they're saying is that Zomato has a big advantage when it comes to the large customer base that it already has on its app platform. And the potential acquisition of Paytm Live will not mar its liquidity because it's already sitting on a cash balance of roughly 12,000 odd crores. So these are the two bullish views of Elara and Jefferies, but I believe MK Nomura also has bullish views on Zomato, Mika.
I'll start off with, MK first. They've retained a buy rating at a target price of 270 rupees. Now, what they've said that the acquisition gives size and scale to Zomato's going out business. That act as a additional growth engine for the company as a whole, and obviously it'll help in terms of the company's aim to grow their district app as a one-stop destination. And they're confident on this deal because of the strong execution track that management of Zomato has shown, and they're going to only consider the acquisitions estimates after the deal actually goes through. When you talk about Nomura, they also have a bullish view, a buy rating, unchanged target price of 280 rupees. They still see that the key drivers for the company's growth is going to be the continued growth momentum in quick commerce. They expect 100% CAGR in the gross order value over from FY24 to FY26. And lastly, when we talk about Bernstein, they maintain and outperform a target price of 275 rupees, which is a 6% upside to the previous close. Now they've talked about the valuations of the enterprise value to the GMV of 1 times. The acquisition will help Zomato expand their addressable market is what the brokerage is saying, and it also help them expand the market, especially in the event ticketing business. And they expect the ticketing business growth to be strong. They have a very positive outlook on that front. They expect the ticketing business to grow 29% year on year to over $240 million, which will add to the GMV in FY24, Agam.
Well, let's move on and talk about a handful of other factors here. Of course, I'm not sure if we've completely addressed Bernstein either. But Mahima, in terms of if we've not covered Bernstein, that as well as some key details on the Zomato Paytm deal as well.
Right. So Bernstein is also bullish. However, the target price of Bernstein is lowest amongst all the brokerages so far. It has a target price of roughly 275. And what they're saying is that, the ticketing business grew around 29% YOY, and they're expecting a similar kind of growth going forward as well. But in terms of key details, now we've talked about the positives when it comes to this deal, but there are some key negatives as well when it comes to this deal. And in terms of the valuations, it's good for Paytm. However, when it comes to Zomato, the valuations look a tad bit higher. And although the valuations done by the management is on gross order value, which is just 1 times the gross order value that they're acquiring. However, if we see the valuation in terms of revenue, it is 7 times. And in terms of adjusted EBITDA, it's roughly 70 times. So it's a bit expensive purchase for Zomato. However, the cost of acquisition of 2,000, though it remains high, but again, like I mentioned previously, it won't hurt the cash balance overall because they are sitting on a huge cash balance. But however, it will be something important that will be on the watch out for will be that how many unique customers and how will transition from Zomato to the ticketing business platform, that is the district app. And in terms of the GOV, Zomato right now is trading at 4 times. So that also looks expensive. And you know, it's also important to see that whether there will be a smooth integration of the district app overall, and they might have to initially burn some cash to, you know, build up their ticketing business. So these are some of the key risks that will be to watch out for.
Yes, well, that was the entire, you know, conversation on what works for Zomato and Paytm in respect to the deal, what, you know, doesn't work for, you know, the entire deal in focus. Not much stock movement, like we said. The stocks are slipping into the red, have slipped into the red right now after a pretty strong start in the morning. But on that note, it's time to slip into a short break, but do stay tuned. We've lots more lined up on the other side.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of those, that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals, but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, you know. E-commerce is one of the prominent sectors which has come up very aggressively in terms of...
Welcome back to Last Trades. We have TCI, which is buzzing in trade. It is advancing by around 9%, well off day's highs, but still making good gains on the back of volumes. We have Mika. What's going on with TCI here?
Yeah, so it's off this day's volumes, but the stock did hit an intraday high of over 18%. The volumes were over 6.5 times the 30-day average, and this is on back of the company's first ever buyback proposal. Just a little bit for viewers, what's a buyback proposal? It's an corporate action where companies repurchase their own shares from the existing shareholders, and these are usually done at a premium to market price and usually carried out by cash surplus or new debt issues. Now, what the company is going to do, Transport Corporation of India's board is to meet on August 24th to consider the company's first ever buyback proposal. It's key to be noted that this company has never issued bonus shares and it has also never declared a stock split. However, they have been consistently paying dividends. The record date of the share buyback is yet to be declared. When you talk about some of the key details that you should look out for in terms of Transport Corporation of India, they have a market capitalization of around 8,971 crores. The outstanding number of shares, which is promoter as well as public shareholding, comes around to 7.7 crores. As of FY24, the cash balance was around 83.1 crores, means that the amount of cash that they have in the books, which could also be used to, for the buyback proposal, stands about roughly 1% of the market cap value. But it is to be noted, this has not taken into consideration how much the market cap has grown in today's day of trade itself. And lastly, when you talk about why a company does do a buyback, usually it's to boost share prices and improve the financial ratios of the company. It's also an aim to return some value back to the shareholders by distributing excess cash, and it's also seen as a signal of confidence, Agam.
Right. Well, let's move on and talk about Aarti Industries then. This one is the other one which is in focus. If we can very quickly pull up the Aarti Industries chart. Pardon me, this is Aarti Drugs. Beg your pardon. Well, there were always scope for confusion there, but yes, I am in fact talking about Aarti Drugs in this case. And this one is also advancing by nearly 7% on an intraday basis at around 570 odd rupees per share. We have Varsha, who's now joining us to tell us about what's behind this one. I believe it's another buyback here, Varsha.
Yes, Agam. This is the other buyback we have today. So, Aarti Drugs board will meet on August 26 to consider a buyback. Now, they've carried out share buyback 5 times since 2016. Companies have been in rush to announce buyback post the tax changes made by Finance Minister. Now, let's see about where the details of the buyback will be shared on August 26. Let's see what does this company do. So, they are engaged in the manufacturing of APIs or pharma intermediates. So, basically, they manufacture products which are used in making of medicine. If you see their Q1 FY25 highlights, there was a revenue decline attributed to geopolitical uncertainty and certain macroeconomic volatilities. Their API business, however, declined. There was a decline in export volumes of 8% year on year, which also impacted their EBITDA margins. And they are expecting a recovery in demand by Q2 FY25, and they are expecting a growth in API segment from H2 FY25, driven by dermatology products and specialty chemicals. Their project, that is Gujarat Sakhya project for specialty chemicals, is on track to be commissioned by Q2 FY25. They are planning a total capex of around 200 crores for backward integration and for normal capacity expansion. And also they're going to launch new launches which will be funded through internal accrual and term loans. They're expecting an improvement of EBITDA at around 13 to 14% in H2 FY25 with EBITDA margin. The long-term view of EBITDA margin stands at 14 to 15%. Also, they are aiming at revenue of around more than 4,000 crores by FY27, driven by volume growth and new capacity coming online.
Yeah. Right, Varsha, thank you so much for joining us and getting us through that. And of course, the final one on our radar is Shyam Metallics. We have Rucha who's joining us here. Rucha, we have a broken note, I believe, which has led to a sharp surge in volumes here.
Yes, Agam, you're right. So, Shyam Metallics, UBS has initiated coverage on this stock with a buy rating and target price of 1200, implying an upside of whooping 58%. Now, let me talk about the company first. So, company is a metal producing company which is headquartered in West Bengal, and it got listed in June 2021. While UBS believes that the company is moving up the value chain, which can aid the margins and lead to better return ratios, it is also expecting the EBITDA and PBT, that is the profit before tax CAGR of around 40% and 50% respectively over the next 3 years by FY27. Now, it also values the company at 8 times its EV by EBITDA in terms of the average of the next 3 years. Now, there was a business update which came out just a while back. Now, this for the month of July and on a year-on-year basis. Well, the stainless steel sales volume rose by 219%, while the carbon steel sales volume also rose by 4%. So, this is the latest business update. But moving on to the Q1 earnings as well, based on a consolidated and a year-on-year basis, revenue was up around 8%, while margin were largely flat at around 13.5% versus 12.5% the same time the last year. Net profit surged around 40% to reach at 280 crore versus around 200 crore same time last year. Now the net sales during the quarter remained flat. Now this was because though there was an increase in the steel realizations, this was largely offset by lower volume. Now talking about capex, that is the outlook for FY27. The company has a pending capex, that is capital expenditure, of around 52 billion, and the company is expecting to incur that by FY27. Now this is based on the company's target of having capital expenditure over the next 3 years. Now moving on to analyst recommendation, we have 6 analysts covering the stock, and 1 has a sell rating while the other 5 have a buy rating on the stock. Well, the return potential is around 4%, around 3.9%. But let me talk to you, Agam, about the share price movement. Now, over the last 1 year, the company has given whooping 74% return. The company has also given just 20% return. I mean, that is also huge in just about a month. So 58% upside all in all is what UBS has on Shyam Metalics.
Yes, thank you, Rucha, for giving us those details. We now shift focus to the primary markets. Now, Premier Engine's IPO is to open on August 27th at an issue price set at 427 to 450 rupees. My colleague Sajid Mangat caught up with the management of Premier Engines, talking to us about the road ahead. Listen in as we wrap on this edition of Large Trades.
So we as a company, we are a 29-year-old company. We are into manufacturing of solar cells and modules. Today we are a 2 gigawatt operational capacity of solar cells and around 4 gigawatt of module manufacturing. The 1291 crores of the raise which we are doing, which is the primary in the IPO, around 1000 crores out of this will be going into our expansion plans. We plan to set up a 4 gigawatt solar cell and module manufacturing facility of the latest technology, that is the TOPCon technology. This facility will be coming up in Hyderabad, about 45 minutes from Hyderabad airport. And this is going to be the state-of-art cell and module manufacturing, an integrated facility as what we have today. And on the OFS, as we discussed, the OFS is mostly being done, around 80% of the OFS is being done by a private equity player, which invested in us, called GEF Capital. So they had come in 2021, and they will be partially doing an exit in this OFS.
Give me a sense of the kind of growth opportunity that you see in this segment, because we have of late seen a huge pickup in solar generation which is happening, and your company is directly related to the construction and of these solar farms which are there. Give us a sense of the kind of opportunity that you see, given the fact that you still have challenges with respect to imported solar cells and modules coming in into the country.
So as I told you, we've been in this business for 29 years. Post-COVID, we have seen a great growth story building up in the solar manufacturing sector in India. Not only in India, across the world, post-COVID, everybody started thinking about, a China plus one strategy. India started the Atmanirbhar and Make in India. US has got its Inflation Reduction Act, where they're talking about Make in America. So the manufacturing story is now here to stay. It's growing at a fantastic speed, looking at the robust demand. We don't see any challenge from China. The import of cells from China are not a big issue today, because Indian solar story is a little different, where Indian government has two kinds of markets. One is where there is a very robust pipeline which the government of India has set up for local manufacturers, and this market is totally protected for local manufacturers to grow the local manufacturing story. And then there is also another market, which is the developer market, where large power plants are being set up, where you can get solar cells from China, and cheaper the cells from China is a big advantage to the developers and to us as manufacturers to make modules for them at most effective cost. And how this helps is that while we are deploying as much solar as we can in India, because it's today the cheapest source of energy, we are also parallelly growing our manufacturing story. and it will not be far that we will be totally Atmanirbhar. Today we have got solar module and cell manufacturers in India like us. We do intend to get into wafer manufacturing and ingot manufacturing. In the PLI story which the government of India came up with, there is also polysilicon which is coming up. So I think this is something which is going to really develop very well, keeping in mind the robust demand.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
Welcome, you're watching India Market Close, and it's been a range-bound sort of day. More stock-specific news that has really moved the markets, not too much action happening on the top line. The Bank Nifty has been in that sense relatively an outlier, a better performance from the Bank Nifty than anywhere else. Let's just pull up the intraday chart for the Nifty and the Bank Nifty one after the other, just to give you a sense of how the day has panned out. Definitely the Nifty off the day's lows, but literally in that tiny range, the Bank Nifty doing much better. Let's pull up the heat map for you and just give you a sense of what has worked. More action on the broader markets today, honestly, but Tata Consumer, the big winner of the day, Grasim, has been buzzing right since the morning and continues to be, as is Bharti after those subscription numbers, has looked good as well. The auto pack is not having a very good day. M&M, Tata Motors, all of them with a bit of a lag there. Wipro is the other one, Wipro, TCS. So auto IT is, I would say, on the negative side, but except for a Hero Motor there. Let's see what a TVS is doing. TVS has a new bike launch. TVS okay, and nothing too exciting happening. So a range bound, a very safe kind of a day, following, I would say, tepid global cues as well. Let's quickly just pull up the advanced decline ratio and the sectoral indices before I get Harsh in for specific stocks that have shown action today. In terms of the advanced decline ratio, you still have advances outweighing declines, and you still see that gap sort of narrowing as we come towards the close of trade. And let's pull up sectoral indices as well and see what's working today. And, nothing really. I mean, your public sector companies are still down in the red. Energy stocks also down in the red. It's all about the banks, like I said. Whatever you're seeing on the Nifty as well, the green on the Nifty is largely thanks to the banks. Some counters in the consumer durable space working all right. We'll pull up Europe just for a sec before we get to the broader markets. I just want to see how Europe is doing and how this entire global cycle is doing today, and Europe is opened fine. So that's one sort of positive move, Harsh. It's going to be a big sort of overnight look at global events as well. Jobless data will be out day before Jackson Hole. But yeah, here the story is all stock specific, isn't it?
Absolutely, and as we get closer to maybe mid-September, I think the story will start to shift towards macros as well, likely. As of now, of course, most of the story is bottom up. Let's pick up the Nifty mid cap as well as small cap indices as well. 0.5% higher on the Nifty mid cap. Made the day's high, but we're off it now. And the small cap, sharply off it. We're probably at the day's low where the small cap is concerned. So that's one place that you want to look out for, because the Nifty small cap showed very good resilience through yesterday as well as today. So despite a tepid day yesterday where the Nifty 50 counters were concerned, we saw very good strength in the Nifty small cap, was up 1.1%. Today, it's given up all of those gains and languishing at probably the bottom of the last 2 days, in fact. So that's where we're at. Let's also quickly try and zoom in on some counters which are in focus on the back of largely news. Let's pull up, of course, the two biggest news makers for the day, Paytm and Zomato. Both of them now are trading in the red. Both of them were in the green at the start of trade today. And more bullishness on Paytm rather than Zomato, but that doesn't seem to be the case. Some bit of profit booking seems to have started to come through, and that's likely being seen. The other piece is, of course, TCI. A smaller company, but nonetheless, share buyback. The stock is up and away in trade, 10.5% higher. Office space, 2 new office spaces taken up by Office Space in Bangalore, and that one up 10% on the back of that. IRDA on the back of a fundraise, again, off the day's highs, but still holding up very healthily, 7.5% higher. BEML partnered with the Indian Navy. News came in last evening. Of course, even before market close yesterday, there were some talks around BEML's partnerships with the Defense Ministry, and of course, that one is up around 1.3% in trade on the back of that. Let's also look at HUDCO. Now, HUDCO's off the day's highs, well off the day's highs, but nonetheless an MOU with for loan assistance is what's keeping that one in focus. RVNL2, an MOU with for the rail infra projects in the ASEAN markets is keeping that one in focus. Let's pull up an Aarti Drugs, and a clutch of these fertilizer come pharma come chemical companies are in focus. So Aarti one of them, but Aarti also specifically on the back of board meeting for buyback. 26th August is the date on which they're going to consider buyback. Stock is up and away. Nucleus on the other hand, again on the back of buyback, but down 6%. 1,615 is the price for the buyback tender offer. and that one is lower. 1.7% is the buyback ratio which the company has decided on. Among other buzzers, you have the likes of a Raymond up 9% in trade. Not sure where it is now, 7% higher nonetheless. And you have Cyan DLM. Blocks yesterday being absorbed 4.5% higher, that one holding up very well. I spoke about fertilizer, chemicals and as well as pharma stocks, a whole host of them. Let's quickly pull those up. Fact, Bhagiratha Chemical, just look at the run in some of these. NFL up nearly 7%. You also have the likes of an RCF doing very well in trade. Natco Pharma, Indocount, Marksons. Marksons, of course, one more quick take with regard to where Marksons is concerned. Yesterday, an arm of Marksons got marketing authorization from a UK regulatory body for 3 products, and probably that one's also holding up very well. But this was during market hours. So nonetheless, today up 4% as well. Some brokerage calls also keeping some stocks in the buzz. Shyam Metallics on the UBS note, Interglobe Aviation on the HSBC note, Emphasis on the Nuvama note, and we have Vedanta on the CLSE note. All of them somewhere were buzzing in trade, some cool off seen in some of them.
Definitely. The Shyam Metallics one was specifically interesting, and you did see it pull back quite sharply. I would just add a Kalyan Jewellers. Promoters are buying some stake back. That stock's about 7% up. Indian Hotels is also seeing a pretty decent buzz today. And yeah, so is Indus Towers. So these are some of the movers and shakers. But let's get a broader look at what's moving in the markets and what your strategy should be as you wind down to the end of this week. Rajesh Palvia of Axis Securities with us, and we're also joined by Kush Bora, founder of kushbora.com. Welcome to both of you. Kush, let's start with your take on the charts, the Nifty and the Bank Nifty. The Bank Nifty, at least, looking in positive territory and positive directionally.
Hi, Tamanna. Hi, Rajesh. Well, things are starting to look a little more optimistic. We were cautiously optimistic. We might consider dropping cautiously, at least, the way Nifty, in fact, Bank Nifty is moved today. There was, the 24,700 resistance, which the Nifty took out yesterday. Now you're looking at a 24,950 zone, which might act as a hurdle. The last time around we hit 25,000, I think it was just a touch and go. I think this time around we might break it more meaningfully. So I'm a little more constructive on the Nifty. Here, 24,500, 24,600, the support zones, these need to remain intact. But as I said, turning a little more optimistic. And I think the confidence is coming from a couple of points. IT was contributing, but it's good to see that Bank Nifty is starting to turn a corner after about a good 2 weeks of consolidation. The Bank Nifty is above the 20-day moving average. Would have taken some more heart if the closing was above 51,000. But I think, in the coming days, we might get that also. Today being the expiry, there might be some Nifty expiry at least, some pressure playing out there. But I think Bank Nifty moving above 51,300 will turn, a corner. And, this index and this pace might actually, lead the charge and take the Nifty beyond 25,000 and much higher this time around.
Rajesh, your comments on the kind of range-bound trade we've seen, and what would be your top picks in this afternoon session?
Good afternoon, Tamanna. Good afternoon, everyone. So, looking at setup, we are still holding about bullish view. This is just because of a weekly expiry on option. Market is showing muted kind of action in terms of index. But we believe that, again, we may see a resumption of uptrend, and possible rally can extend in Nifty also. And then 24,850 to 24,950 would be the next target for the Nifty. So I think buy on dip should be your strategy. Even for today's setup, 24,800 to 24,750 is the range where, again, we may see buying interest may attract, and we may see pullback again. And towards the expiry, maybe we can again, move back to the 24,850 kind of level for Nifty spot. So buy on dips is a strategy for the Nifty. And Bank Nifty is almost just trading near to 51,000 level. Any move above 51,000 level, 51,100 level will attract more short covering action, and then really can extend. Most of the banking stocks are showing buying since last couple of days. And we believe that, there is a high possibility that, we may see a breakout maybe in last half an hour of trade, or maybe tomorrow we can see a breakout on the bank nifty also above 51,000 level, and then really can extend to 51,400. So again, here also we are holding bullish view for bank nifty also. 50,700 should be your stop loss to hold long position. Stock ideas. First is Titan. If we analyze the structure, stock managed to give breakout of falling trend line on daily chart. Long built up is there in the derivative data, and looking at the structure, we believe that Titan may extend its gain towards 37.30. So one can buy Titan with stop loss of 3560. The second stock that we like is from a hospital space, that is Apollo Hospital. If we analyze, most of the hospital stocks are showing good traction in today's session, and Apollo Hospital is now negotiating with its multiple supply zone on daily chart, and overall long-term structure is bullish. We believe that Apollo Hospital may attempt to give breakout of this supply zone, and possible rally can extend to 69.70. So one can buy Apollo Hospital also with stop loss of 6750. And the third stock is Bacter Foods. Again here breakout on a weekly chart. After a consolidation of almost 7-8 weeks, stock managed to give breakout on a weekly chart. We believe that Bacter Food may extend its gain towards 1600 kind of level. So one can initiate long position here with stop loss of 1505.
All right, Kush, let's get your picks.
Sure. After the highlights that Harsh made about the chemical stocks, and how could I not have one in my list? Darshan Chemicals makes the cut. Yeah. We've been bullish on this for some time now. Today also, if you see, there's been a clear breakout on this one. Mild profit booking towards the close, but we'll take it in our stride. Volumes also fairly decent. Clocking the average of the last 1 month, slightly above those. So from a near-term perspective, we could look at 1090 and 1140 as your targets. 1010 is the stop loss. The second stock that's actually made a very interesting comeback is actually Krasim. I think a round of profit booking was due, has come about, and now the stock actually crossed that convergence point of the 20-day and the 50-day moving average, which came close to the 2675 mark, very comfortably above it, again on the back of very strong volume, so that's encouraging. From a near-term perspective, you look at 2820 and 2880 as your target. 2700, this zone will now start acting as a support zone.
Right. Kush, you suggested somewhere that you expect the Nifty 50 to rally on the back of support from the Nifty Bank. Of course, we're seeing good support today. But what's the broader sense? How quickly, we're still well off the highs for the Nifty Bank. How quickly can the Nifty Bank start to scale?
Harsh, I'm so glad we brought this up. I think we had an identical conversation about 2 days ago.
Yes,
when you asked me
on India market close.
Absolutely. And you asked me when do I expect, and my answer was somewhere around next week. That answer is still the same. I think it's the expiry effect playing today on the Nifty that's perhaps holding it back. Rajesh also pointed that out. Tomorrow, perhaps the Friday effect might play. Who knows? But on the whole, what is more important rather than getting an exact time or a date on when the Nifty crosses 25,000? It's, I think, the conviction that at least I'm starting to get now that 25,000 will be taken out in a more convincing manner. Could be tomorrow, could be next week, or could be perhaps with a week pause. But I'm starting to get a little more constructive on the Nifty here. And as I said, we might not just hit 25,000, perhaps crash that gate this time around. So I think the direction and the trend turning a corner is the more important trigger here, Harsh.
Understood. So of course, we'll keep asking you those questions and updating viewers as well as this plays out. But Rajesh, coming to you, with regard to trend, we've seen a good move in trade today as well. It's up nearly 2.5%. We're at the day's high where trend is concerned, if you can pull up the intraday chart. But it's an interesting move on the back of the kind of returns it has given. It's given a 30% return over the last month. Plus, on top of that, it's gone up 2.5% today. Sustainable, not sustainable in your view?
So very strong trend is going on in trend. The way stock is moving across all time frame, whatever minor dips which we are getting in this stock is attracted by the buyers. So I think there would be furthermore upside we can see in the stock. The way a stock is moving on a daily, weekly time frame, I think The another target where we can see in short term is around 7,200 to 7,300. So I think those who have already bought the stock can hold the position. Retail stock is holding about 6,800. I think there is no hurry to book the profit, as trend is very strong in this counter. So I think trend may hold for next target of 7,300 to 7,400.
Okay, Trent is one of the big winners today. Grasim is once again a big winner. Bharti Airtel, I'm just looking at some of the nifty gainers. Grasim, of course, on that trajectory as well. Coach, just wanted a quick word from you on Grasim.
Sure. So Tamanna, we just, I just gave this out as a call. The rebound has been very encouraging. We were waiting for, this convergence of the 20-day and the 50-day moving average, which comes close to 2675. That level to be taken out convincingly. Yesterday we closed above that, but today there's a more convincing, up move that's come about. The volumes have also picked up above the, monthly averages. So I think from here on, the stock could very well move higher, close to the 2,900 mark. So our targets are 2820 as the first one and 2880 as the second one. And whoever's getting into this afresh should keep 2,700 or just below, levels as their stop loss.
Okay. Let's get to, I would say, the big story, and in a sense, the stocks of the day. Started out with a lot of promise, don't seem to be ending there. And interesting, after all of the commentary of the day, to see what's really going on with the Zomato Paytm deal. If you're just logging on to this story, Zomato has bought Paytm's going out business, which includes brands like Paytm, Insider, etc., for a little over 2,000 crore rupees. It was known that they were going to do that there were talks going on, but now the deal contours and details are available with us. All of this ties in with Paytm's launch of an app called District, though these individual entities will still continue to function, and then it all migrates to this District app in about 12 months. That's the long and short of it. But what is the street view on it? Why is there a thumbs up from some quarters and some concern from others? Mahima is breaking it down for us.
Right, Tamanna. So, as you rightly mentioned, some are viewing this deal as a positive and some are viewing this deal slightly as negative, because they're saying that the valuations look a little higher at which Zomato has bought the ticketing business. However, just to sum up as to what the positives and negatives of this deal are, well, in terms of positives, Zomato's cash balance before buying this ticketing business was roughly 12,000 odd crores, and after buying also they will have a cash balance of roughly 10,000 crores. So even if this doesn't work for them, the liquidity for the business will not be marred. And in terms of negatives, well, the deal is valued, the management has valued the deal at 1 times its GOV. However, if we value the deal in terms of revenue and adjusted EBITDA, it is at 7x the revenue and 70 times of its adjusted EBITDA of Paytm. So it is slightly expensive in that manner. In terms of positives again, well, like I mentioned, that the 250 crore payment may not mar its liquidity overall going forward. And in terms of negativity, customer additions, how many unique customers will Zomato be able to bring into the ticketing business, considering that Book My Show is already there in the business, and the transition from the current customer base that it has at present, how many of those customers will really go to the ticketing app will be something to watch out for. Next, in terms of positives, Zomato has a large customer base. However, like I mentioned, it will be very interesting to see how many of those customers will really download the District app and see. And we'll see the conversion in that sense. Now, in terms of negatives, Zomato pegs the deal at nearly 1 times its GOV. However, the Zomato's current valuation in terms of GOV is roughly 4 times. And lastly, in terms of positive, management expects that in the coming FY20, by the end of FY26, the GOV will be roughly 10,000 odd crores. And in terms of negative, lastly, it'll be something the smooth transition of the newly acquired District app will be something to watch out for in terms of ticketing business as well. So these are the few positives as well as negative on the Zomato Paytm deal.
I wanted to know if any of our 2 technical analysts are tracking these stocks. Coach, let me start with you. The kind of lofty target prices for Zomato today were quite exciting. It's not quite gone there, but are you seeing the potential?
Oh, for sure. It's just that for me, it's a buy on dip. There's a gap around that 235, 240 mark. Perhaps there is a technical hangover. There is a pressure, at the 265 to 70 mark, which is acting up right now. So very constructive on Zomato. Have been for a while. It's just that I would rather accumulate this close to the 240, 245 kind of zone, and then play for higher targets, perhaps even a 285 and a 320.
Rajesh, what about you?
Yeah, definitely. So Zomato is looking promising for medium term to long term perspective. The way stock has managed to give breakout on after a long consolidation, I think there would be continuity of uptrend and possible target towards 300 plus kind of level we can see in Zomato going forward. So I think buy on dip should be your strategy at this juncture. One should keep a stop loss of around 245 to buy and accumulate this stock. Even for Paytm, some profit taking is happening, but still in the near term perspective, some strength is still there and stock is very well holding about 20-day moving average. So I think in decline, Paytm comes around 545, 540 kind of zone. I think again, one can look for a buying opportunity in this stock also with stop loss of 525.
All right, we'll take a very short break, but more on Zomato Paytm and of course more on what's happening on the markets. Gurmeet Chadda joining us on the other side, and we'll talk to him about Zomato and much more. Stay tuned.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included.
Welcome back. You're watching India Market Close here on NDTV Profit. I wonder, some big movers in trade today. Let's pull up something like a TCI. An office space is also doing fairly well in trade. A Raymond is doing very, very well. Actually, that one is interesting because the other two at least have some news around them. Rajesh, let me come to you on Raymond. You know, stock up 7.5%. What's happening here?
So Harsh, after a brief consolidation of last 4-5 days, stock managed to give breakout of this consolidation range. In this up move, stock again, comfortably holding about 20-day, 50-day moving average. Overall, long-term structure is bullish. some profit taking was there in last couple of weeks, but again, the way stock has moved up in today's session, we believe that there is a potential again to regain again back to its all-time high trajectory. So I think yes, one should hold a long position in Raymond. Even in minor cool off, one can add fresh long also for upside target of 2200 to 2250 with stop loss of 1960.
All right. Gurmeet Chadda joining us now. He's Managing Partner and CIO of Complete Circle and, of course, regular on NDTV Profit. That's how I'm going to designate people now. Hi, Gurmeet. How are you doing? And great to speak to you today. All right, let's start with the Zomato Paytm story because that's been, one big talk point of the day. The morning started off with a lot of optimism on Zomato's move, although it was known that they were looking at this acquisition. Some concerns and questions on valuations. It's paired off with profit booking on both the counters, but we leave that aside for now. Is this really a win-win or more of a win for Vijay Shekhar Sharma?
No, I'm on the other side. Actually, the third one. I think it's another third vector of growth probably for Zomato. They have a good track record in turning it around. We saw some immediate reaction on Blinkit also. Whenever you do a acquisition and you're not cash rich and you're burning capital, the first few quarters can be challenging. But look at the way they've turned around Blinkit. Quick commerce now actually has higher valuation in the overall valuation of Zomato. So last year they did about 350 crores. Now this year they have done 1,000 crores almost in quick commerce, and in another 3 years, as per the management, it should cross the food delivery business, which means food delivery will probably grow at 25%. This will probably grow at 40-50%. Ticketing, for example, I think it will get into a league where they can challenge the Book My Show, almost monopoly there. Book My Show, if you see, more than 70% comes from ticketing, and the balance is basically live events. And if you see the number of clients, Book My Show has about 2.5 crores. Zomato is almost about 7.5 crores. And the way, so this gives them a play at out of home, right? So food delivery and quick commerce are more at home. So my sense is if they can, they have the analytics, they have the nice tech backend. I think there is scope of, scaling this up further and give them another, lever for growth for future.
What about concerns, Gurmeet, about how Book My Show has fared? Is there enough of an upside really in this business? Paytm Insider has been doing this for a long time and not really moved anywhere. Does all of that change just because Zomato has had a great record run with Blinkit?
No, it's more about focus. Paytm also had too many businesses to look at in terms of payment banks, in terms of wallet, in terms of, doing, and the main revenue actually came from short-term personal loans, which they started doing, which is the STPL, which we call it. The money started coming from lending. I think here there are a lot of synergies. And if you see even Book My Show, they've survived 3-4 crises, including the COVID one. COVID one, they had a very bad year, and they've had 2-3 instances. Right now, if you see the big line items they have is one is obviously the commission they pay to the movie production houses. Second is the artist fee. That's jumped to about 102, 104 crores. If you see the FY24 numbers, they sold 18 crore tickets last year, right? And Zomato almost has, can really take, get another growth lever here. So my sense is that it will, it will turn around with some time. And going by the track record, quick commerce is far more difficult. There, they already get a head start. All you got to do is get the analytics and synergies right.
Right, Gurmeet, Harsh also joining in. I want quick take, and this may not be the most relevant question for you to answer, but just your take. Most apps, including a Paytm, they're centralizing their app. It's going to be a one-stop everything app. For Zomato, the strategy is very different. You've got Zomato, you've got Blinkit, and now you're going to get a third app. And therefore, how does all of this add up? You'll need users on each of those apps. You'll have to monitor each of them. And would someone like you or me download 3 apps from a single, whether a single company or not, but would you download 3 apps? Really, that's the question.
In fact, I'm of the view that the app gets too crowded if you plug everything into it, right? So, for example, HDFC Bank and HDFC Securities are different apps.
Yes.
Same as the two for HDFC AMC. I mean, I'm not comparing; they're strictly not comparable. But I think you go to a certain app for a specific purpose, right? Although Zomato has an option in the app of Blinkit and Swiggy has an option of Swiggy Instamart within the app, but you prefer to use the right. So I don't think so. That's the case. I think that's more of use X, which can be done by creating a super app structure. I'm not a techie. I think they have the best tech teams to do that. My view is in the size of the opportunity, right? And in these businesses, you got to view things very differently. More and more, if you keep, as I said, this is more out of home, which is going to market kind of a acquisition. Rest of them, the food delivery, groceries, etc., are more in home. So my view, it really completes the circle for them and gives them another vector of growth. Time will tell where they can get the synergies right, turn it around. I just feel the analytics Zomato has and the way they execute it, looking by the loyalty program they did in Zomato, looking by how they've upgraded in quick commerce from groceries to now high value ticket items, including gold coins, including electronics. I think they've shown a turnaround in quick commerce, and mind you, they were taking on quick commerce on giants, right? And the last angle, Harsh, is that government somehow has a negative view on e-commerce, but there is deep discounting. In this business, there is no deep discounting. You're charging a convenience fee, and there is a value add feature you're selling. Right. So also, from that angle, from a regulation angle or a political angle also, I think this is a far more, bet which will fly better versus a deep discounting one.
Are you convinced with all the target prices we're seeing today thrown around, Gurmeet? I think the highest one I saw is 335. Do you think that's a bit of a reach, or do you think they're being conservative?
No. I think we don't know, honestly. I think, see, if you look at Amazon 10 years back, would you have imagined it would hit $2 trillion? No, we did not, right? So internet commerce, you don't know that the growth can be geometric. So I think the focus has to be on size of opportunity, and these businesses, you need to have a bucket approach, like what the VCs do. Have 4 or 5 businesses which have potential. Maybe some of them will not make the cut. Some of them will probably be multi-baggers for you. So we work it like that. We have a portfolio where we earmark some new age businesses like Zomato in that bucket, and hope that maybe 1 or 2 out of the 5, 6 we won't turn out well. So I'm not really. I think these short-term targets, honestly, I don't know how people calculate them. I didn't see anyone giving 330 when Zomato was $60, right? Everybody thought that maybe Blinkit is a bad capital allocation. So these are more momentum targets, and they really don't mean anything for long-term investors like us.
Remember the conversation about Blinkit again, the same conversation. Was it a bad investment? And look, but they also have Albinder Dhinsa to run Blinkit. Who's going to run district also will matter. Anyway, but since we have you here, Gurmeet, let's talk a bit about banks, and we're seeing that sort of turnaround in the bank nifty. Banks and financial institutions, BFSI, have not been at the receiving end of a lot of love, especially after the quarter gone by. And all of this conversation again and again about slow deposit growth, etc. Are you seeing light at the end of the tunnel, or more pain to come?
No, definitely there is light at the end of the tunnel. I think a lot of it is not to do with the performance of banks. It's got to do more with the FI selling, which we have seen, and banks have been the favorite counter for them. So I think once the rate cut cycle starts, they will be beneficiary because cost of funds will come down. And eventually, when economy does well, credit growth picks up, it actually creates deposits. The composition of deposit changes between retail and wholesale deposit, but any growth in credit, any growth in financialization of savings eventually should lead to higher deposits. So it's a cycle, and it's wrong to compare and make short-term, conclusions out of it. My sense is NBFCs might gain more with the rate cuts because they are dependent on wholesale borrowings more, bond markets more, versus banks who still have CASA. So, if you ask me, probably better than NBFCs will have a better play once the rate cut cycle starts. We have Mr. Powell's statement tomorrow. I think it could be a pretty important one. My personal view is we'll see a rate cut in US either September or maybe before September. And then you will probably see, maybe a shallow rate cut cycle till March playing out, maybe 2 to 3 rate cuts. And also liquidity has been negative. I've not seen 2 lakh crore liquidity negative for this long. It's been negative now for, I think, almost a quarter, maybe more than a quarter. And that also will get addressed at some point of time. So I think, you have to be a little counter-cyclical. and see what's ahead of you rather than seeing what's gone by.
Right, Gurmeet, point taken. I'll switch focus to metals. Shyam Metallics. Now, there's this initiating coverage note by UBS, which is why the stock is in focus today, but has been in focus last 3 months as well. We've seen it being on analyst radar since a while now. Trading at 20 times in a market which otherwise is seemingly expensive. Commodity play, but moving up the value chain, so better margins, better growth prospects, as well as just the kind of capex it's doing. Very, very impressive. 20,000 crore market cap company doing 10,000 crore of fresh capex coming through over the next 3 years. At all a play for you? Do you like it? Your thoughts?
No, we don't understand this metal business too well, to be very honest. Too many factors at play, China at play, anti-dumping duties at play. But the Shyam Metallic, as you rightly said, the one is backward integration, which is amongst the best in the category. Second is the mix of value-added products, right, which the management guided to, and that's why we have seen upgrades coming in. You got to be, in fact, on metals, you have to be the other way. You should actually, when P's are 20p can be a little misleading, right? As far as you have to follow reverse in this case, as far as valuations go. So we are broadly staying away from metals in particular as a cycle. There was a bit of a special situation in Vedanta some time back, but we have broadly stayed away. One company we own is Mukund, which for us is a more a turnaround play, with Bajaj now owning almost 74% there, and they acquired the stake from Shah family. It used to be jointly held initially, and they are infusing a lot of capital. They've sold a parcel of land in Thane to a data center facility. So there's fund infusion, there's debt reduction, and the stock was pretty cheap when we entered. It was 80-90 bucks. So that's more of a special situation and turnaround with change of management. In general, we've been avoiding non-ferrous metals and commodities, something we are tracking. I personally believe that with the kind of geopolitical situations we are in, the precious metals and some of the non-ferrous ones like copper, aluminium, the derived play could be slightly better. So we are actually advocating, some multi-asset kind of portfolios, which has some exposure to maybe gold, silver, and few other commodities, along with equity and bonds.
And Gurmeet, just to kind of get a debrief even with regard to this entire fertilizer, chemical, pharma kind of sector, talk to us about any names that you're liking within it. Are you still finding value in it? Because you're seeing some bit of run up in trade today specifically. I know you're not a short term, but just in general, any views that you have on that space, any value at all?
So we divide pharma essentially into three parts for us. Generics we have been broadly avoiding because there's too much pressure on US pricing. Again, you don't understand that well. Branded generics, we have Mankind Pharma, that's done very well since IPO. They have done a recent acquisition, which will boost the women gynae and healthcare portfolio for them. It's a very difficult, capability and asset to create, and takes time to create. For first few quarters, it may not be EPS accretive because they'll have to borrow. But over a 1 or 2 year period, this will prove to be a good asset. Some of the API pricing has now stabilized. We saw a lot of erosion in API pricing because of dumping by China and host of other factors. With oil coming down, even the solvent prices have stabilized a little bit. So API pricing is seeing a bit of attraction there. So we have few names there, which we track. Newland has done very well for us because the CDMO business is superb for them. It's done very well. It's been almost a 3-bagger for us. So what happens is that if you have, let's say, an API business, the margin you make on 1,000 crore top line in let's say API, you probably make that on a 300 crore on CDMO. So we are trying to focus on companies which are doing a lot of capex in CDMO, so that the result will come a little back-ended. So we have Newland and Laurus in the portfolio. Newland has taken off. Laurus is still being range-bound for a while. And we are probably now looking at diagnostics as an opportunistic play in case this Mpox thing picks up, but has to be more opportunistic rather than have a very long-term view on it. And lastly, US, if Trump comes in, and I'm putting an if there, they are looking at a biosecure law where they want to reduce dependency on critical raw materials for healthcare from in adversary nations like, let's say, China, Russia for them. That would open a big opportunity for a lot of Indian companies, but that probably will have to wait till US elections.
Right. Thank you. Thank you so much, Gurmeet. Always a pleasure chatting with you. So the view on Zomato is positive from Gurmeet Chadda. Banks, the light at the end of the tunnel sooner or later, and of course bullish on pharma as well. We'll take a very short break, but we're coming back with the F&O picture and the top BTST picks. Stay tuned.
First few times that we were spotted was on Deepika Padukone when she was promoting Chennai Express, and at that point she wore one of our outfits on the Kapil Sharma show. After that we kind of sold at least 1,000 of that outfit, and I was like, wow.
Today we are in conversation with Futures. Now this is a company that has presence across various verticals but a very significant presence in the staffing and workforce solution space.
When people are losing jobs, the companies still have to function, right? And that's when we came up with an idea of flexi workforce or contract workforce, E-commerce is one of the prominent sectors which has come up very aggressively in terms of adopting to staffing services. We are going to go public very soon in the next year or two.
If you look at Ola as a whole, nearly 16% is the free float which is available in the market today. And after the Anchor 1 and Anchor 2 comes out of the lock-in, it will be around 25% odd. Roughly around 6,800 crores of delivery happening. That means 79% of the total free float has changed hands. And now the free float is very thin. And so that's what is driving the price up. A lot of institutions which were on the sidelines saying that, oh, the grey market is in a negative, we'll go and buy it from the secondary market, are not able to buy.
They have attributed a better margin profile for the current quarter and expect this to go forward till FY27. After FY27, it says that clearly the margins will taper off back to the 13 to 15% level. But also, it's not a quarter phenomenon that we are seeing this kind of a target price for this company. Even if we go back a couple of quarters ago, when the stock was trading at about 1,794, that time also the company had a 600 rupees target price, which is again a 67% of a downside. So again, this is not something new.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning.
I would say Bangalore is a great place to go out and sort of buy if you're an investor.
People who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
Welcome back. Quick look at the F&O cues in an afternoon which has not seen too much of action, frankly. Market's still holding up, which is barely so. Nifty IT now in the red. Agam, what's happening on the F&O end of things?
Well, it has in fact been very quiet, and especially given that it was a weekly options expiry for the Nifty, it's been a fairly a straightforward, quiet day where there's been significant contraction in option premiums gradually, very quickly early on in the session, then of course gradually down the line. We have hovered around 24,800 through the course of the day, and not much has changed there, which also has led to very little change in open interest. As far as the Bank Nifty futures go, again, the picture is not very different. Sure, we have reclaimed 51,000, but that's about it. And again, as you can see, no change in open interest. Today was a weekly options expiry for the Nifty. 24,800 is where we are seeing expiry, and I'd reckon that everyone who must have sold those specific calls and puts will certainly be happy and will certainly have had a very good trading session indeed. And moving on to stocks again, a relatively mixed day. It's something of a trend, but more longs than shorts. In fact, longs for M&M Financial and Interglobe Aviation, these two stocks stand out even with respect to their underlyings advancing. And among stocks which are seeing unwinding, well, we do have about of short covering for something like an IDFC First and NMDC, a little bit of long unwinding for a sale. All in all, a fairly steady day for the benchmark indices and a mixed day for the broader markets, though even though the broader markets seem to have seen a little bit of an outperformance coming in.
All right, thank you for that, Agam. Devin Choksi joins us now, DR Choksi Investment Managers. Devin, very good afternoon to you, and of course, great as always to speak with you on the show. You know, we've had pretty much a week of sideways trade and not too much action happening. Where do you think the breakout is going to come from? And do you see a more stock-specific approach for, you know, the last trading day as well of the week?
Hi, good afternoon, Tamil. Well, I believe, I think the few things will have to be factored in. One important, the market is basically now having a stock rotation, which is happening now. Some of the expensive stocks are being looked at, and probably they are re-entering into some of the large cap companies where the fundamentals are showing the significantly large amount of take, be it in the area of banking and finance, be it in the area of metal and commodities, or for that matter, some pharma names, etc., even IT names. I think the amount of money is shifting into some of the large cap companies. And that's where I think we are seeing the influence on the index because of this move which is happening currently. In my viewpoint, I think that's the right strategy which is being played out at this point of time, because some of those expensive valuations who are probably not seen as healthy today with the kind of growth that those companies are producing, be it in the area of defense, be it in the area of railways, or for the better capital goods, or public sector companies, where the valuations turned expensive, but the growth is yet to catch up. So I believe that I think they are justifiably putting some profit out there and shifting into some of the better quality stocks at this point of time. So in my viewpoint, I think the market is possibly moving in the right direction. And one is getting an opportunity to buy some of the large cap companies which are having fundamental strength, but not so expensive as far as their valuations are concerned. This is an opportunity for some to invest in at this point of time.
Sure, Devin bhai, just from a name perspective, could you give us some names which you are finding interesting in the large cap space?
So in banking and financials, I think the names like Bajaj Finance, names like Axis Bank, names like HDFC Bank, they remain pretty comfortable from the perspective of buying them into the portfolio. All said and done, because of the fact that I think the business conditions remain absolutely strong and convincing for them. And at the same time, their balance sheet size permits them to probably take up the further expansion, which is not the case with some of the smaller ones in the public sector bank space. So we like that particular proposition. Similarly, in IT space also, we like some proposition, also because of the fact that I think many of these companies, particularly in the engineering and R&D space within the IT bracket in the mid-tier, they also look, I think, reasonably firm as far as I think their visibility of business is concerned. Also the fact that I think the niche areas in which they are operating, be it in the area of defense or aerospace or automobile, for that matter, manufacturing, in each of the verticals, I think some of these companies are operating. They are having a good visibility of next 3 to 5 years in form of order book and their executions. So we like some of the companies out there as well. And within the pharma space too, I think the companies which are basically into the API and the contract manufacturing space are relatively better off, along with, I think, the complex generic business providers like Ciplas and Pharma kind of companies. So I think selective approach at this point of time, but within this large cap space.
Devin, keen to get your view on autos, and let's talk a bit about TVS. TVS Motors having a good day on the street. They've, of course, they have a launch. They've rolled out their all-new Jupiter 1110, which replaces its decade-old outgoing version. So that perhaps causing a bit of buzz, and you have their ad video there on the screen. But just understanding if two-wheelers is what you're looking at after all of the buzz around Ola Electric, the ups and downs last week, is this space looking like it has more to give?
So about 6 to 8% kind of a growth definitely is seen across the industry players. And that's where probably I think one could possibly argue that those who are outperforming this growth for them, relatively the opportunity is better. For example, Bajaj has moved significantly in the space where the premiumization is available to them. And they are leaders in that particular space. So obviously, I think one gets a conviction about the roadmap ahead for this company, largely because of the fact that I think on a smaller number of vehicles comparatively, they are earning larger amount of profits. So that's where I think one gets confidence and comfort. The likes of Ola and all getting into the portfolio, in my viewpoint, I think it is clearly the strategy at this point of time of the funds to add a pure play EV player in the portfolio. And that's where I think the post IPO listing, the buying has taken place. But still, I believe that I think this company will have to show distinctly good road path for the purpose of, I think, generating the profits at a 60,000 crore odd market capitalization. Unless I think you're justified with 9-10,000 crore worth of profit, I guess I think that visibility has to first get built in. And that is why we believe that I think the likes of Bajaj would be relatively better in two-wheeler space compared to many others, because even though it may appreciate a little slow, 20-25% in a year, but still, I think you get, I think, a good comfort with the balance sheet that you are getting into with this kind of.
Point taken. Well, more comfortable on Bajaj there. But let's quickly put the spotlight on the aviation sector. That one is a buzz as well. Indigo, SpiceJet, both in focus. Stocks trading higher. Mahima and Mihika join us with what's next for the industry as well as the road ahead on some of these counters.
Thank you, Harsh. Both Interglobe Aviation, commonly known as Indigo, and SpiceJet have seen intraday gains of 4 to 6% in trade today. Interglobe Aviation is buzzing on the back of its launch of its business class in key metro cities. It's already installed 12 business class seats in select flights. The initial rollout will be few flights on the Delhi to Mumbai route, and they're also going to launch a loyalty program to strengthen the product. And on the back of these, we've got some brokerage notes. Mahimas, what are they saying?
Right. So first up, HSBC on Indigo, now they are bullish. They've maintained buy with a target price of 5165, which poses a 20% upside on the stock. And what they're saying is that this new launch ends the monopoly that Vistara and Air India have in terms of the business class segment. Now they're also saying that the initial rollout of few flights on Delhi to Mumbai route, and what they're saying is that Q3 is something that will be a seasonally strong quarter. However, Q2 will also still have some kind of weakness, and this strategic change to Indigo in strong competitive position will pose a strong position for Indigo in the long term. In terms of what Jefferies has to say when it comes to Indigo, well, they've upgraded the stock to buy and raised the target price to 5225, which is again a 20% upside from its yesterday's closing. And the operating performance is surprising in the last 12 to 8 months is what Jefferies is saying. And they're also saying that they've gained market share in 17-18 years of operation and slated to touch over 600 fleet by 2030. And they've raised FY25 to 27 EPS estimates by 6 to 7% mega.
And something that's been buzzing for SpiceJet, the stock is up 13% in the last month. Q1 results, this is second consecutive profitable quarter for the company. Yes, on a year-on-year basis, the net profit was down, but it was up 26% on a quarter-on-quarter basis. The company is also in process for 3,000 crore fundraise, which is expected to be completed by September end, and this will help expand their fleet, enhance their operations, as well as settle liabilities. One of the factors was also the aviation data. What did that say, Mahima?
Right. So the July aviation data came in day before yesterday, and the domestic passenger air traffic has been up 7% YOY, and traffic growth has been despite the adverse weather and cancellations. In terms of the market share, well, Indigo market share is at 62%, affirming its domination, and SpiceJet market share is at 3.1% mega.
Yes, and the last factor is the ATF prices. Now, the PNGRB, which is the Petroleum of Natural Gas Regulatory Board, has proposed to make the private pipelines a common carrier, which will open access for private firms. This will help in terms of new entrants in the market, which will ensure pricing, and this could lead to lower ATF prices, which is lastly a key positive for airline companies, as they account for around 34 to 36% of the total cost of these two airlines.
Meka, any kind of estimate on how much this will help lower ATF prices?
Yes, so in this, in terms of what is expected for September itself, since Jan of 2024, we've seen a downtick. January started at around 101 an average price per gallon. Now it's down to around 95, and MK also expects a 4% month-on-month cut in the ATF prices for September of 2024.
Okay, so ATF prices going down is good. Indigo is a different story because they have a new product, etc. They've been wondering if you have a take on the whole aviation space, and of course, Interglobe and SpiceJet, two very different stories fundamentally, though both are buzzing today.
So for Interglobe, I think there are a couple of advantages that I see here is, on one side, because of the ATF prices likely to remain down because of the lower crude oil prices, it is basically helpful to the company in form of generating the better margins eventually. The other side of activity is that I think they have started premiumization of seats, including in the domestic zones. I think that's where probably they are talking about 18 to 20% kind of a positive impact coming into the books for this company. Given the kind of long route flights that they have already launched, and at the same time, the premiumization in domestic market that they've adopted, I believe that I think this company will have relatively higher amount of profits to talk about, even if one wants to exclude the volatility attached with the ATF prices. Still, I believe that I think the margins and the profits would be on a better side. And at the same time, the valuation remains, I think, in 20s. So it's not so expensive as of now. So to a greater extent, I think this is making a case for the investors to buy into the stock. Also considering the fact that the promoters is wanting to exit the company, one of the promoters is wanting to exit the company, I think that stock would be available to the investor on bulk buying basis. So that's where probably I think you are seeing some more excitement continuing in this counter.
Okay. Kush, Rajesh, any views on Interglobe? I'll come to Kush first.
It's been range bound for a while, and the range is 4,500 on the upside, and on the downside you're looking at a 4,200 kind of a level. So once this 4,500 is taken out convincingly, is when I think you'll see a more protruded, more elongated upside coming in. So I will actually wait. If you've got an existing position very close to resistance, I don't think you need to really worry here. But for a fresh entry, I think you should wait for 4,500 to be taken out more convincingly.
Right. Rajesh, your quick views, if any, on some of the aviation counters?
I think Indigo is on focus only, and the way stock is now approaching to its multiple supply zone, I think 4,500, 4,520 is the key level on the high side. If at all that breakouts happen, so I think we may see a fresh all-time high trajectory, and then possible rally can extend to 4,650 or 4,700 also. So I think one can hold on the position even in minor decline. One can add the position with a stop loss of 4,400.
Right. Thank you so much, Deven, Rajesh, Kush. Great as always to speak with you. Just about less than 2 minutes to wind down the markets, and let's see what kind of a Thursday evening